Welcome.
Good morning.
Molly, how are you? Guess what we have today? The full day fall Tradier Summit. So we're going to start it off. We're going to be quick. I'm going to go fast because we're running a little behind. But we have a full day of information, education, activity, hopefully games. We're not sure about that one yet because I'm having a link problem. But stay with us. We have a really fun day. Some great AI tools all day. We have some great educators. You know, it's the whole ball of wax. So I'm going to get going. Couple ground rules. Make sure you use the comment section. We love to have comments and questions. In the past, we've gotten lots of those things, and we try to do our best to catch them. Each of the presenters will have some time, and at the end, we'll do some Q&A for everyone as well. Just be respectful, that's all. We don't care if you disagree with things, but just be respectful about it. All good. Mal, anything for you?
Yeah, remember, just make sure every time we say AI, you're going to take a drink of your mocktail.
Ooh, or it could be whatever's in here. Interesting. All right, let's get going. First guest today.
I'm excited. This is
this guy is a rock star, longtime friend of mine, longtime colleague in the industry. He's got a cool nickname. We call him the Flow Master. You'll find out in a second why, because he knows everything about volume and contracts and options and you name it. He's going to take us through some of the highlights of 2025 and what we're seeing in the market relative to option. Let me introduce to you Henry Schwartz from Cboe Global Markets. Henry, welcome to the show.
Good morning, Lex. Happy to be here, and good morning, everybody. They do call me the Flow Master. At some conferences, they've called me the guy with the data. So I'm happy to be here. My name is Henry Schwartz. I'm on the market intelligence team at Cboe Global Markets. If you do not know, Cboe was the original options exchange, started in 1973, and we currently operate 4 options exchanges. So I'm going to run through a few kind of high-level statistics because I am the guy with the data, and it's very exciting. I love working with Lex and the Tradier team. The market has evolved so much in the 30 plus years that I've been in it. So let me see if I can get you some slides to see. There we go. And I will go quick because they only gave me 15 minutes, even though I could probably talk for 2 hours. So just a quick, super high level view of options activity. Okay, so as I said, since 1973, we are in year 52. You can kind of see a few things on this slide. This is total annual option volume. At the highest level, the first 25 years were kind of a snoozer. I got into the business in the 90s. I believe Lex also was in the business in the 90s. Maybe he's younger, maybe 2000s. But what you see basically is barely 500 million contracts a year trading until we get to about the year 2000. Things automate. We get the first truly electronic exchange. That was the ISE. And then it's kind of off to the races, especially when you look at COVID and what happened kind of since 2019. So this year, the bar on the far right, we're on track for almost 15 billion contracts. The 22% growth basically versus the year before. Really, really incredible, especially considering if you just go back to 2019, we were basically kind of hovering around 4.5 billion contracts. So amazing kind of growth. The industry's evolved for a number of reasons. I want to show some other kind of crazy amounts of high-level data. I'm not going to talk about all these numbers. There's actually, you can subscribe to my State of the Industry, which is actually 50 slides. This is just a couple of them. But I really just want to point out, 2025, these are through September 30th, and actually October was even busier. So you kind of fudge these numbers even higher. Basically, we're looking at growth kind of across the board. So all these green numbers in 2025 means it's the highest of the entire kind of 5 years that we're showing. And 58 million contracts a day. It's probably actually closer to 59.5, even 60 million contracts a day. That's what we're running now. Go back to 2020, it was barely 30 million contracts a day. A couple things to point out. The first thing is what I circled. The Zerodte phenomenon has been the hottest story since I've really been in the business. There was kind of, during COVID, it was the retail phenomenon, and that persists. It hasn't really changed much, but the Zerodte is kind of supercharging that. So we're currently looking at about 13.5 million contracts, Zerodte contracts trading daily. That, but by far is kind of the standout statistic here. And basically $3.7 trillion a day in notional value, and actually about 55 to 60% of that trades in one product, which is SPX. And many of you probably have traded or certainly know about SPX, and Zerodte's there actually dominate the product currently. A quick look at kind of this transition towards shorter dated trading. So this is showing the volume in contracts that expire within a week versus everything else. And if you go back to 2018, it was kind of 1/3 versus 2/3. So 1/3 of the flow expired within a week, and the rest was longer dated. In 2022, the shorter dated, the 1 week and shorter, overtakes the rest of the market. And if you look at where we are today, basically 30 million contracts a day are in contracts that expire within a week. So this has been kind of a trend, but it really accelerated in 2022. That's the year that we actually added the daily expirations. There were already Monday, Wednesday, Friday in SPX and SPY and a few other ETFs and indexes, but we filled in Tuesday, Thursdays in April of 2022, and that kind of was an inflection point in terms of making some strategies possible that people just weren't really trading before, and I think pulling in a larger user base as well. The bottom charts just break it out by ETF, index, and single stock, and what you'll see is in the first two charts, that's really where that's the focus on kind of this short dated flow. In terms of single stock activity, now there are no daily expirations in single stocks, as you might know. They are being discussed, but currently you can't trade dailies in single stocks. So that it's still longer dated when you look at the single stock universe. But in the ETF and index, basically it's more than 2/3 of the flow now is in shorter dated contracts. So, this is, I mentioned the retail wave, which really kind of defined, the COVID period. That's persisted, and when we look specifically at the SPX Zerodte, we are able to basically use some approaches to separate out retail. Now, retail is a kind of a tricky definition because there's no truly retail customer, right? I'm a retail customer when I trade through my broker. I've been doing this for 35 years. So I'm not an institution, but I don't know if I'd consider myself retail. And I imagine if you're paying attention today, you guys probably fall into more of a pro-tail demographic in terms of, yes, you're coming through retail brokers, but you're much more sophisticated than kind of the true kind of the old-fashioned definition of retail. But so what we see today is actually in the Zerodte SPX, at least, about 60% of that flow is really coming from these traditionally retail brokers. A couple things that are pretty interesting in the space specifically. If you look at the Zerodte activity by moneyness, you kind of see what you'd expect, I guess. Most of the activity is kind of centered around at the money. Those are the options that have the most convexity to them. They're kind of always the most popular. But you see a funny thing, which is those two little spikes at the 101% and the 98.5%. Those actually are kind of the strikes that are a little further out of the money. They're used by the condor selling community basically to kind of cap their risk. So in SPX trading, especially retail trading, like over 90% of what we see is capped risk, meaning they're either long premium strategies where you can't lose any more than the money that you lay out, or they're premium selling, premium harvesting strategies that are capped, because the truth is that with SPX being nearly a $7,000 index, the margin to basically be naked one contract is significant. Couple other things that are pretty interesting in this Zerodte realm is look at the put call ratio in the Zerodte. It's basically 1. So very, very different than the rest of the put call in SPX, and what had been kind of traditionally the put call in SPX for years. It was more puts and calls. It's a hedging product. It's used by the largest asset managers to hedge these multi-billion-dollar portfolios. Zerodte is not like that. Zerodte is really 1-to-1, and like I said, there's a lot of condor selling, which is 2 calls and 2 puts. So that's going to be a put call of 1, and also basically the activities. It's just very different. It's being used kind of, we call it tactical hedging, but I would really call it tactical positioning. There's people are using the Zerodte options because, fine, the market's up a little bit today. If you think that basically, we got a chance to kind of bounce back, people are using the Zerodte options for that, basically because they're getting kind of the very specific time horizon for their view, and also because the premium, the dollar cost is lower since the options only have a day. In terms of outright trades, okay, so this is what we're looking at as the outright average daily volume by hour of the day. Basically, you see kind of opening buyers kind of dominate the picture, but there is a pretty consistent, almost kind of perfectly matched up opening buying and closing selling in the Zerodte. This is really just to show that it's a very, very dynamic, kind of continuously managed trading approach for most of what we see in there. And actually, I'll show you a snapshot of some of the automation tools as well. I mentioned kind of the premium harvesters. That's kind of these are the two types of flow: people that buy these options for kind of positioning or to express their view for the day, and people that systematically try to harvest premium. They try to sell some options and keep as much as possible of the premium they're selling. They usually do it in spreads, so that's why what you see here is vertical spreads sold in the morning. In that first half hour of the day, that's like a surge. That's a very consistent burst of activity that we see, and then it's kind of continuously it persists. But then you actually see that that these spreads are being kind of actively closed continuously through the day as well, and that's kind of the defining characteristic of this Zerodte flow. It's almost like QIS, quantitative investment strategies. Effectively, that's what these customers are doing. They're using. I just snapshotted a few. I think I missed some. I know I missed Peakbot on this. The retail tools. Okay, so the brokerage platforms, like Tradier and all the others, they don't really provide built-in automation. But there's this whole third-party world where people use these subscription services generally that connect to the brokerage platforms via API and let customers define exactly what they want to do. Meaning, I want to sell a vertical spread, vertical call and put spread, subject to these criteria. I want, this kind of, basically, think about it, the nice thing about Zerodte options is you can kind of get away from talking about volatility and skewness and everything else and just talk about kind of risk reward. So if you sell a 10-point put spread for $1, you got $1 reward and you got $9 of risk. That really is all there is to it, okay? It doesn't have to be any more complicated than that. And these automation tools let people basically parameterize that and then actively manage the trade. So basically, trades are generally, people use some sort of a stop to exit losing trades and a profit target to take profits. And then they typically have a schedule and say, okay, I want this thing to, maybe you do it once a day, maybe you do it once an hour. And what's really interesting, and I showed this at a conference and everybody's jaws dropped in the audience, these spikes that you see in the retail intraday volume, they are on the exact round 0 and 5 minutes, meaning at 10 a.m. there's a spike, and at 10:15 there's a spike, and at 10:30 and 10:30 there's a spike. And this shows you that these are basically customers saying, yeah, this is what I want to do. I want to do this trade every half hour, starting at 10 a.m. The fact that you kind of have this steady supply of activity, it has some real impact on how people trade and kind of how the industry reacts. And in general, you don't have to be a genius trader to look at that and go, well, I don't know if I want to be hitting the market when everybody else is hitting the market at 10 a.m. or 10:15. So that's what I have for you today. We've seen kind of the evolution we've seen over the years, and brokers like Tradier and phenomenal tools that are available now make things possible that when I started in the business, we would kill ourselves to come up with kind of decent volatilities or decent implied borrow rates for a hard to borrow stock. Generally, this is kind of off the shelf and very high quality nowadays. So thank you for the time. I used up my 15 minutes. I didn't go over too much. And you can always reach out to me on LinkedIn or through Lex if you have questions. I'm always happy to help.
Henry, thank you so much. I appreciate it as always. Sorry for the the quick speedy drill, but man, you're unbelievable with that stuff. I'll tell you.
Thanks. Lex.
Yeah, good job for that. We don't have a ton of time for questions. We got to keep rolling. Apologize.
Right.
But the one thing we do have time for one. I don't know if you hit it because I had to step away. Remember what you and I talked about with those little blips at 10:15, 10:30? Did you hit that?
I did, and basically, the platform, these algo tools are evolving as well, right? And that's kind of the amazing thing of the moment, right? Software can be put together and rolled out, and some of them are providing some randomization parameters as well. So because I think we can all agree, hitting the market when everybody else is hitting the market is a bad thing to do. You kind of, that because even though you might only be trading a 1 lot or a 2 lot. If it's happening when there's also 600 or 700 1 or 2 lots, the liquidity is going to kind of be impacted, and you're going to basically get a, probably a suboptimal execution if you want to be politically correct, or basically just you have a chance of getting a real crappy price.
Right. Okay. And what did you say? Just as a reminder, what part of daily volume is now considered retail?
Retail brokers make up about 52% of the total option volume. So meaning we're trading 60 million contracts a day in October. It really is 30 million contracts a day coming from the retail community, which is astounding because when I started in the business, it was maybe 5 or 10%. They were basically getting hurt because the bid offers were terrible, because commissions would eat into even when you'd have profitable trades, the commission and the crossing the bid ask could kill you. We basically are now in a world where liquidity and most of the friction is nearly gone. So commissions are very, very low if they exist at all, and bid offer in liquid products is can be down to pennies. It's amazing.
Yeah, that's awesome. Yeah, and I'm guessing the prescription is for continued growth. I mean, my goodness, it's the more education happens for options for the folks. It's certainly there's no barrier to entry anymore, and I think we won't get into PDT here, pattern day trading, but that's probably going to have a little bit of a change in and of itself, which kind of opens it up for a lot more people.
Absolutely. I mean, this is our 6th straight year of growth, and this is 22% growth this year. I don't see things really slowing down because, as you said, there's a bull market's always good for volume, right? People basically, there's a wealth effect to it.
Yep.
But with options, you do get a user base that starts to understand how to do a trade that performs well in a sideways market. That's why kind of even in 2022 when the market went down, we still actually had volume growth because people came in and said, okay, listen, market conditions don't seem to be very good, but I want to do this other kind of trade. And so that really is a one-way trend. Customers getting more comfortable using listed options, brokers, putting together new offerings, new tools. We have new products rolling out. We have a Mag 10 index coming soon, which basically is a new index option class for the universe that loves to trade NVIDIA and Palantir and all the super hot names. We're actually putting that into an index. That's a new offering, and creates kind of the opportunity for people to just do more. And then you get evolution in terms of the way complex orders are handled, and it's just it's kind of it's I'm not going to make a guess on what the growth will look like in 2026, but I will say I would bet a few dollars that it's going to be double digits.
That's well. We're gonna get to the 6-digit number on average. I know we've hit that number a couple of times this year, the 100,000 plus.
Well, on October 10th, we traded 110 million contracts. That was the second 100 million contract day, and I mean the capacity is there. The capacity, we could see 150 million contracts because you've got this market structure of currently 18 exchanges. Creates an enormous amount of kind of resilience and redundancy, and there's we've seen super busy openings where you get 10 or 15 million contracts in the first 10 minutes. That used to be a full day's volume back to 2017.
Crazy. I get it. All right, Henry. Well, thanks so much for the great information as always. I love always hearing how the updates go with the options world.
All right, thanks for having me, Lex.
All right, have a great rest of the day, for Henry. Thank you. All right, coming up next, we have a special I was going to say hour, but it's really a special 45 minutes of the Trader's Edge, which is one of our great shows in the Tradier Hub during the course of the week. And don't ever forget to sign up because it's free. Hub.tradier.com. Make sure you do that because you get all kinds of great information. But our two next guests are the two hosts, Jimmy, and I'm not going to say their last names. You watch. I'm going to say it in front of them when they come on, Jimmy and Bobby. So they're going to be interviewing a few people who are big financial people in the industry. And these two guys are as big as it gets. So let's bring Jimmy and Bobby out from Trader's Edge.
Try to say the name, you coward. Try to say it.
All right, watch this. Uriel.
Perfect. Nailed it.
Iachino.
You nailed
perfect.
it.
Wait, let's say Lex's last name.
Oh, yeah, go for that. Yeah.
Jimmy
knows. I've known Jimmy forever. He knows that.
I've
All right, listen, I don't want to cut into the time and because you guys are too important. I know you've got three guests. I'm going to let you take it from here. Molly and I are going to bow out. And you guys watch the time and make sure we're moving them along. And I know it's going to be a great segment. So we're looking forward to the Trader's Edge with Jimmy and Bobby. Have at it, guys.
Lex. Thank you, Molly.
Thanks, guys.
Yeah. Like you said, we are the hosts of the Trader's Edge. This is kind of a bang, like lightning round show today. So if we are ready, we're going to bring in our first guest, who is Michael Green, who's the chief strategist from Simplify Asset Management. Can we bring on Michael?
I don't think Michael made it in here.
Okay, that's fine. Bobby, I just was at the New Orleans Investment Conference yesterday. Jim Bianco gave a speech where he talked about the spike in repo that happened at the beginning of the week, signifying this kind of a massive funding problem, not massive, a small but budding funding problem. And it brought about the conversation about, is the economy potentially collapsing? Yesterday, it seemed like an easier sell in that, when everything was down 1% and the TMZ of financial networks, which is CNBC, is flashing markets in turmoil. They weren't, but I'm sure they wanted to so badly. Do you think that the setup right now is structurally, from an economic standpoint, are we heading lower? And then what about risk assets, particularly with how top heavy we are in the NASDAQ?
So I honestly think the most important thing going on is the case before SCOTUS, the Supreme Court case. I really think that's
a left field one. I didn't think you'd say that. Go.
Yeah. So look, I hate to disagree with Jim Bianco here, and he actually knows more about the reverse repo facility than me. But this is not the first time that it's gone down in terms of the amount of capital in it to these levels. I think the thing that's scary about it is the drop. It's been like a 290% drop in funding. Normally, the reverse repo facility is not that busy. This particular case, I don't think it's that big of a deal because I think the Fed reacted to that already by stopping quantitative tightening.
Yes,
I think they're very ready to start quantitative easing again if they see that there's liquidity needed. Here's one of the kickers for me. I don't think Scott Bessent is worried about it. We saw the refunding announcement. It's the same. Yeah. So far, they have not started all this massive issuance that everybody thought they were going to start because they don't seem to need money. Government shutdown put aside for that comment.
Okay, well, that's interesting. So let's say, and you know this, my base case for quite a long time has been the second there's any sort of turbulence in the water, the Fed will restart QE. Now, they stopped
You've said that for years,
which in my mind is kind of like 2/3 of the way there. When it happens, if they announce QE that they're actually going to start building their balance sheet and buying bonds, do you think, I believe ultimately it's good for risk assets, but initially, I think it's going to be good for gold, good for silver, good for hard assets, and bad for stocks because it's going to signal something's kind of scary in the economy. But eventually, it'll be good for stocks. Pick holes in that thesis.
Well, I don't have holes for that thesis. I think short term it is good for stocks. And the thing that this is why I think.
I said short term bad for stocks, then medium term good for stocks. Yeah.
No, I think short term good, medium term good.
They'll read it right away as liquidity.
Yeah, I mean, this goes to the stock market's going to view it as liquidity. And this goes to my reasoning for saying that the SCOTUS hearing, which we likely won't have a ruling for months on that, right? It is possible they do a quick hearing and a quick decision, but I doubt it in this particular case because Trump himself said that there's no real facility to return the tariff money. And he's using some of that tariff money to fund some of the things that he feels are important during the shutdown, like military pay, for example.
Mhm.
And when you look at the CBO's recent estimates of where debt to GDP is going, including the revenue from tariffs, and it's now the trajectory is downward, which this entire Trump second term, that was not the case. The trajectory was still upwards. So we could talk to Akash about that when he comes in if you want, but
No,
I
do.
don't see that as negative at all in the short term. I think long term, this kind of activity is negative.
Oh, no doubt about it. But now, so here, that's still okay. One of the things that was a kind of a theme of the conference I was at too is how stretched we are in the broad market specifically, and how top heavy we are with the Mag 7. You know, my belief is that sometime in the 18-month, those stocks are going to have about a 30% haircut, which, by the way, it sounds like a huge amount, but not. Stocks have gone parabolic. It's not that huge amount. This is the kind of thing that happens. If that happens, when that happens, if you are on board with me, does that necessarily have to drag the entire market down? Meaning, are you going to be okay with your Philip Morris stock if NVIDIA is greater?
I think this will be one of those cases where the defensives start to outperform. That may only be 1%. It could be minus 3%, but that is outperformance. This is what a lot of people don't realize is like when you have big sell-offs like that, I think obviously the cap-weighted NASDAQ will go down. I think the cap-weighted S&P will go down. And that's when those dividend payers and those defensive stocks hold up. And you take a stock, you mentioned Philip Morris, they have a strong dividend. If that particular stock goes down 2%, but you get a 3 to 4% dividend, you're not break even, but that's not how the math works, but you're doing a lot better. And to your point, that 30% is not going to be a lot. It's just going to be a right sizing of the PE for what these companies actually do. You and I have said this on our show multiple times. The difference between now and the 1999-2000 bubble, quote unquote, these companies make money. That's a quote
tons of it. Lots.
Yeah, they make
money.
tons of money.
Yeah. So that's why when you look at the 200 multiple in the .com era and say, oh, now we have a 35 in the NASDAQ, and you say, okay, well, we have a long way to go. Well, it's a bit of a different equation. It's not apples to apples at all. Why don't you want to bring in our next guest and we can talk about that a little deeper?
Yeah, Akash is ready. We can go into bonds. And
Akash is ready. Let's bring in Akash Doshi, who is of State Street. Instead, I don't know. Let's bring him on, and then because I want to rib him on something. Or you and I could just keep talking. By the way, if you guys who watch our show regularly know it's like 60-year-olds looking to try to figure out.
How about this? We got audience questions.
Sure, let's hear audience questions.
Okay, let's do these. First one is from Yojo Trader. So what is your option strategy? That to me is like, it's a difficult question to answer because your strategy depends on the situation and the asset you're looking at.
Sure.
Go ahead, Jimmy.
I'll tell you what my option strategy was a week, 2 weeks, 3 weeks ago before the volatility spike of yesterday is I had been loading on puts, and I've been very upfront about that too. There are things that are worrying me in the market. So I've been buying put spreads. When I saw skew that was interesting, I'd maybe sell one put to buy two others, but always with a negative, a bearish bias to it. And so right now, of the portfolios that I manage actively, even the investment portfolios that I trade, I have about 1.5% of the entire value of it in put protection right now. So yesterday I lost money, but I slept very well last night. Does that make sense, Bobby?
It does. We got a funny comment that I want Ruben to put up here from Doug Sarban. The theta on bringing in the guests is draining, but Akash is here now, so let's bring him in.
By the way, for those of you who don't trade options, that's a really funny option.
It's a really funny line. I love that.
Akash, I don't know what your title is at State Street, so I was just going to make you owner, CEO, and president of State Street. That's it, right?
That works for me.
Okay, good. Yes. You heard the things we were just talking about the overall, the economic condition, and then how that relates to equity markets in general, or risk assets, let's say. Where do you poke holes in the things that we're saying?
Well, what I would say is that the seasonals for equity still tend to be favorable in November, December. So if you look in context, if you're in a bull market in the S&P from January through October, November and December tend to be up months.
Okay.
And that's just a historical analog, and that tends to be seasonality in the S&P. That said, I think some of the risks highlighted make sense. I think this has been a rally that's been really concentrated, tech, AI driven. There's not a lot of breadth, and
Does that scare the hell out of you?
we have a lot of risks and uncertainties out there.
Yeah.
It doesn't scare me for the long term, but I do think that the vol compression that we saw during the summer across asset markets is unlikely to stay in play in through 2025 and really the end of this year and into 2026.
So let's say, okay, my belief is this, and here's where it comes from. And then Bobby, I want you to take the next question. The open AI thing, anytime they even like tip their cap at another company, that company rallied 10%. To me, that smacked of mania, fervor, way over enthusiasm. Did that scare you at all too? And do you think that my opinion is that we're going to see a 30% haircut in the Mag 7 sometime within the next 18 months, which I know is not very helpful to people. Do you believe that's a reasonable take?
If I had the crystal ball, I might not be on this chat and I would just be trading my own account. What I would say is that the probably distribution of those risks are wider today than I would think a few months ago even.
Okay.
So we're having a lot of policy shifts. We are still in a cycle where there's a lot of uncertainty, and that doesn't always get reflected in market volatility, but it's certainly reflected in sentiment and other survey data where people don't know the path of a lot of things. The government shutdown is just one example of many. So what I would say is that I would want to at least have some hedges for that. We haven't had a drawdown event or volatility event since March, April of this year. So even if you're halfway right, let's say it's a correction and not a bear market, I'd want to have some portfolio protection. That's why I still think gold and other alternatives are a very attractive hedge, left tail hedge in this environment.
So I want to make sure questions get answered. I have some questions for you, Akash, but I want to make sure that we get 2 questions. So the first one we have here is from Chase Hansen. Do you think we hit 7,000 by year end? Again, asking about your crystal ball there.
Is this for the S&P or is this for gold?
That's the S&P.
Okay, let's just hope so.
I guess if it's for the NASDAQ, that'd be a funny
yes. I think
question.
that's not an unreasonable target, especially if the government reopens by Thanksgiving.
I will tell you that I have a target right now. It's just pulling that up. That my next target, and it really depends to me on what happens over the next couple of weeks from the perspective of government reopening, back data being produced and spit out, because that's going to be like a flood of data. They're going to need to play catch up on that. But my next target for the S&P, and it's a solid target, is 7,007. It's like I'm being cute adding that 7 in, right? But no, that's actually a measured move target that I look at from the GAN retracements that I do.
And can
Jimmy,
I pat Bobby on the back here for a second?
What do you think? Yeah.
Hold on, let me just jump in, because if anyone subscribes to unfilteredinvestor.com, Bobby and Mike Arnold come up with these levels, and it is math. It is not just being cute. Anyway, you asked the question, Bob.
Yeah. So next question we have from OptiView. What do you see as a future of trading applications for retail investors of options?
I'm not sure I understand the question. Akash, what do you think?
Yeah, I'm a little bit unclear of that. I do think that tokenization is going to grow, and that is going to expand further in 2026. At State Street Investment Management, we're launching a tokenized money market mutual fund in December of this year. And I do think that is the path of the industry overall. I don't think that answers that question, but it wasn't quite clear to me what was meant by platforms there as well.
Here's what I think
applications.
that question is I think I think that future is here. If you ask what the futures are for options trading is for retail options, I mean, retail's trading a metric crap ton of options right now. And I see someone who's fallen in love with options. I don't think that's reversing. Akash, you just said something very interesting about tokenization. What are the investment implications of that movement?
I think it puts on-chain exposure. It quickens settlement times. I think it brings in new investors into the ecosystem for financial products. And I think that's an exciting development, and I think that's the way of the future, so to speak. It doesn't mean that traditional finance products are going away tomorrow, but I think it just opens up new avenues for really retail investors in particular to access markets.
I actually have a State Street water bottle. I can't believe I didn't bring it here. I have one of your like water tumbler things that you guys give out. I don't even remember where I got
I'm
that.
sure my colleague Max probably sent that over. So
Yeah, probably did.
stay hydrated.
So what does State Street do with retail investors? Are you just an investment firm? Do you provide platforms? Do you team with platforms? What's State Street's level of involvement with retail?
Yeah, so State Street Investment Management is a $5 trillion plus asset manager as of the middle of 2025. We offer largely ETF products, although not just ETFs, across a wide variety of asset classes. So from active fixed income to equities to income generating ETFs to Spider Select Sector ETFs, precious metals ETFs like gold and commodities and alternative ETFs as well. As an ETF marketing agent, distributor, and fund sponsor, we work across verticals from direct retail through the intermediary private wealth channel to financial institutions and sovereign wealth funds and governments as well. On the direct retail side, what we tend to do is not have our own brokerage per se, like some other providers, let's say Schwab or E-Trade, Morgan Stanley E-Trade. But what we do is we do have partnerships with several direct retail distributors. And what we try to do is help educate the market, educate retail investors, teach them about our products, teach them about asset allocation, and hopefully provide a value-added service so that they can understand why our products are efficient to access and why they could fit in a part of a portfolio strategy.
So, Akash, do you have so in 2025 year to date, active investing ETFs have grown by, according to Morningstar, about 48%. Do you see that as the way, and do you see that as a positive? Now, obviously, you guys do a lot of ETFs, so I'm not like asking you to pick winners or losers here, but do you see that as a positive thing? Because I mean, obviously, there's been problems with active investing, but active investing is also outperformed.
Yeah, I think three trends that are materializing, and this is really a post-2022 phenomenon where U.S. stock bond correlations really spiked to multi-decade highs. So one is more active ETFs and more active management, but really on the fixed income side, even more than the equity side, that you're seeing that growth in particular. The second point that I would make is that there is a shift with investors broadly going from higher cost funds to lower cost alternatives. And we see that not only at State Street, but I think that's a broader industry trend. So to your point, we've seen an equal amount of inflows at State Street Investment Management into low-cost funds this year. Almost 50% of State Street Investment Management flows have been on that low-cost side. And the third is that growth in alternatives. So that's kind of the new tier or the new frontier. Some are traditional alternatives like precious metals, but then also looking to get into an ETF wrapper, things like private credit or risk parity strategies and so forth. Okay, so I would say those are the three big trends.
I love that. So that was my question was going to be, but I want you to elaborate a little bit. At the beginning of September, Morgan Stanley changed its model portfolio recommendations from 60-40, which was, God, that's the laziest portfolio construction thing ever, 60-40. They went to 60-20-20 with that 20% being gold. Is State Street, do you put out a model portfolio? And what do you think the implications of that kind of global narrative switch has happened?
Yeah, look, I think it's not controversial to say 60-40 or 70-30 is dead in 2025. Although the 60-40 portfolio is up in 2025 because it's an everything rally market where all asset classes are up year to date. What I would say is that, yes, we believe that that 20% roughly is a fair alternative sleeve. I'm biased towards gold, but I wouldn't say even all 20% needs to be gold. What I would say is that you look at that alt sleeve in complementing your traditional 60-40. So really, maybe it should be 50-30-20. And that last 20, you combine liquid alternatives like gold. You look at commodities as well, broadly, because gold and commodities are not the same, as you guys know. And then you also look at illiquid strategies as well. So perhaps you have private credit or interval funds. Perhaps you have some real estate in there. And I think that provides a little bit more of a holistic balance on a portfolio, particularly in the medium term, where every investor now is looking for an edge for diversification, for reducing drawdown risk, and really uncorrelated returns.
I love that answer, by the way. Bobby's got a question from one of our viewers, and then we'll goodbye.
Yeah, I got a couple of quick comments, Ruben. First of all, I want to Roll Tider said 7,000 by when. The question was, do you think it'll hit 7,000 by year end? So that's what we were referencing. I have two questions, but I want to go to the one from Gary first, because I think it applies to what Akash was just saying. Is gold a better hedge investment over crypto? I think it is, but you guys go ahead.
Akash?
Yes, I think if you're thinking of a hedge in a traditional sense, a safe haven, a left tail portfolio asset, a low volatility asset, yes, then gold is the right hedge. That doesn't mean you don't invest in Bitcoin or crypto. It's far be it for me to convert those Bitcoin bulls or crypto natives. What I would say is that's more of a right tail. That might juice your returns over the long run, but that is not providing you lower portfolio volatility. That is not protecting you from drawdown risk the same way gold has historically done so. And gold is just a lot more liquid during periods of stress.
The other question was, do you see most retail traders being net sellers versus net buyers of options? I mean, I think so. You guys
hope to God it's net buyers. What do you see, Akash?
I think it leans towards net buying, generally speaking, largely just because of the brokerage rules themselves, right? You can really only sell options at major brokerage houses if you own the underlying. So typically there's a long bias or a call skew bias towards the retail investment arm.
So I have this belief, and this will be the last question, is that I think the explosion of 0 days to expiration options, and on the future side, they have most days as well. I think the explosion that increases 1 day, 2 day volatility in markets, which I think could have a kind of a galvanizing and make long-term markets more volatile because you shake out people in the short term. Does that make sense?
Sure. Jim, did you want to?
Gosh, yeah, you.
Oh, that was for me. Yeah, no, look, I think I generally agree with that. I also think that since 2021, people laugh at it, but I do think Reddit and the growth of Robinhood, I think that's just incentivized retail investors to get more involved in the space, and they have become very active to the point where Wall Street trading desks are really paying attention to their volumes and activities quite regularly.
I love that. I love all these answers. You've provided a lot of value. Particularly, I really love the one about alternatives and how you phrase them as alternatives too, because I'm kind of working on a model portfolio for us, the investor, unfilteredinvestor.com. But I want to thank you. Tell the people where they can find you real quick, Akash.
Yeah, I live in New York, in the suburbs of New York in Westchester County, but you can
find him there though.
Don't find me there. Don't come knocking on my door. But on the State Street Investment Management website, you can just type my name in, Akash, Aakash Doshi, and you can find some of my views on the world there.
God, I love talking to you. It was a lot of fun. Thank you so much, Akash.
Thanks for having me, guys. See you next time.
Bobby, so before we bring on Cameron, if my model portfolio, I was going like 15% gold, but I think it should be 20% alternatives with like 12% gold and the rest split up between real estate, silver, platinum, palladium. That's what makes sense, right?
Yeah, it does.
Do a back test, I think. And that is our friend Cameron ready to come in?
He is ready.
Let's bring in one of my favorite people to talk to. She's Cameron Dawson, the Chief Investment Officer of New Edge. And by the way, this was on your Twitter, look at your video, which I always do, but I only do it every couple of weeks. And you haven't done a video and you haven't appeared anywhere in about 2 weeks. And back then, your opinion seemed to be that economically things are doing pretty well. Has anything changed in that?
Yeah, well, I've been out there. It's just that people aren't posting videos the same way as they used to, so I don't have as much stuff to retweet. So in my defense, I've been moving and grooving. So I don't let
I thought you're getting lazy. Yeah, I was wondering what the heck was going on. Yeah.
No. We're still trucking along. I mean, I think there's an in between here, which is that there are clearly signs that the U.S. economy in certain pockets are softening. But then there are also signs that certain pockets remain incredibly strong. And one of the best ways to encapsulate this is that we've seen a divergence in the data that we've really never seen before. Company CapEx intentions have shot up pretty significantly. And of course, that's all related to things like AI investment in the physical infrastructure. But then their hiring intentions for employees has collapsed. So what we then have is a translation to the fact that U.S. GDP, with the huge, big caveat that we don't have data right now, but U.S. GDP is trucking along stronger than underlying employment. And I think it's a really fascinating question of how long can that divergence last? The last thing to add to that is just that the Fed, their mandate is about employment, not growth. So if you continue to see employment soften, but growth hold up for a few reasons, AI investment, as well as the high income consumer kind of keeping things afloat, you have a situation where the Fed could be cutting into what is still a relatively strong GDP environment.
Cameron, have you guys looked at, good to see you again, by the way. Have you guys looked at how much GDP gets subtracted from what is now the longest government shutdown in our history?
Yeah, there was a great Bloomberg article about it this morning that estimated what the cost per week is, and it's significant. I don't remember off the top of my head of exactly how much it is, but I do know that mostly as you see, it's one thing when it's 1 week or 2 weeks, but when people really start having to belt tighten, that's when it starts to ripple through the economy. And I think a big question is that there's been all this talk that maybe some of these layoffs will become permanent. That's why we've been referring to this as a shut doge, not just a shutdown, as well as the potential that people don't get back pay for the time that they were furloughed. And I think that's the big question of if this will metastasize in something bigger for the U.S. economy. And I think it's just, I'm sure everybody who is employed extraordinarily frustrated that, the people who are refusing to vote are the ones that are still getting paid.
So we had an earlier question by Chase Hansen and then a follow-up by Roll Tider. If the S&P was going to hit 7,000 by year end, is it dependent to you on what happens with this shutdown? I mean, obviously it can go on forever, even though there's been some optimism lately.
So no, not necessarily. However, I think that answer needs a little bit of nuance. I think that there's a broader framework of how we approach the world when it comes to markets. And it's that when growth estimates are rising, markets tend to rise. And it's very simple. But if you're revising higher GDP estimates and revising higher EPS estimates, it's an environment that A, supports risk taking, but B, also supports multiple expansion. So every time that there is an event, whether it's a government shutdown or a geopolitical event, the question we ask is, will this change GDP or EPS estimates? And if the answer is no, or maybe just slightly on the margin, it means it's likely something to fade. Now, if we start to talk about the idea that you're seeing big layoffs in government and that's causing weaker growth in many pockets of the economy, then of course that would get in the way of both GDP and EPS estimates. So as long as you are rising in those estimates for GDP and EPS, there we go, 15 billion a week. I thought it was 15 billion, but I didn't want to say the wrong number and have people be like, that's a ridiculous number. So there it is. But as long as we're revising those estimates, it's an environment that broadly supports risk taking. So the simple rule of thumb is, if it is a valuation and positioning driven kind of correction, it's likely to be short and shallow. If it is a growth forecast driven correction, it's likely to be deeper and more protracted. So if we start cutting GDP or EPS estimates, then 7,000 is off the table. If we're continuously raising those estimates, then 7,000 is on the table, because I would add that institutional investors, based on both Goldman Sachs and Deutsche Bank surveys, look to be just in the neutral territory, which means that you are set up for a positioning chase through year end. That doesn't mean it's necessarily driven by any fundamentals, but you do need the fundamental backdrop to get people to add to positions.
Okay, so here's a little bit of a switch. Okay, so here's what I believe. And this, again, we were at the New Orleans Investment Conference, and I listened to a ton of speakers, Jim Bianco, Daniel DiMartino Booth, and the K-shaped recovery keeps coming up. And I know people are like, oh, we've heard about this forever, but it's actually very, very real. And I actually think those elections that happened yesterday are an economic reflection. I think what happens is there is a completely bifurcated economy. There's going to be a question in this, Cameron. There's a bifurcated economy where the asset holders have all the money. The 60% of the people who live paycheck to paycheck are the ones who got the 40% higher grocery bill over the last 3.5 years, and they are pissed, and that's why they're voting the way they are. Now flip to the Fed. Now the Fed has to make a decision. If there are two separate economies out there, which I fully believe they are, and I want to know your opinion, are they going to cut to help the 60%, knowing full well that that's going to help the 40% even more? Or are they just going to sit back and say, well, retail sales seems pretty good, knowing full well that 10% of the people in this country are driving 50% of the consumption? So is the Fed painted themselves into a massive corner, and what are they going to do?
So here's a fascinating thing to kind of throw into that whole equation, which is that top 10% of income earner that generates 50% of consumption also holds the majority of the cash, meaning that when we look at those money market funds, if we look at the S&P 500, they hold the majority of cash and financial assets. And when we think about cash, those assets, which have just been sitting there in the $7.4 trillion of money market balances, love higher rates and actually don't like lower rates. So you actually have this impact for the very, very small cohort of consumer that's been driving all this growth, where rate cuts on net will actually be more restrictive to them. Because it's not as if they need to refinance their mortgages. Most of them have long-term mortgages that they termed out during 2020 and 2021, and they tend to not carry credit card balances. So short-term borrowing tends to be less of something that they are concerned about. So what's interesting is that if we think about a year like 2023, you had income from interest growing at over 20%. In that year. So one of the reasons why we didn't have a recession is because people were like, oh my gosh, now all of a sudden I'm getting all this income. This is amazing. I mean, like we've talked about my grandmother. My grandmother, calls me up one day and she's like, this is really cool. I didn't have this before. And it's not much, but it makes a difference. Yeah. And so I do think that rate cuts have the potential for certain income cohorts to be more immediately restrictive than they are stimulative. Add on top of that, if you pull up the interest rate on the credit card effective rate, even though we've seen 150 basis points of rate cuts, those credit card interest rates haven't fallen that much. So you're not getting the kind of relief on the funding cost side of things to individual consumers, even at the lower end that tend to carry higher credit card balances. So I'm not trying to make the argument that rate cuts won't help the economy. Of course, shorter term borrowing, smaller businesses relying on bank loans, for example, floating rate loans. But I am making the argument that maybe immediately the rate cuts will not be as stimulative to the economy, because instead of being restrictive on the way up to many consumers, they ended up actually being stimulative.
Cameron, can I ask you a metals question, please?
As in the music or the commodities?
I'll ask you the metal music.
By the way, she can speak eloquently on any of those topics.
Yeah,
that's what we love about Cameron.
If anybody gets her report every week, it always starts out with a musical reference, which I love.
No, I would like you to appreciate that I did do a country music reference this week, so that we span the genres.
Sure. I have a V8 and tattoos, so that's not me. Real quick. So I trade metals. I used to trade crude oil more than anything. I trade metals a lot now. Jim and I both own a lot of physical gold. I think I own too much, but it's okay right now. What without all the data coming out, let's take copper, for example. Is Chinese data enough to look at copper over the medium term and say, okay, the trend looks strong, the trend looks weak? What do you look at if you're looking at just the industrial sectors and metals more specifically right now?
Yeah, I don't personally trade metals.
Right.
We think of gold within a portfolio in a broader context. We call it a psychological commodity, meaning that it helps you sleep at night. There's a benefit to this idea of it. It benefits from the fear of something happening, not necessarily it happening itself. So if you look at something like the fear of inflation coming ended up being better for psychological commodities like gold and Bitcoin than the actual inflation itself, because you had things like liquidity receding. So there's that.
Could I jump
that
in real
caveat.
quick, Cameron? I'm sorry, because you bring up a great point. I still want you to answer the first question, but I've always said that gold's not an inflation hedge. It's an inflation hedge if the Fed is not fighting inflation. Is that sort of what you mean or no?
Yeah, I think it's an inflation anticipation hedge.
Okay, fair.
Meaning that the idea behind the psychological commodity is that if enough people fear something like debasement, it's going to benefit. And it's more sentiment driven necessarily than the actual evidence of the debasement. Look at the gold rally that we had over the course of the last few months. You actually were seeing things like the budget deficit get slightly better. You were seeing the dollar trade sideways to slightly up. It's not as if you had these big headlines that were glaring at you and saying, this is it, this is now. But the narrative took hold, the momentum took hold, and thus it became very much a momentum and positioning type of move. Now, there is clearly plenty of fundamental dynamics behind it, which we can talk about as far as deficits and needing to fund, et cetera. But I think to your point on copper, I think if you're trying to rely just on Chinese data for anything, it probably isn't going to tell you the whole story. Which is why, when you fly blind, it's a great opportunity for technicals. And so, I say, when you say trend following, yes, that probably is the way to go. But I would note that copper itself has kind of a momentum meme trade that has happened at meme-y, meaning like MEMEY. I know how to pronounce meme for the record. But it has exhibited that at different times. If you recall, in the last time we had a big like electrification kind of everybody needs to electrify everything, Tesla rallied 100, 150% or however much it was. Copper did really, really well in that time. And it was not as if the demand immediately was going up, but people were pricing in the demand in the future going up. It was a narrative, it was an emotion, the whole thing. So all I mean by that is that it's really important to dissect price action from narrative. It's very easy to confuse the two. And I think then it's the discipline of using the technicals to be able to determine you kind of the two different kinds of things that are driving the market.
I love that answer. But I will come back to one thing. When you said the debasement trade, it almost sounded like to me like it was almost kind of an implicit eye roll like that again, which I've made a lot of money off the debasement trade. Do you not believe that it's real? Do you not believe that it will continue? What are your thoughts on that?
Look, all we have to do is look at a long-term chart of the purchasing power of the dollar. Of course, it's real.
Of course, it's real.
But what I'm saying is that even the biggest secular trends have cyclical dynamics.
Sure.
And for something like gold, the secular trend is likely higher because of that long-term move towards debasement. But the cyclical trend within it is the emotions and the, got it kind of like Pokemon, gotta catch a ball sort of moments where people have to get more because
you're talking to about the Pokemon. We don't understand those things, Cameron. We're old men. Go on.
That's it.
Okay. No. Bobby, what do you got?
Cameron, Jim asked a question of Akash Dashi from State Street earlier, and he asked me the same question, so I want to ask it to you. If we get a pullback, number one, is it justifiable to say that this isn't 1999, 2000 because the companies are theoretically in a bubble make money? Then number two, if we do get that sort of a pullback, are dividend payers like a Philip Morris, or will those perform better, or you don't have an opinion on that?
I think it depends on the nature of the pullback, right?
Mhm.
If the pullback is because we're cutting GDP estimates and you have kind of like a correlation go to one type of environment, then that's a scenario where everything goes down and you want, you will likely want more defensive kind of lower beta parts of the market that don't have as much momentum and aren't as crowded and don't have as much high valuation because they're going to have more cushion in them. But when we think about the Mag 7 and the AI trade, I think it's important to observe that you can have bubbles in earnings just as much as you can have bubbles in valuations. And the bubble in earnings, we saw that in the internet bubble. We had both, right? So we had not only the speculative companies that were making no money that people were saying, look, this is going to be the greatest new thing. And it's pets.com and it's AOL and it's all these things that are going to be the future. But you also had a bubble in companies who were actually providing the infrastructure. And those companies laying the cable and providing the cable and all of that and all of the networking equipment, those companies had a bubble probably in their valuations, but also in their earnings, meaning they over-earned. So a big, huge question is if we are seeing over-earning in those infrastructure players within AI, can we extrapolate the growth that we have been seeing over the course of the last 2 years and the build out of this infrastructure perpetually into the future? The most wild stat is if you look at the Bloomberg Mag 7 index and you go back 7 years and you track its forward earnings and you compare it to the S&P equal weight, the Mag 7 index has grown earnings by 730% cumulatively over the last 7 years. The equal weight has grown earnings by 60%.
Wow.
So, like over earning is a thing. It's real. And if you over earn, then you do have an issue where you under earn for a period of time. So I would encourage, kind of we try to keep our heads on a swivel of saying, okay, there's optimism around AI and its applications and everything, but the real things that are being put in the ground, is it sustainable?
So you mentioned earnings and you mentioned potential GDP growth changes, which one thing that was conspicuous that you didn't mention is just overzealous market positioning. And when the open AI thing happened and everybody that they winked at, stocks rallied 10%. To me, that smacked of some sort of a mania, which then to me leads me to believe that perhaps people are over their skis. Do you bleed market positioning into the earnings thing? Is that where you kind of account for that, or what do you think?
Yeah, I mean, where market positioning becomes relevant is a company that beats and raises and the stock goes down.
Okay,
like that's where positioning shows itself, right? Like you can have good earnings and your stock can still go down if positioning is crowded and valuations are high, which is usually a function of crowded positioning. And what I'd say is our piece from this past weekend was called Chicken Fried, and it was acknowledging the big, huge rally that you saw in fried chicken stocks in South Korea when Jensen Huang posted a picture of him eating fried chicken. And what we identified, and my analyst Jay Peters, who's great, went through and ran the NASDAQ composite, filtered for all these different things, and found that companies that generated no profit have rallied 37% this year, so outperforming the NASDAQ, which is up 23%. And companies generating no revenue, not just no profit, but no revenue, are up 67% this year. So tell me that is not a sign of speculative fervor. I also add, that it accelerated in September and October. And what happened in September? The Fed cut rates. Right. And what you've also seen is an acceleration in FINRA margin loan balances to the fastest pace since 2020. So clearly lower rates are kind of starting to catalyze some of the speculative behavior. But remember Bob Farrell. Bob Farrell is one of the greatest technical analysts that ever lived. And he says, exponential price moves go further than you think, but they do not correct by going sideways.
I love that quote. That's a perfect way to drop the mic and end this. She is Cameron Dawson, who's Chief Investment Officer of New Edge. She's one of our favorite people to talk to. I hate even goodbying her. I'd rather talk for another half hour.
And I want to point out her grandmother is the favorite relative of guest that we've ever heard about.
That we've ever had. We talk about.
Can I tell you, it's her 98th birthday in 2 weeks. in 2 weeks, and we are dressing up. It's an under the sea theme, and she's going to be a mermaid princess.
Oh my gosh, that's fantastic.
Pictures to
I
come.
love every bit of it. Thank you so much for joining us. And thank you guys who are all watching. And the audience participation was fabulous. Again, as always, this is the Tradier Trader Summit. I'm Jim Uriel. That's Bob Icino. We are the hosts of Tradier's The Trader's Edge, which comes at you 4 Eastern live every Wednesday, except today. Takes place. Today will be a rerun, but you will love it.
We got to say goodbye to Lex and Molly, Jim. They're jumping in here real quick.
Let's say goodbye to
Cameron,
Lex.
thank you so much.
Yeah.
We are jumping in, guys. Great job. As always. And just tons of great information. Bravo to Cameron and Akash. They were awesome.
I have one question.
Sure.
How do you keep convincing this amazing woman to hang out with us?
We have no
How?
idea. I hope she's not listening right now.
Don't
We have
question.
no idea.
Wow.
Right.
I absolutely
I
love her.
agree,
She
Mom.
knows everything. She knows everything.
Yeah.
Crazy. Yeah.
And I want to go to that birthday party. I'm just saying.
I want to too.
Yeah,
I'm going to lobby for that. Yeah.
Awesome. Guys, thanks. Have a great rest of the day. And don't forget to watch these guys, Trader's Edge, Tradier Hub, Wednesdays, 4 o'clock Eastern, except today will be a rerun because these guys did it early today.
Right.
Awesome job, guys. Thank you very much.
Thanks, guys.
Thanks, guys.
All right.
Catch the options quiz by Kahoot at 12:45 p.m. to win great prizes.
All right. So guess what? We have to do this fast, and I'll speak quickly, Mal. We have the Kahoot quiz coming up in a couple presentations. Let's share my screen here. I just did it. I'll explain it as I'm sharing. All of you folks who are watching, take your phones and hit that QR code, or go to www.kahoot.it and type in that game pin. We're going to play this game. It's 12 questions. It's based on speed, and it's based on accuracy. As you saw, there are cash prizes. First place, $2,000. Second, $500. Third, a year of Tradier Pro for free. So make sure you sign up. We'll show this a couple more times. We're going to leave it up here for a few minutes.
And wait, and you're throwing in a round of golf at your club, right?
Why not? For you, Mal, anything.
Okay.
We will do that. All right, we're getting people to sign up. Good. Just so you know, I've had complaints in the past about they're too hard. So I made beginner questions, intermediate, advanced, and some lifestyle questions. Few lifestyle questions. So.
Okay, I'm rooting for money bags just because I like that name.
I love the money bags. All right, don't panic if you don't get it this time. We're going to show it again because we got to get moving. Next up, Mal, you're not going to believe it. We have the Bookmap folks coming on next, and I think it's a trio. I think it's Josh, Bruce, and Scott, if I'm not mistaken. But I want to get out of here and let them go to town because they've got a lot to tell us.
Yeah.
All right.
CP long retested.
Cannot hear you, Bruce.
You guys,
can you hear me now?
Yeah, we can hear you, Bruce. You guys okay?
Yep.
Yeah.
Yep.
All right, we're going to jump out then. Have at it, guys.
Okay, excellent. So let's see, Scott, if you can share your screen.
I did.
There we go. Okay, excellent. All right. Well, welcome everybody. And today we've got a treat. We have Scott Bolsini. He is going to go over how to spot high conviction trades using Bookmap. I am here just to introduce him and have a Q&A back and forth with him. He's an expert trader. He'll talk more about his trader experience and his bio in just a minute. So next slide, Scott. First, we'll go through the disclosures here. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. We'll hold off on the hypothetical performance disclosure. Next slide, Scott. Okay, so just a quick bio here. I work at Bookmap and have been trading for about 15 years here and lead the trader education. If you're not familiar with Bookmap, well, we can go to the next slide. and we have a basics webinar that we did with Tradier and Trey. That was just like a month ago or so. I'll put the link into the chat here if you guys want to watch that, just to get educated on the basics of Bookmap. So next slide. And so you guys are in for a treat here. We have a expert trader. Scott, why don't you go through that, and I won't hack it for you.
Thanks, Bruce. Yeah, I've been trading for about 25 years now. I used to be a large scalper of the E-mini S&P, meaning in and out all day long. Probably about a period of about 2-3 years, I was 10% of the world volume every day in the E-mini S&P. That's how active I was, flipping the order book, clicking the mouse. And it was great while it lasted, made millions of dollars for my firm and myself, and then overnight disappeared, say 2005, 2006. Low volatility combined with the algorithms, and anybody who trades nowadays knows exactly what I'm talking about the algorithms. They kind of started to take over the markets, and my method of trading basically disappeared. I went from making millions to couldn't make a dollar, but felt like overnight. And then I spent another 6-7 years trying to hold on, reinvent my trading style methodology, and I just could never do anything that made me elite like I did in these days. And actually I had to get out of the business 2013. Just because I couldn't make money anymore. And I got a call from Dr. Brett Steenbarger, who's probably the top trading psychologist in the world nowadays. Who wrote the book Enhancing Trader Performance. Back in the day, he was at my trading firm, kind of like the show Billions on HBO. He was like a trading psychologist that came in there, and he had asked if he could sit behind me to watch what made me elite at the time. And so the book's about trading, but it's about what makes traders elite, or what makes elite performance. So he sat behind me and watched me trade, and he just wanted to see like what made me elite at the time. So anyway, fast forward to 2017, 2018, he had come to me and said, he contacted me, he knew I wasn't even trading anymore, and said, you want to check out this program called bookmap.com. He's like, it reminds me exactly how you used to view the market when I sat behind you watching you trade. So the minute I saw Bookmap, and I'll show you, exactly what I'm talking about here, I knew I was back per se, like I had the edge, or I had something that was going to make me elite again. And then from there it just took off. And then I got introduced to the CME MBO data, this enhanced data that we'll talk about from Bruce, and kept talking about it. And I finally started looking at it, and I'm like, this is the most powerful thing I've ever seen in futures trading. And then the rest is history. I've been trading since then full time, and I have my own trade room. I educate traders and not to do the same thing and spot the same edge that I see, and all because of Bookmap, Bruce and Bookmap, basically.
Yeah, Scott, it's kind of a funny story. It was Brett Steenbarger's father who I kind of befriended. And I go, this has got to be like, Brett. And I reached out, no, it's his father. And he was really interested in trading. And then, he brought on Brett, introduced Bookmap to Brett. And then that's how you came into the picture after that. So really, really interesting kind of journey here through Brett.
Yeah, it was. Now that you mentioned it, I remember that he'd actually reached out to me. This is 8 years ago now. It feels a long time, but I think he was pushing 90 back then. So I haven't heard from Brett whether he's still around or not. But yeah, he was a bright guy even at 90. So he. I guess that's how you get introduced to Brett. But thank goodness, because I would still be sitting in a doctor's office trying to sell genetic testing, being treated like a little peon by the doctor. But, so thank God for that, or I would probably not be trading unless I was introduced to Bookmap from some other means. But it's been a game changer, and it's the best edge I've ever seen as far as using this platform and what your developers have been able to do, and taking this enhanced data from the CME and showing us this information that I use.
Why don't you, so you have a really unique style of trading, and it all kind of evolved, like you said, from your background of scalping and having an edge, being so quick on the mouse. And also you said you have some sort of kind of skills there somehow, like just being able to react so quickly. And then, like you said, that dried up because algos can react even quicker. But then once you got into Bookmap, though, you have a unique way of trading. And if you can go through some of that, that'd be great as an introduction.
Yeah. So again, when I was introduced to Bookmap, I thought this was the greatest thing since sliced bread. Just the way this was laid out with the liquidity and the order books. Liquidity, all liquidity is these orders over here, right? So back in the day when I was a scalper, I was trading in and out of this thing. Just all I would literally do was stare at the order book, and I had this innate ability, and I have very fast processing skills to. I saw patterns in the order book. Well, that all disappeared when these algos took over. I was one of the fastest clickers of a mouse on the planet, but I wasn't as fast as a computer. So once that took over, it was over for that style of trading, right? So fast forward to when I learned about this, the minute I brought this up, and this was before this information, right? And I'm like, this is incredible. This is exactly how I have to view the markets to understand what's going on, and seeing where the liquidity is, the resting liquidity. That in itself is a ridiculous edge where where this big money's sitting, because they are the big money, and more often than not, way more often than not, the big money will push the market into their orders, right? And the longer it's here, the more important it is. Meaning, something came out right now, something bullish per usual, and this market ripped right through these resting orders. Well, they're okay getting filled. That tells you they want to get filled. It's not a game where they're putting in sell orders trying to scare the market. They want their fills, right? And when they want their fills, they'll get their fills. And the reason I know this is because this is the game I used to play as a scalper, right? So I used to load up in the E-mini S&P. I used to load up, and that's when it was thousands up. Now it's like 20 lots up. But I used to load the order book up just like this, right? I would put 1,000 lot in, right, and on the offer. And that would be today and nowadays that would be represented. You'd be able to see it on Bookmap, obviously. And then I would play games. I would test the waters and buy and try to see if there was anybody resisting my buy orders. And once I knew they weren't, I would just step on the gas and I would push the market right into my resting offer, and I would be out. I'd yank my bids, and then the market would just, a lot of times it would just free fall because there's, all of my bids. Back then, spoofing was legal, right? So spoofing is when you're putting in orders, not really wanting to get filled, trying to affect the way the market moves, right? So they outlawed that. Back in the day, it was legal, and I did it all day long. But the point is, the same games are going on with these orders, and understanding where this stuff is can give you an incredible edge in trading, and not just futures, stocks. I mean, my specialty is futures. I actually was going to get into stocks when I got back in the business when I learned about Bookmap, because I was so jaded from futures trading and the PTSD from being a multimillionaire to going to zero and couldn't make $1. And I was going to trade stocks. My first few webinars with Bruce were trading stocks. And then that leads me to this information here. It's a CME MBO data where they introduced in 2017, 2018. And I'll just bring it up here just so you can see it. I'm talking about, you just go to their website, you can check it out. But this has been an absolute game changer. Hold on, let me bring this up here. Absolute game changer, where this is enhanced data where they show the order book, right? So believe it or not, most trading the data providers nowadays, they're still using this market by price data, which is just, even in the order book, it's not real data, right? So in the order book, it's just showing you market by price, just shows you the top 10 prices below and above. Everything other than that is not real orders, right? So with the MBO data, you can see these orders are real in the order book. That's information in itself, like I was showing this liquidity. And then they show you, I'm sure crude here. We'll go over this trade, but I'm going to keep an eye on that. I'm going to get up a couple of these real quick. But the main thing, and this is the driver of my trading, is showing you with 100% certainty where these iceberg orders are and stop runs. So iceberg orders are orders where the big firms put in, and there's a great example of crude that I just went short because of an iceberg order. So the black, you can see here a little bit ago. So this subchart is what this is, taking the CME MBO data, and the Bookmap developers are able to show us where these iceberg orders come in. Iceberg orders are it's just big money that are trying to hide their orders, because if they just drop in, so for instance, right before this market sold off on this, this iceberg order was 174, right? So you can see the order book here. It's like 10 lots up, right? So, you got a little more here. But the point is, if someone came in here and just dropped 175 in the order book offer, these algos run it away. They try to get this entity to chase because they know they need to get their business done. And then this entity chases, and then the algos put in all their bids to get filled on the chase, and then it turns around and comes back, right? So that is one of the main reasons these big money firms and retail traders can use this too. But it's just, unless you're trading big size, it costs more money to put these types of orders in. But the firms are willing to pay that extra cost because it costs them too much money chasing their order if they want to go to the market with something or put something in the order book. So the way the icebergs work is all they have to display in the order book is a certain percentage. So I think it's about 10%. So if they have 175 they want to sell, all they got to show in the order book is like 17 or 18. So it looks like there's just an 18 lot there. So someone jumps up and tries to buy into that, and there's another 160 behind it, right? So they get a mouthful, I like to say mouthful of icebergs, right? Whoever was trying to buy here, and then they're like, uh-oh, and then the market turns around. So more often than not, the big money is not always right, meaning every time you see an iceberg doesn't mean the market just turns around like this. This is a great example of it working. And you can see right now a buy iceberg is coming in here, right? So somebody's buying down here. But the point is, like I was showing you with that liquidity a little bit ago, more often than not, the big money is right, meaning they're going to push the market or force the market to do what they want. So in this case, in crude, sell ice just came in. Now we got stuff firing off all over the place. And usually this is a dead time of day, perfect for webinars, for these type of webinars. But now, of course, everything's happening. Here's an example of a stop run in gold right now. So what are the stop runs? Usually stop runs are these are the two things, the CME MBO data that the Bookmap developers are able to disseminate now. So this data is actually this box drawing here is a zone drawing tool that one of my developers in my trade room came up with to help show this exact area where this occurred. So stop runs are usually retail traders puking. So why is that important? Because more often than not, and everything I'm saying is more often than not, nothing is 100%. Everything in trading is probabilities. More often than not, this is not initiative buying per se. Yeah, somebody's buying here, and you can see it by the blue market bubbles on Bookmap on the heat map. You can't see them that well because of the zone, but you can see these blue bubbles. So that's orders going to the market. Well, it would behoove you to know whether those orders are people just getting out of trades, which are usually stop runs, right? Guys they get short down here and they're like, okay, if I'm wrong, I'm going to put my stop run so it automatically fires off so I can get out of the trade. That's important information to know because more often than not, it's not initiative buying. It's just retail traders puking out of positions, then the market will reverse, right? So that and icebergs are what the CME MBO data shows you, and that is the absolute core of my trading, and it's the most powerful thing that I've ever seen in my trading career, and that's why I based my entire methodology around this because, again, it goes back to when I was a large trader and a large scalper. I know how I would react when I put a big order in the order book and I was wrong, or if I was right, so on and so forth. So that's what this methodology is. Again, looks like there's a lot on this chart. There is a lot on this chart, but we have different trades that we take, and it's not as technical as it looks. But the bottom line is what you want to understand here, if you're new to Bookmap and new to this MBO data, is these icebergs and these stop runs. So this is a case actually where there was a stop run where guys were puking out and it kept going. We have a trade for that as well. But the point is, you're able to see these areas, and that is the key. These areas are the most powerful thing that I've seen because it's concentrated trap traders, so on and so forth. And the markets tend to react differently when you have this stuff firing off versus when nothing's happening. That's when you get the chop type of trade. So in a nutshell, that's what I'm looking at. We'll hopefully we'll look at some live trades here. You can see the markets are ripping. This is an example of some stop runs that fired off. There is I think there's a Fed guy still talking here. But you had some pukes. It did hold for, it did reject initially, and now it's, it's ripping off the page as usual. But this is what I base my trading off of. So hopefully we'll get some trades here on the webinar if that's what you want to go over, Bruce. But that's in a nutshell what I'm doing. Again, this is the most powerful thing I've ever seen in my trading career, thanks to Bruce introducing me to it, actually.
Well, that was just serendipity through that relationship with Mr. Steenbarger and then Dr. Steenbarger.
Right.
But Anyway, just for those that maybe new to Bookmap, what Scott went through a lot of stuff there. And I just kind of want to recap a little bit, just take a bit of a step back. So on the right-hand side, you've got the dome, Scott. So everyone understands what that is. Your depth of market. You've got the in the green, that's liquidity. Those are limit buy orders on the depth on the bid, and above in the red, those are limit sell orders in the depth on the offer. That's where traders are willing to get filled. And then you can see that there's a histogram in there and there's a numerical value. So now what Bookmap does, though, is we take that depth data and then plot it on the chart historically. So what Scott referred to as that big area of orange liquidity or red liquidity, that's part of the heat map. So, orange, red is very, very high liquidity, then yellow, white, blue, and then black. So it's a map of the order book historically, both current market and historical. So you can understand the game that Scott was playing years ago, which Scott is still just sounds cruel. That you're like, oh yeah, here's your liquidity here, and you'd chase them up to it and push it and skew the order book just so you could get filled. But anyway, these are the things that are happening day in and day out from nanosecond levels on up to daily levels. Anyway, so you have that context now in the order book. So what Scott had referred to right there, that high liquidity you were targeting there on the NASDAQ, right?
Yeah.
It just traded into and it ripped through it. So there's still more. You see the blue dots, right? Those are the aggressive buyers. Those are market buy orders that move price. And there's more aggressive buyers now than there are passive sellers. And that's why the market is going higher. So now Scott is looking at within this liquidity and the market buy order data, which is it's kind of a subset of it. So he's looking at stops and stop transactions and stop runs, which means that we can actually go into with the market buy order data and we can show those transactions. Okay, it's nothing really magical. It's magical that they offer this data. We are able to put that into a context via the queue and the order book and understand the stops as well as iceberg IDs. So we can see also when icebergs are transacting. We do not know how much is behind the iceberg, but we can understand when they start to transact, and we can see the whole evolution. So we can see when they start to transact, how much is transacting, if it was moved, if it was canceled, or if it's fully executed. And we do know that information. And then Scott, what you're looking at is, and you're drawing zones around those two events from the market by order data. So he's looking at the stops and stop runs, and then he's looking at the iceberg transactions and saying, aha, here's additional information from these players, these types of players. Number one, stops are retail. Larger players are usually not using stop orders. And larger players are using iceberg orders, though, to hide their liquidity from the order book.
Right.
And then understanding that context, then you put it into the bigger picture, though. And that's what's really interesting with your method. So you're looking at that bigger picture, and then, okay, now this market event just unfolded. How does it fit into the bigger picture? You're interested at that point, right?
Right. So what I do is I have my important areas, right? And I tell traders all the time, it's not up to me to tell you what important areas you think are important. That's fine. I mean, I have my certain areas from trading for 25 years that I know are important. And I monitor those areas, and then I wait for a volume event, so either icebergs or stop runs. This is a case there was both of them here, and this is actually I have 6 distinct setups, stop iceberg setups that I look for, and we name them. They're named funny, memorable names. This is called the double whammy, right? So this is when you get the dumb money puke. So the dumb money we refer to as retail traders. Don't get offended if you're a retail trader. I'm a retail trader nowadays too, but again, it's usually the retail trader puking out. You can see here, this is 500 pukes into the waiting hands of buy ice. So somebody's buying here, and somebody's the uninformed, the way you can think about it is the uninformed trader is puking out the informed trader or the trader that's bigger. Again, the big money is not always more informed. They're just the big money. So if trust me, if someone keeps putting buy ice in here, the market will finally relent and go higher, right? It doesn't mean that they're going to be right every time, but probability wise, they'll be right. So I have a distinct setup called the double whammy here, and that's what's happening right here. So I look for these events in important areas. There's another important areas I'm looking for here. One, these are the mentor Q options levels, increasingly important. Anybody that's following these equity markets, mostly, especially, is the options, the 0 date to expiration option game is the newest game in town, where they load up the dealers and the dealers have to turn around and hedge with the futures or the underlying product, whether it's stocks or futures. So I know these levels, there's going to be dealer reactions here. It doesn't mean that, again, it's just going to bounce off here, but I know there's a higher probability of a bouncing here. Then when you add that into a particular volume event, now I have a big money buying here, and I know the dumb money, it usually runs the other way after they puke. Now we have ourselves a potential trade. Another area I'm looking at here, I don't want to get too in-depth and confuse more people, but these are called Ludwig levels. Again, another area that I look for these volume events. The blue is a really important support line, and you have a mark for those of you market profile. This is a market profile composite as well. So now you're looking at 3 different things of confluence, things that are lined up in one area, and I still wouldn't trade this stuff unless I got a volume event, which I do, right? So I know that is the market profile composite. I know it's a Ludwig level. I know it's an important area for options dealers that could be hedging. Am I just jumping in along here? No, I also have rules on these for most of my trades. Again, I don't want to get too in depth in this webinar, but I wait for the volume event to show me a certain pattern, to show me whether this is a bullish or bearish event, right? So this is not holding right now, and I'm not long yet. I'm still short actually from way up here. What I do, again, this is from watching, I've been trading these since 2018, and I've watched about 4 million of these things, right? So the best way to enter most of the trades that I trade is to let this market prove that this is a bullish event and push an ATR, which is right now about 16 ticks, out of the zone to tell me, okay, now it's time to go long. Because from my experience, it's not my experience of trading, what moves markets is volatility and volume, right? So I'm putting those two together to have my best chance of a winner. So for me to go long this particular event, I would need to see this market move out of here in ATR to go long, right? If it proves bearish, meaning it's the ATR below, now I have different trades that I can trade off of that. So that's what I do in a nutshell. Again, I don't want to get too technical here. This is what I do every day for my trade room. I actually have a free live trading webinar for Bookmap on Thursdays at 9 o'clock Central as well. You can hop on that tomorrow and you'll see exactly this real time, and I get more in depth. But that, in a nutshell, that's what I'm doing. I'm looking for volume events in my important areas. So what I tell traders all the time, you may not use Ludwig levels, you may not use GEX levels or market profile composites or whatever. I don't care what you're using. You would be that much of a better trader if you demand these types of events in the futures to initiate your trades or tell you, okay, now it's go time to take it in the area. Because with trading in anything, right? Even if you're talking like about VWAP or something like that, traders always like, they love to trade VWAP, and then they're looking for a short in the VWAP here, and it blows right through. Where traders are like, well, why didn't that work? Oh, okay, well, it's just probabilities. Yeah, it's probabilities, but I'm telling you, if you're watching VWAP and then you demand a bearish volume event, now you got yourself a real edge, right? And again, you can take my word for it, or you can go in. Bookmap has data feeds that every day that trades, and I actually offer 5 years of data feeds that I compiled in my 5 years of my trade room. You can go back, and that's another great aspect of Bookmap. You can go back and replay the days, and you can see these events, and you can see your areas, and then you can basically practice it on your own. Or you can just take my word for it. It's the most powerful edge I've ever seen in my life. So that's what I'm basically doing in a nutshell. I'm just looking for these volume events in my important areas.
Yeah, and that's really makes the big distinction there is you can look at your higher time frame. I don't know, it might be volume profile or your Ludwig levels or whatever it is that you're looking at, VWAP, whatever. But now you're looking at something specific around it. You're looking for your volume event around it, and then very specifically, you're looking for the stops and icebergs interplay around that area as well.
Right.
So that is what allows you the high probability conviction.
Exactly. So here's another just a quick example in gold, because this is, it's good to show live too, because, there's so many educators out there that come in after the fact, like, oh, look at this great trade I took. And it's, a day later. This is real time stuff. So this is gold. It's moving. Remember, this is a dumb money puke. So it's more likely to do that, right? Doesn't have to, but more likely. Then you have major GEX levels, Metro Q GEX levels here, meaning dealers are going to be hedging here. So it's usually like a resistance area. Then you throw in, again, one of my important areas. This is a market profile composite right here. Composites are just daily value areas of single days. Like, here's a good example. This is today, right? So value areas are just where 70% of the trade occurred in a day, right? So this was yesterday's, this is today's. But when they overlap, then I merge them together and they're even more powerful. So this is a 2+ day composite, meaning value area. And these are great areas to take trades. So here we are right here with a volume event. And we also have those GEX levels. We also have extreme standard deviation of VWAP. I can go on and on, but these are the levels of my important areas, right? So if this if this market were to move out of this volume event right now, I will take a short. So that's how I do it. So all I'm doing, again, it looks like there's so much on this screen. There is, but it's very basic. And then we have another trade I'll go over here potentially as a reversion trade, where the markets have a tendency to come back to these volume events as well in ridiculous fashion. I'll show you about 20 of them today if you guys want. But the point is, if this market fails, I'm not doing anything yet, but if it can push an ATR, right now it's about 50, meaning this market's rotating about 50 ticks every 5 minutes. Very important to know the volatility, right? If this market moves out, then I can put on a short. And then this zone drawing tool, this is a great thing about the zone drawing tool. This is available on the Bookmap marketplace as well, that draws these events. It gives you your position sizing too. So if I'm going to put on a position trade in those areas I just showed you, I'm risking $500 a trade here. I can put on 0.3 of a big contract or 3 micros. So this is the sizing is already. Most reasons why traders fail are they don't know. They could have a great idea or a great area. They're like, well, where do I get in? Where do I get out if I'm wrong? This zone drawing tool tells you that. So based on my experience of trading this, again, I wait for the market to move out the full ATR to get in, and then a little more. And then once I go short, my stop's way up here. And this is the best way that I've determined to trade these things, to stay out of algo, though. You can see these algos in here playing games with the retail trader, right? So for me to best avoid, because these algos can see just like we can when nothing's going on, that's when they see like the big money's not playing, then it's algo time, right? That's when they start whipsawing these traders. So that's why if I'm going to go short, I demand it to move an ATR out, and then my stop's way up here. So if I'm going to be wrong, it's got to come back that full ATR. It's got to get through the volume event where there's traders that are loaded up, and then it's got to push another ATR out for me to be wrong. Yes, I know that erodes the R, for most cases, but that's the best way to avoid the nonsense. So if I go short here, my stop's up here, they can sit here for 6 hours, and they've been doing it a lot lately where nothing's going on. And I don't care. If it can't get up here, then I stay in the trade. So these are just my rules that I use with the stuff. Again, you can get this and come up with your own rules, which is fine. But, I've been watching this stuff for 8 years and about 4 million of these things, like I said. So it behooves you to kind of listen to my aspect of it, especially with my trading history and my experience, and then come up with your own trade plan. But the point is, the whole idea of this is the most powerful information that you can use in futures trading, in my opinion. And then you got Bookmap Bob that tells us too when the market's doing certain things. So it just told us that this value area, or this event, this double whammy that I was ready to go long on, it just validated short, meaning it pushed the ATR out. So now I can look for from my trading strategies, things to go short. And it's also telling you something too, that this is a broken double whammy. This naturally should be a bullish event, right? You got the dumb money puke, we just went over this, and buy ice. This should have held for For this to do this tells you this could be a whopper move lower today. Could be. It's just a guess, but I'm telling you, based on my experience of trading these, that this should hold, and it's not holding. Now I'm looking for shorts, and I potentially can take double-sized shorts based on what I think could potentially happen as far as a thesis. So this is what I do all day long and teach traders to do.
Yeah, it's really great. Scott, can you talk a little bit about so this double whammy here, this setup? This is one of the I don't know 6 or 7 that you have setups.
Yeah, six setups.
6. So you were short going into this. You had the event unfold, and you were waiting for kind of an outcome after that event. It is telling you still stay short, or how would you manage this at this point? How do you manage multiple events, basically?
Right. That's a great question, right? So the biggest fallacy, in my opinion, for retail traders is the ridiculous, I'm going to trail my stop so I lock in my profit, right? Again, there's nothing wrong with taking profit, but I take profit as the market makes money available to me, straight out of Trading in the Zone. That's straight out of Mark Douglas, Trading in the Zone, right? So as the market tags important areas, if it's kind of struggles, I'll get out of some. I never trail my stop based on where I want to, cut a winner or cut losses or make sure I book a profit. The market does not care if you want to book a profit. That's putting your own I can't think of the word into the market. The market doesn't care what you want to do, whether you're profitable or not. The market does care about volatility and volume events. So the way I do this is when I went short, I put this on right before this webinar started, right? Put the short on. My stop was up here. We just talked about that, right? So I shorted right here. My stop was here. As new events come in, then I trail my stop to the most recent event. So I trailed to that. And then this event came in and I trailed to that, and it still trailed to that. And you heard me getting out of some too, as this market is, I can get out of actually a couple more in the sketch level. But I trail my stops based on something that's happening in the market, not because, I have a great trade. I have a great profit on this trade. I don't want to give it all back. No, I don't want to give it all back, but I'm getting out as the market moves into these areas if it's struggling. And then I trail my stop to something that's happening in the market, not some that's what I was thinking of the word earlier, not some self-imposed, area on the chart. The market does not care where I want to book a profit. It cares about volume events, and that's how I trail my stops.
Yeah. I always love that, the way that you look at them as another event, a new event. And if you're still in it, you will then manage it to that new event as well.
Right. Which makes sense, right? If I'm initiating trades off of there, I should be managing my existing trade off of that event too. So if I'm going to take a short here, right? So say I take a short right now, my stop's right here. Well, that's exactly where I'm going to trail my stop from my long that I have on to that same. And if I were to go long off of this, which I'm not now, but say this didn't prove to be a bearish event, I turn around and I stop out of my short and I go long. So right now, this is actually a bearish event. And you can see this is telling you something too, right? With knowing this, we just talked about how this should be a bullish event, right? This double whammy, buy ice and sell stops. And it just blew right through there. Not only did it do that, it's blowing through all of these important options levels from Mentor Q that show where these dealers are hedging. So the dealers are still hedging here and the market's just plowing through them. That's telling you something bigger picture, right? So this is what I'm talking about, using this stuff and then coming up with a thesis based on that. Like this should have bounced, didn't. This definitely should have bounced, didn't. And then this is going right through this GEX level too. So this could be, again, this is just a guess based on what's happening. This could be a whopper down move. And we've been actually waiting for this exact move in my trade room for a couple of days. So these are balance areas. These are areas, just two-sided trade. So I was going to take a trade here yesterday, this exact setup. I was waiting for this to break this balance area. And then this balance area was breaking down. So I said, okay, I'm all ready to go short. Came down here yesterday. There was a stop run and it proved bullish. So not only did I not take the short, I actually went long yesterday and caught this long. And I was already, again, my thesis was the market was going to get killed. Didn't happen. What helped me avoid taking a loss on a short was a volume event, real-time volume, which runs the show. It turned bullish. So not only did I not go short, I went long yesterday. And then today, now it's a different story. Now you're getting bearish events. And now this looks like, especially when this breaks below all this, again, this trade, these are traders placing bets. They need to get the hell out of their trades. And you're seeing that by the puking. So that's just using kind of, market structure with these volume events. You don't have to see the market structure or use it like I'm using it. You can be a profitable trader just using these events, right? And that leads me to my other trade that I take too. I've taken about 10 of these today. These are these reversion trades, right? And this is where all these lines. So when you look at this chart and your head spinning, that's what all these lines are, right? So these reversion lines, you got the 1 ATR, the 2 ATR, the 3 ATR. These markets have a ridiculous propensity to tag these ATRs and come back to the volume event. I don't know why. They just do it. These algos just snap it back, right? They're even better when you're able to take something important. In this case, it was a GEX level. So I took this basically right before the webinar too. It's bounced off the GEX 2. This is a Menther Q GEX level, the second strongest GEX gamma level on the board where the dealers are going to be reacting. They reacted. Then I took the reversion trade. I entered there and I was out at the zone. So an example of this is more of a scalp trade, right? So because so many traders contact me, how do I scalp off the dome, the depth of market? And I want to do that. It is, I'm not going to say impossible, but it's pretty impossible, right? This is what I made millions of dollars trading off of in my career. If it was that easy, why wouldn't I still be doing it, right? I would love to scalp and make millions of dollars scalping. It can't be done by hand, in my opinion, especially for a retail trader that's paying the commissions and the in and out. So the closest thing to a scalp that I take, and I teach this trade, and I take these all day long too, is when you take these reversion trades, you're in at these reversion lines and out of the zone. So it's just a different type of trading strategy, but there's something in it for everybody as far as type of trader that I teach. Whether you want to sit in positions, and no one likes sitting in positions like this one, actually, especially for crude, this is a outlier. Usually I'll get in this short and it'll do this for 5 hours. Very rarely do you get this kind of move, but when you do, you're positioned and you're in it. So that's basically what I do in a nutshell.
Yeah, there's something also really nice, and this is something that it's not just it's not your order flow strategies. It's not your understanding the volume events, etc. It's your trade management, and this on top of the strategy is really something unique or special, I think, because like you said with that crude oil trade, you are now positioned at least for the potential for a big move, and then like you said many times in the past. Those can be your a handful of events, like on literally 10 or 12 events out of the year that can make your year.
Right. Well, that's what traders need to understand too, right? There's this fallacy, especially by newer traders that come in here. They're like, I just want to make $500 a day. You can average $500 a day. You can average whatever you want if you have your account's big enough, right? If you want to average $5,000 a day, great. You're not going to come into the markets as a trader and make $500 every day or $1,000 every day. Again, you can average that. Most trading days, your P&L is going to look like this. You make a little, you lose a little. You make a little, it looks just like a market, right? How markets do this, it's just like your P&L. And then you'll have the day where you have a whopper day. And then it goes back to this, make a little one. Then you have another one. You never have one of these because you cut yourself off at your drop dead. And this is the most important thing you can do as a trader is have your loss limit for the day set for when things are not working out. And you will have many of those days. You stop yourself so you don't have one of those and you never give back this increasing equity curve, right? So that is the most important thing you can do. And I say it all the time. And I know Tradier does it because I have 10 different $20,000 accounts with Tradier for my strategies, right? You can ask them, can you please stop me out if I hit a certain amount of loss, either a percentage or a money amount, a monetary amount for the day. They just cut you off and you can't trade to the following, until Globex opens back up at 5 p.m. That is I'm telling you guys, and I've told this story a million times. Bruce has probably literally heard it probably 100 times in the last 8 years on these webinars. I had, when I was a big trader, right? When I started taking off, I was making millions of dollars for my trading firm. I had $100,000 loss limit for the day. So meaning I can trade until I lose 100 grand and I'm supposed to be done. Not only am I supposed to be done, I'm supposed to stop myself. My trading firm was supposed to stop me as well. Well, it got to the point, and this is called negative reinforcement in trading, where I was such a big trader and making so much money. I would hit the $100,000, right? And they would cut me off. And then I would go take a walk, go have lunch, come back and say, okay, I reset. I'm not on tilt anymore. That's when you're losing your mind in trading. Anybody who's traded long enough has been on tilt. And they say, okay, I'm ready. Could you give me another 50 grand to play with? And they give me 50 grand and I'd make the 100 grand back and make, certain days I'd make like another 100 or whatever. Right. So it got to the point where I would hit that $100,000 and they would just let me keep going because they just knew I had a very high probability of making it back. Well, guess what? Yeah, it works until it doesn't work. So 2 different days, this was 2004, where I hit my $100,000 loss limit. They didn't stop me. They didn't even call me. I'm on tilt. I lost $800,000 literally in minutes. I'm talking like within 5 minutes, where the market just, because I had back then I could put on 3,000 contracts, right? Even the S&P contracts. 2 different days, I lost $800,000 in minutes, 1 month apart. Both times, my firm, again, it's not their fault. I'm responsible for my own actions. But when you're on tilt, anyone can tell you, you're not thinking clearly. So I didn't stop myself. They didn't stop me. So I lost $1.6 million in 2 different trading days. And this was probably in a total of 10 minutes. I'm not exaggerating, when I should have only lost 200 grand. So that's another $1.4 million I should have to my name. And I can use $1.4 million right now that I should have to my name if I just followed my rules. So that little rant is just to tell you guys, have in place those days where you have that pullback and I'm telling you, you think you're going to be able to stop yourself. And a lot of days you can, maybe some people can, but trading is emotional all the time. When you're dealing with money, you get emotional. You are not going to make the correct decisions a lot of time. Put it on through Tradier or the firm you're trading through and say, please stop me out if I hit the certain amount or certain percentage, because you're going to have a day that happens and you're going to wake up the next day like I did. Both times I lost the 800 grand and said, what the hell was I thinking yesterday, right? Don't let that happen. And if your brokerage doesn't do that for you, find another brokerage. It's in their best interest to keep you trading anyway, right? That's what brokerages are around for, with the commission. So if they're not willing to do that for you, find another trading firm. Again, Tradier doesn't. I know for a fact because I have it set up for me for when I have bad days or when I go on tilt.
That's a great way to end this, Scott. We're out of time here. I think Lex is going to jump in here in just a second, but really great stuff, Scott.
Yeah. Thanks, Scott, and Bruce. That was fantastic. Really interesting. We don't have time for questions. Sorry for that, but I do want the folks to know where they can find everybody. So is it bookmap.com, or help me out on that one? Is it
tradinghotties.com?
Oh, there you go. That's what it is.
And I do like that comment, or like cut them off. I like the discipline of trading. It's a really nice thing to end on. It was really good note.
Yeah, so you can reach me here, obviously bookmap.com, and then here's my website and my email, and I'm Twitter, and here's my trade room. So and tomorrow, every Thursday, I do this exact trade live thing on Bookmap, YouTube, and Discord at 9 o'clock Central.
And by the way, what powerhouse of software! That's incredible.
Yeah. I'm gonna catch up with you guys next week, and because Scott, your story is very familiar. I remember those days back on the floors when I was down there. So we're gonna catch up on some things.
Yeah, glory days. Those were the days. I actually did work at the Board of Trade too as an ARB clerk before I started at trading.
Hey.
Those were the days.
Awesome. All right, guys. Thanks again. Bookmap.com, and we'll sync up next week. Thanks. That was awesome. We appreciate it.
Thanks for having us.
Thank you, guys.
Okay. Bye, guys.
Catch the options quiz by Kahoot at 12:45 p.m. to win great prizes.
All right, Mal, guess what? One more before the break. These 2 cats are my favorites, 2 of my favorites. One of them and I get in trouble all the time every time we go out on a social evening, but we'll save that for later. Okay. So next up, the 2 lads from ORATS, Matt Amberson and Tyler Cheeves. I probably said that wrong, Tyler. Sorry. Bring them out. Let's do it, because we're eating in their time and we're going to get them rolling.
All right. Hello, everyone, and thank you for joining us today. My name is Tyler, and I'm here with Matt Amberson. Matt is the founder of ORATS, and we provide historical options data, live data APIs, and a suite of trading tools that spans backtesting, scanning, risk analysis, trade ideas, and a lot more. Because the theme of this summit is actionable intelligence, we're going to be highlighting the backtesting and trade ideas sections of the dashboard. We're also going to show you a live demo of the entire process from signal generation and validation to trade execution. These are the same tools that you can get right now on orats.com. If you have any questions while we're doing the demo, feel free to comment. We also have a great online resource called Auto. It's our AI chat agent that responds to any question you have about our data, tools, pricing, and everything in between. So we're very excited to show you these cool tools that we've built for you today. Matt, if you're ready, let's start the demo.
Yeah, thanks a lot, Tyler. I thought we would be able to say hey to Lex and Molly, but anyway, hi guys from afar. We should ask Otto what Otto thinks of Lex. I wonder what that would entail. Do I need to do anything special to share my screen here, or is it being shared and I just can't see it?
I can't see it right now.
It's sharing, so I think that they need to do something. Anyway, the important thing about what we're talking about today, Tyler, is how we identify trading ideas. It's not just, hey, here are some good trades based on this or that. We do some of the deepest dives into back testing, and then once you get a back test that you like, it's a very personal thing. You need to figure out I'm getting a studio chat here. What's going on here? Guys, he has to switch his screen. Oh, I've never had to do this before. He is currently sharing his StreamYard stream. All right, so I'll stop sharing that and I'll present here and see if this works. Did that work, or that didn't look like it worked either? All right, I'll stop that. And yeah, I might need a little help here. Oh, there it is. Is that working?
I can't see anything up there yet.
All right, I think I've done all I know. Can you share your screen, Tyler?
They're saying they're still sharing the same screen.
Okay.
You need to change the tab.
Change the tab.
Maybe, yeah. Just go, maybe just change to the dashboard tab, I guess.
Oh, okay. Let's see if we can do that.
Are you looking at the dashboard now?
Oh, there we go. So like this. Can you see this yet?
Not yet.
Okay. Let me try it again. One more time.
Maybe
Wow.
pull it up in a separate window and then share that window.
Could you see
That's
this?
good. Yep.
All right, we're here.
Okay.
All right. So, yeah, sorry for the delay, people. But we have a whole trade ideas tab. And again, the important thing is to come up with trades that match your risk profile, your profit to risk reward. And ORATS really helps you do that by back testing. We have an optimized feature. And then once you find a trade, we have theoretical value, so you can make sure that you're not giving up too much to the market makers, of which I used to be one, with Lex down there on the floor. So that's the start of things. So when we come in, how do we find these trade ideas? Okay, so first of all, we have a backtest finder. You could look for neutral, bullish, or bearish trades today I'll just start with neutral trades. And then the way that these come in is we have pre-run 339 million back tests here. So we have many of the most popular symbols, many of the most popular trading strategies, and you could rank them with various ways. I like this kind of conservative return on risk, where I find returns and then I divide them by the risk which we measure in drawdowns. So what we've found is even this was complicated for people. So then we automated it where we took the best one. So like this top one might come into the trade idea. So this is one way to start looking for trades. And then what you could do is once you get a back test, you could go in and find, well, what's the best time to get into the back test? So, you know, if you get a back test that says, hey, the stock has to be above the 50-day SMA. Hey, the stock has to have an implied volatility that's low. So here are our signals, like in these, the C's match what the current environment is. So where is the VIX? It's moderate. It's between 15 and 20. So you might want to look for only back test or only trading ideas that happen when the VIX was in a similar environment between 15 and 20, or when the SMA is between like above the 50-day or above the 200-day, which it is right now. RSI, we also have implied volatility, that's moderate, and our slope, that's the put call slope, is moderate. So again, there's a lot of stuff that's going on behind the scenes, and you might want to just come into trade ideas, because trade ideas in the backtest finder only finds strategies that are matching the current environment. For example, this long call calendar in the Qs only was tested when the slope percentile was moderate, which, as you recall, that's what we're in right now. So this might be a back test that you're interested in, Tyler.
Yeah, I just want to take a moment to appreciate the scale of this backtest finder, right? Because this lays the groundwork for everything else in the dashboard. This tool, you know, there's over 300 million options backtests, which is an insane amount. And we have them for over 100 symbols and over 10, I think it's like 10 to 15 strategies per symbol. So neutral, bearish, bullish, we got calendars in there, single leg spreads, you name it. So the scale of the backtest finder is really massive. And you can use it to learn about how different strategies perform in different markets. You can compare strategies against each other. Like, you know, is a shorter term spread better than a long term spread under these entry conditions? What are the best exit conditions and the stop losses and profit targets for a specific strategy? I mean, you could spend days just on the backtest finder learning about how these backtests work. So yeah, that lays the groundwork for the trade ideas, right?
Yeah, and you're looking for, the orange line is the line that shows the return from this particular strategy, and then the blue line is what the Qs have done, you know, since, in this case, 2011.
Yeah, we have 37 different performance metrics too. So if you look at those 4 tabs there at the top, we have performance metrics, monthly returns, and a trade log. So you can see all these stats, and these are in the backtest finder too. So you can search through the database of 300 million tests by 37 different performance metrics. And we have a trade log for each one. So you can see exactly what you did. And then you can compare the monthly returns as well. So you can really dive deep into each individual test.
Yeah, that's a good point. And then, you know, still, you want to validate that what you're doing, you know, isn't just overfitting or isn't pure chance. So if you want to be back testing, and I mean, everyone backtests in some regard, whether it's looking at a chart and just eyeballing it is in a sense backtesting, but we want to bring you as much as we can that you could sift through. You could even compare these to similar other backtests. So I could go find, other long call calendars. I could sort through these. What are the best ones? What are the worst ones? And is this something I want to do? Like I see right now, there are some bad strategies, but then I see, well, yeah, with a calendar, you don't want to be getting out at a 25% stop loss because it's inexpensive. That's only a couple pennies. So that's the reason. Then I could say, well, that's the reason these are all doing poorly. But for the most part, this looks like a decent strategy. And one other thing that you could do with this call calendar is to optimize it. So we could bring this over to our optimizer, and we could look and see if we want to add any more filters. So we had the slope percentile is moderate. Are there anything else or any other indicators that might improve the return? So anything in green is improving the average daily percentage, and anything in red doesn't improve it. However, we also have this p-value, which is extremely important. And the p-value says, yeah, we could only trade when the forecast is in a certain SMA. But if we do a Monte Carlo simulation and run it many hundreds of thousands of times, will it profit each one of those? And then if it can then calculate, yes, but how much of this is by pure chance? Could you help me out on that p-value, Tyler?
Yeah, absolutely. I mean, you're right. It's basically a representation of statistical significance. So when you do a scientific test, you try to establish a null hypothesis and then prove it wrong, right? And that's where the p-value comes in. If it's less than, say, 0.1, that means that, well, less than 10% of the time this is going to occur by chance. So you want, when you're backtesting these indicators, and ORATS has hundreds of them, that's what makes us unique. When you're backtesting them, you have to make sure not to be prone to overfitting or path dependency. And that's exactly what our backtester and optimizer helps you do. And you can utilize that p-value to sort of quickly see, well, is this just by luck, or is this an actual good indicator for this backtest?
Right. And in this case, there weren't any that were very good indicators. So I wouldn't proceed farther with trying to optimize this particular test. It still could be a very good test, and we've already done a fair amount of due diligence by comparing it to other tests, but I don't think this would optimize well. So let's go back to the trade ideas. So that could be a good test, and it certainly looks like it performs well. There's a high probability of profit, or actually a high reward to risk ratio. The probability of profits, it's about a third, and this is about 3.4 to 1. And then you might notice that we also have theoretical values. This is what these mean. And so you could make sure that your only findings, even we go and get the backtest, we get a strategy, but we also have a theoretical value that's important. And we could look at notional returns, what the drawdown was and what the Sharpe ratio was for this particular trade idea. So you could do a lot of analysis just right here and sort through to define the trade that you might want. But then you could dive deeper once you find a good trade, like we did, and look at the backtest, look at similar backtests. So that's what you want to be doing when you're trading. Find your niche, find the appropriate risk and return. Like, for example, I never sell naked. And naked, a short put against cash is naked. So, I want to have a spread. And I don't usually have a very big delta, or if I do, I'll have an offsetting other trade against it. So those are my risk tolerances that you can sift through and find the trades that you want. So we have we have curated strategies here too. These curated strategies have many of them been sifted through and have p-values, where we like them. So this is another way to find trade ideas, and these are the types of trades that ORATS team has sifted through and found. Not only the back tests are decent, but they optimize well with particular factors, and you could go see what those are. Are we doing okay, Tom?
Yeah, I just want to kind of take a step back and go over like the entire process. So these trade ideas that we kind of put in front of you here, they are doing all the work so they're doing the work from the back test finder, and then they're optimizing, and then they're also scanning. So it's like a 3-step process that we do behind the scenes to deliver these trade ideas to you. So they find a good back test in the finder, and then they do the optimization and the p-value work that we just showed you. And then they also run a scan and prioritize top trades based on theoretical value weightings, risk reward, and probability of profit. So maybe we can show a little bit of the scanner too, just to get all 3 parts of the process.
Yeah, let's do that. So, so now that you've found your strategy that you like, you could again sort by a theoretical value. You could sort by reward to risk. Like often I'll find a high probability trade and find out where the reward to risk is decent. So maybe this XLK has a decent probability of profit and the risk isn't too much. So this looks good. So I would click on and it's got a good p-value. And we could take a look at the back test. The back test doesn't look that good, but the optimized back test is a good test. So this is something that you might consider, but again, it's that might be that's not a trade that I like that much, because I want to see not only the optimized returns look good, but I want to see a good Sharpe ratio on the overall. So let's look at this Amazon short put spread, Tyler. The back tests on this one. I mean, these are the types of back tests that you like. You're going to lose, if Amazon is under large duress, but most of the time it's making money for you. So so this is something that I think looks good. Makes money in almost all years. So then what you could do is go into scanning for options. And what we've done, which is kind of amazing for this platform, is we've fed in all of the target min and max days. We've fed in all the deltas. This is out of the money put spread that we're selling, and we're selling the amount of spread price divided by the stock. It looks like about a 1% or 1 basis point. So $1 divided by the 250. So this particular scan is defined by the back test, and the back test then comes into the option scanner, Tyler.
Yeah, it's really cool to see, and very quick. You can go from a back test to scan results in seconds. And this scanner table itself is quite robust. You can filter. We have 3 different theoretical values, but then we also have all the standard stuff like probability of profit, risk reward. You can filter on the open interest and volume of the legs, the bid-ask width, the price to percent. So there's so much you can filter on here and really narrow down what you get.
Right, and you could also filter on open interest. So for example, this one, the top performing one is a little bit wider than the other ones. And you can see there's a lot more open interest on these other ones. So, you might have a min of 1,000 on the open interest, and the max bid of 5 cents, and then it filtered out all those, so 7 cents. So now we have ones that are liquid and also have open interest and are tight markets. And you could also filter on deltas and max loss and all this stuff. So this looks like a decent trade, and then you could click on it, and see even more information before you send the trade. So we have Tradier as our endpoints, but we also have a paper trading where you can send these to a paper trader, and then also have alerts and do everything. So I'll simulate this trade, I'll force it through, and we could look at now when you set this trade and filled here, you could also then go through and say, well, let me know if you could add an alert, like if I have other alerts in here. Let me know if my profit and loss is greater than 85% and less than 75%. I'll want an alert on that one.
Yeah, it's really cool. Thanks for showing the whole process. There's a lot you can do on ORATS, and we got some really amazing tools. I think we have a few more minutes left, so we're ready for questions from Lex if you have any. Yeah, it was a great demo, Matt. It's some really cool tools. So thanks for showing that.
I'm in the wine room.
I've been in that wine room, Lex.
It's really a fake one, but it's
it's like that one.
Very cool. So great job, guys. I was listening, and this question just came up, and I'm probably wrong, but I want to know the answer. So with optimizing and backtesting, is it naturally more inclined to use longer dated sort of strategies as opposed to like a zero DTE, or does that not really matter? Yeah, that's a good question. What I tend to find is the shorter dated backtesting, it doesn't benefit as much from the option information, meaning there are certainly zero DTE strategies that work well, but it's very difficult to find indicators and market timing indicators that can help you through that. So in the optimizing, we like a little bit longer and more consistent, less path dependent, and we want to find strategies that move with our indicators. So our indicators are much more important in kind of mid-level length trades, Lex. Okay, that's good, because I just discovered this past year that I really suck at zero DTE trades. I'm just saying, I just those are the ones my kind of lost leaders, I think. So this is perfect for me. Let me ask one more question. Theoretical value, right? I think you guys have 3 different versions of it. I have this debate with a lot of the retail folks relative to theoretical value. I know, Matt, you and I come from the world of theoretical value and skew and all that fun stuff. What can you tell the audience about how you view theoretical value? Because I know you're big on that, right?
Yeah, I mean, absolutely. So let's just step back. So you have a mid price in the market, and then so I'll just pull up this random trade. So the mid price, the market's 87 cents at $1. That's fairly wide. Mm-hmm. And as market makers, Lex and I were them, we know what the value is of that. But just because the bid and ask are at a certain spot doesn't mean the theoretical value is there. Like, we might be moving, or market makers absolutely move the markets based on flow, so that they're if everyone's buying it, they're going to move it up. And so you want to know where it's worth. Mm-hmm. So in this one, we have a 93%, which is pretty close to the mid market here. Mm-hmm. But then we also do forecast edge, looking at the actual volatility. So we actually think that this is worth quite a bit more from forecasting and doing our distributions. These kind of agree, so I like to see those. But there's when you're valuing something, you could value it versus the other things, which is kind of a smooth line, and that's our smooth edge. Or you could value it like, how has the volatility been, and that's our forecast edge. Or how's the distribution of returns, and that's our distribution edge. So you want to look at a lot of different theoretical values, and put everything in your corner when you trade.
Sure. Yeah. And then do you notice that in the world of electronics where we are today versus when you and I were doing this with our thumb and our finger in the air trying to figure out, what value was, do you find that things get out of line theoretically very often? I'm just guessing that the 12 market makers that are left kind of whack that stuff pretty good into line, or are there some discrepancies from time to time?
Well, you're not going to find a lot of edge, like risk reversals. You used to be able to find them. You're not going to find those anymore. But, the market makers will move markets based on the flow. And if a lot of people are buying and you're like, no, that we think that's too high, or the slope is too steep, those definitely get out of whack. And market makers, they don't want to have a large position one way or the other, so they're moving the markets quite a bit.
Sure.
And so you're not going to find much edge on the smooth edge, although smooth edge is important because if you have a wide market and you're valuing, so we create our theoretical Greeks on those as well, but you still want to look at that smooth edge, but you're not going to be able to you're not going to be able to profit from that smooth edge, but you are going to be able to lose from it. So hopefully that makes sense. Like,
yeah,
that's how.
Okay. And then what, I know you guys have hundreds of indicators, proprietary indicators. Do you have a favorite that it's your go-to kind of thing?
Well, the go-to is dependent on what our data says. And so, when we go to the optimizer, the cool thing about it is it'll tell you what's the most important one. So I have we call it popular, but these are my favorites. Our forecast divided by implied. That's actually the most important one here in this particular one. Our implied, we also do an implied forecast. We do a forecast of volatility. So those are important. We look at ORATS calculates historical volatility different than close to close. So that's often a good indicator that comes up. And we do correlations and we do a lot of things, but these are definitely our favorites. One of my favorites is flat forward volatility relationships. It's too long to start talking about, but these are, when you use ORATS and you go to the optimizer and you see the popular, those are my favorite indicators.
Awesome. Okay, good. Great, guys. I appreciate it. That was awesome. As always, ORATS.com. That's ORATS.com, right? That's where they can find you guys?
Yeah, we've been doing very well. A lot of people are coming and finding value. We're having record month after record month. So come on over, be part of the fun. We have a great AI, great community, great place to learn and profit in the options market.
Perfect. All right, good, guys. Thank you much. Have a great rest of the day.
Thanks, guys.
Bye, guys.
Fuel your portfolio and earn 2% cash bonus. Log into Tradier Web. Select ACAP and choose whether you want a full or partial transfer. Select a firm you're transferring from. If it's not listed, choose Other Firm Not Listed. Choose your brokerage account type. Enter your account number and social security number. For partial transfers, specify the exact cash, stocks, or options you want to move. Once all details are complete, submit your request. Fuel your accounts and get rewards.
Molly, did you see that? Did you see that little promo? That's unbelievable.
Well done. Who did that? Was that Matt, Ruben, Louise?
You never know. You never know. They're so
marketing,
good.
marketing gurus. What a team.
That's right. So real quickly before we get to the next adventure, which is going to be our Kahoots quiz, let's put that Kahoots quiz up, or the banner there. While Molly and I are reacquainting ourselves, make sure you get that PIN number, that QR code. You can go to www.kahoot.it, and we're going to play the game. It's coming up next, but not right this second. So sign up. I want to see a lot of people sign up. Grand prize, $2,000. Second place, $500. Third place, a year of Tradier Pro. Plus, we're going to throw in a Tradier swag bag on top of that. Who knows? Maybe even
and you're throwing in one of the invisible hats you're wearing right now.
So that's funny. I noticed the invisible hat. You know why the invisible hat is invisible? Is because it's green. Okay. And if I go to the purple hat,
yeah, we're giving away that cloaking device.
I'm in the wine down wine cellar. Yeah. So what was I going to say? Oh, back to the 2%. So it's a great promotion Tradier's offering. I just want to explain it real quick. When you send us money and open up a new account, you can get up to 2% of that spend. I think it starts at a minimum of $5,000, and the most you can receive is up to $3,000. It's just free cash when you open an account with us. So remember to do that. Okay, it's a great little bonus and promotion for you folks who don't have an account yet with us at Tradier. Make sure you visit that at tradier.com. Sorry, go ahead.
Can we call that a bribe?
It's not a bribe, no. Just
Can the SEC?
No, we don't talk like that. We don't bring up those words. So all good. All right, let's show. Hold on a second, Max. Can you share my screen too, or no? Yes. Okay, we're getting people signing up here. Let's give it a couple minutes. I want to see a lot of folks. Let's do it. And when I hit the start button, we're going live. So if you are on a cell phone, make sure you're using that cell phone, because you're going to get 12 multiple choice questions. You're going to have 4 answers. One's going to be most correct. I know I've had some debates in the past that's not right. I don't believe that. Trust me, these are the right answers. I'm going to go with my gut here. I'm in the playing, but I'm not going to play. I was going to try to play and see if I could win, and not take the prize, obviously. But I think that's not fair. So I'm going to just watch. Mal, you signed up?
No, I'm rooting here. It's about these guys. So I see someone bullish on Lulu. Literally, their tag is the ticker.
Yeah. So while we're doing this, what time is it here? We got 52. At 55, we're going to start doing this. What else can I tell you? Oh, I got one for you. So I have a new show coming up, right? It's going to be starting December-ish. Okay, we're getting all the final details. It's called The Market Wind Down, and it is going to be a look back at the previous week in the markets and what was important or interesting. We will probably always have a trade idea. My co-host is Mark Phillips. The reason it's called The Wind Down is because we're going to make it a little lifestyle-y too. We found that most people really enjoy a little bit of this, a little bit of that, and not always financial. So Mark and I have a long-running, I'd say, expertise in wine collecting and wine interest, and we've traveled all over the world collecting these things. More importantly, we've drunk a lot of them too. And we will share a wine or two every time, and or a lifestyle event. You never know where you find us. We could be on the back of a big boat, or we could even be in a cool hotel, but it's going to be a cool little lifestyle and market vibe coming up soon. And that's going to be a lot of fun. So that's going to be Thursdays after the market. You'll have more details. Getting good signups here. We're going to let it keep going. We got all kinds of folks signing up. Let that go. Another announcement, right? Make sure you subscribe to hub.tradier.com. We are going to be redoing the page. There's some other good announcements coming. We have a whole educational series that's coming online. I have worked with OIC, SIBO, NASDAQ, MIAX, all these CME, all these great places to create educational content. We do it in beginner, intermediate, advanced, and expert. We will talk about everything. It'll be curated, evergreen kind of content, but you can only get it if you are a subscriber to hub.tradier.com, and it is free. That is the beauty of it. Okay, Mal, I'm out of breath. Say something.
I got to say, first of all, you and Mark are just powerhouses. So if you're just hanging out there, you will absorb, and you don't want to miss these guys because you can't normally get access to them. So touch base on that. And then also the hub, we have all the pros there. I don't know how Tradier and we did this, but we have all the pros are there. So and it's free and at your fingertips. So don't miss these opportunities. Just sometimes we don't value it because it's too easy. Yep. So when it's there and it's free and it's for you guys, so improve yourselves. Go.
And Mal, you and I do a show together too. We have we do the Lex Factor, another appeals show, and we do
and then also while we're waiting for him, write down. Sorry, go ahead. Go ahead, Lex.
No, you're going to say sorry.
No, so write down in the comments stuff you want us to chat about. So we are live and interacting with you. So if you want us to talk about something, just comment down below and let us know if you want anything for the ladies. So if you want us to unbox stocks, let us know that and we can get something going. If you guys want magazines, if you guys want, whatever it is you guys want, we have a whole team ready to deliver to you guys.
Perfect.
So let's work together and you tell us what you want to see and we'll deliver.
All right. Very good. Are you ready?
I'm so ready. I have a gaming bone in my body, so I love this.
I'm gonna hit this. I know what's gonna happen here, but I'm gonna hit the start button. I hope Max is ready for this.
Okay, let's do it.
All right, one more minute. We're getting more logins here. Let me see if we can get a couple more. I'm gonna hit that start button, so be ready.
Salty dog. I love that one. That's hilarious.
While we're getting ready to start, salty dog. That must be a Hilton Head person.
Yes, and I feel like DJ should tune us up with some music.
Yeah, right. Max is usually the music master. What's up with him?
I know what's going on. Big Mike.
Okay. All right. What do you think, Mal? Should I hit the start button? I think it's time.
I really want you to press
right on time. All right, here we go. Let's start. These are fun. Okay, here we go. Get ready. You're going to have A, B, C, D. Make sure you choose on your phone or wherever you're looking at. And I don't know if I have to do this on my own if it goes by itself. I think it does. Quiz. 1 of 12 questions. What does owning a share of stock represent?
Oh.
And you know what I didn't do? I don't think I did time. Next. Oh, there you go. So the answer is partial ownership in the company. Okay, so this goes pretty quickly, guys. So be ready to roll. Next question. Oh, no, I take that back. We don't get the next. Here's the people who were answered. I get this. We're going to always get the top 4.
Hey, Luke.
Way to go, Luke. 2 of 12. What does bullish mean in trading? Oh, look at that nice pull on there. What are you thinking? I like the little. There's a little background music.
I do. I hear that. I was wondering why I was so relaxed.
I don't know. I'm in my Zen mode right now. I think for 20 seconds, if I'm not mistaken. Expecting prices to rise is the answer. Okay. Very good. I think I hit next. Oh, let's see the scoreboard. Luke you're just by a little bit, Luke. Be tough
Roll
here.
Tide. If you served, thank you so much.
What's the main purpose of a stop loss order? To frustrate me. Sorry. That's not a fun answer. All right. Get on this. Get on this.
A lot of answers rolling in.
Yep. Okay. A, limit potential losses. The stop loss order, my least favorite order, but who's counting? All right, let's see how Luke did there. Whoa. Still pretty tight up there. Big tight up top there. That's good. You guys are doing great. All right. Roll tighter. I like it. Question 4. In options trading, what is the strike price? Should be simple. All right, there we go. Now, if you haven't figured this out, there's a premium for going fast and being accurate.
Ooh.
The price at which you can buy or sell the underlying asset, the strike price. All right. Good, good, good. Keep it rolling. Let's see how we're looking. All right, good.
Juan on the board.
Pretty close. I'd say it's pretty close. Number 5. Which of the following option strategies profits when volatility increases? We'll say generally profits, just to be safer. What do you think, Mal? You can't say yet, but I like one of those. Ooh, a little mixed bag here. Okay.
All right.
What do
That's a
you
good
think?
question. We got to save that one.
Hey, the long straddle's the answer. Let's see what happened here. Okay, still it's a tight race at the top here. I like
We've
it.
got Stevie and Kale on the board.
Yeah. What does time decay, theta,
Fave.
represent? So I threw in the Greek word for it. So I always say decay, though. Got to be honest. I never use the Greeks really.
Can we give a hint? Do you want to give a hint?
No hints, not yet. What could that one be? Loss of an option's value as expiration approaches. All that means is time's passing. It's how that option sort of wastes away to either nothingness or parity, depending on whether it's in the money or out of the money. All right, next question. Oh, hold on. Let's see how the board's going. Okay, still pretty close. I got to tell you, really, this is a barn burner. Number 7. If a trader buys an S&P 500 futures contract, they are. Okay, I got this one, I think. I did this with Max, by the way, Mal. He and I did this. You know, we competed. He missed 2. and he couldn't figure them out. So.
Oh, that's gonna kill him. That's gonna kill him.
Agreeing to buy the S&P 500 at a future date for a set price. That is correct. A is the right answer. Okay, Luke and Joe are a little pullback, a little pull away there.
Stevie,
okay, now
climbing.
these technically get harder as we go. What happens to implied volatility after a major earnings announcement? Interesting. What are we on here? Is this 10, I think? A couple more. And the answer is it typically drops after the announcement. Not before, not during, but after they announce. The implied vol typically drops. Let's see how we did there. Okay. Still close. Everyone's within reach. I love it. Number 9. What is contango in the futures market? Didn't know we were going to be doing some futures, did you?
It's my favorite dance.
All right. When long-term futures are priced higher than near-term, contango. If anyone can send me the opposite of that in an email, hello@tradier.com, I'll give you a special golf ball.
Whoa,
someone jumped up here. What? Look at that.
Ooh.
Leader in the clubhouse. Number 10, a delta neutral options position is designed to do what? Which one of these best fits what that means? I got it. I think I know this one. Going out on a limb. Molly, you're going to love the last 2 questions. We got 2 more after this. Remain unaffected by small price moves in the underlying delta neutral. You know, you could argue, well, what about vega and theta and all that kind of stuff? We're going with this one. This one's closest. I love it. All right. Let's see what happened. Wow. Look, Trade Smart and Luke gutting it out here. Let's go. Couple more. 11. What was the original former name of the Willis Tower in Chicago? What was that called?
Oh, I love this one.
There it is. The old what? That's the Willis Tower, which I still, to this day, because I'm from Chicago, never call it this by its current name, Willis Tower. I call it by the old name, which is, boom, boom, boom. Who knows this one? And as you can tell, I'm a Cubs fan, not a White Sox fan, but I still like the Sox. The Sears Tower is correct. Very good. Let's see how that played out. And one more question. Oh, my God. They're 2 points away from each other. This is going to be it.
Oh, good.
This is a hard one. Here we go.
Good.
Here it is. This is a tough one. Ready? Last question. Which U.S. state is not considered one that has official barbecue? There are 4. There might be 5 now, but there are 4 that are definitely in it. And one of these of the 4 here is not an official barbecue state. Which one is it? This is a hard one. If you don't know barbecue. Pete and I happen to know barbecue. Just saying.
Is Pete competing?
No.
Is our
He's
man
eating
competing?
He's eating barbecue.
All
Wow,
right.
good guesses, guys. But Arkansas was the right answer. That is not in the barbecue
That's
playlist.
even one.
All right, let's see what we got here. Who is the winner? Eric, third place.
Hey!
Second place, KL. That's almost like Kevin Lutheringhausen. And first place is that Joe came back from the third and went. That's amazing.
Well done, you guys. Well
All right,
done.
we got to get rolling. So here's what we're going to do. I need you to send me an email to hello@tradier.com. I'll announce it again. Each of you three, send me your emails or send me an email and tell me your place. I already know it anyway, but send it anyhow. And we will get you all those fun prizes we just talked about. All right, Mal, you ready for the next one? We're going to roll fast here. Next up, I believe, if I'm not mistaken, we have, hang on, we have Trader Daddy with Daniel. Daniel Alhante is coming on from Trader Daddy.
Trader Daddy.
That's right. I love that name, by the way. And he and I just spoke together fairly recently. So let's get him out here. I'm not gonna take his time introducing. I'm gonna let him do that. So, Daniel, you ready? I hope. I see you in the green room. Let's do it, man.
Hey guys, I know you just came off of your very interactive game. Like Lex said, a little bit more new to Tradier, the Tradier family. So just a really quick intro about myself, and then we're going to kind of just go a little bit more back towards the education part of this. My name's Daniel. I own a education company called Trader Daddy in New York City. It's the top trading academy in New York City. I have a premium group of 100 people or so, and we meet every night to strategize and execute our trades together. So I have just a couple of examples that I wanted to share my screen just so you can kind of see what's going on, which I'll do now. I'll just do the whole screen just so I don't mess anything up. And I do this every night. Okay, so we should be able. All right, we all good? I think you guys should be able to see my screen. If you can't see my screen, somebody let me know, or else I'll just keep going like this. So what we have here is what I like to call a Trader Daddy triangle. And what I am is a breakout swing trader. I am going from level to level. And we need there to be some sort of confirmation that price is breaking, right? How do we know that price can get from this level to this level, right? So I sort of been backtesting for a long time this concept of needing to break this trend line, what I end up calling a Trader Daddy triangle. So I want to go back even a little further just so you can see just sort of how this ends up happening. This is the entire thing of Archer. I'm just going to go back a little bit farther just so you can see it. We're going to start all the way back here. And then I'm going to show you a current one because obviously it's easy to go back in time and show you something. So I'm going to show you a recent one, Apple, after this. But just to show you kind of what happens here, I need a few things to happen for Archer to get from the breakout point all the way up to this point and what to do along the way. And you only have 25 minutes, so just stay with me, right? The TD triangle needs 3 points. Do we have 3 points? We do. 1, 2, and here is 3, and you'll see it break up at that third point. We need SSS. What's SSS? Easy, super strong support. That's what this is, right? RRR is really rigid resistance, just something you can remember. Number 3, higher lows are in the approach to the third point. As we get up to this third point, do we have higher lows? Okay. So we have higher lows coming up to that third point. Number 4, it needs to be above at least one moving average before the breakout. Okay, so as we get up here, it needs to be at least above this 50 moving average or this pink 20 moving average. I use simple moving averages, so nothing to get too crazy about. And then we need buying volume on the bottom. We need to see some big green volume bars coming up to really make it, you know, to get things going here. Or right, that's a major confirmation. Does it work on, a lot of people skip this. It's probably the thing that people skip the absolute most throughout teaching trading, you know, for the last 11 or 12 years. It's people do not check on multiple time frames, and you're really disabling yourself or handicapping yourself, you know, just going forward, because people will just sit and stare at one time frame for a really long time. Now, this also works on the weekly. I'll go back and show you, and on the 4 hour as well. So we have 3. It needs to be a stock that has momentum. If you do not know what Archer is, it is an aviation stock, a drone stock, what they call the future of aviation taxis, kind of going from here to there, these little 15-minute rides. You're going to see these in the 2030s a lot. So aviation, does this have momentum? Oh, hell yeah, it does. Going back, look at this thing from $3 all the way up to about 10. And then we start to come down into what I call structure. This comes down, and then we can make our Trader Daddy triangle to then break it back up again to our RRR, or really rigid resistance, or really just from level to level. Now, if we get a stock that has momentum, we know that's number 7. It needs to break out of the line to confirm the breakout. Now, if we are going to have this breakout, what does that even look like? So I'm just going to show you, and now it would be the time to pay attention, because you're going to see what that will look like. Watch. I'm going to do this in a couple of parts. Watch. All of a sudden, there it is, right? We get one wick that comes out and starts to break. It's hard to see on the bottom, but I'll show you a little bit afterwards. That you have volume on the bottom starting to rise. Okay, you have higher lows coming up on approach. We are now above, look, the 20 and the 50 moving average. We're ready to rock and get out of this structure finally. Now, what is going to happen? If we are going to break this, what do we need to look for? It needs a breakout. Here's the key. Number 9 needs a breakout on a news or rumor event. Okay, that is going to be huge. So they came out, I think they got a price target, and they also had a product that passed a prototype phase right around the same time as this. So a price target, I think they got around 15 or 16, and they had a couple of those on approach too. But their prototype also worked, and they had another price target on top of that. So now we're all set. As long as there's no craziness, you know, geopolitically or the rest of the stock market, this should work. 9 out of 10 times this should break, right? So what was going to happen here? So the next thing is this line here. This is our inline. Our inline is our first resistance up here. This thing breaks, we're going. And where are we going? We're going to go to our second level, which is right here. And I'll even show you what that looks like. This will be level number 2, which will be right around here. Okay, that's called halfway up the triangle. A lot of times these go halfway and get a little confused. You need more volume to confirm it will keep going up. Not a problem if you want to play options up to this point, kind of rinse your hands of it and move on. Some, nice to buy calls and get, some good return on this. Cool. So now let's see what happens. Here's our break. Right? Perfect. We see day 1, huge break, and then you see this huge volume, 4 days of huge volume, one after the other after the other. Once this breaks right here, we're good to go. You can enter here. Sometimes I'll enter right here as, a preliminary. If it fails, I'll just cut it real quick. If it goes, way too far under this blue line right here, I'll just cut that, move on to the next one. No big deal. But if we do get up to here, right, and I have, let's say, 10 contracts or even 2 contracts, whatever, I'm going to cut half of those, and I am going to then keep what I call runners, going further up. Then I am going to, at this point, cut all of my runners except for 1 if I have many. But let's say I only have 2 or 3. If I have 3, I'm going to cut 2 of these and then just have my runner get there. Now, let's see what happens after this. Okay, boom, goes right back down. So the whole thing right here is just to get that back up to this area and then be out. Now, a lot of people will say, well, how lucrative can this be just to play a breakout from, $10 to $13? It doesn't seem like a lot. Well, watch. If I do, let's say, it's around the same price right now, currently, and if I did a $12 call for the December 19s, and it goes, let's say, back up to about 13, that is going to be 13 to 14 is about 300 to 400% just on that run. And if it gets halfway to about 12, we're looking somewhere between 175 to 200% as an estimate. And now I get it. You're like, how much could this cost? It's only $53. I've done way stupider things with $53. So just saying. Now, I understand. Where's our time decay? Where's what happens if this takes longer? Okay, I'll give you some time decay. There we go. Happy some time decay, right? If it still gets to 12, we're still over 150%. If we get to 13, 250, and 14, 392. And if it just absolutely takes off, we're going. So this is something where it doesn't cost that much to buy a bunch of these calls, because now you have a bunch of them as you're going back up. You can now start to take profit and lock that in. The rest of your runners are just to see what could possibly happen. Now, I want to show you guys what Archer now looks like. So just to show you what Archer looks like currently, let me just move this out of the way. So we already went through those 10, and we're now back at this support again. You can see every time I call this a power of three times back up to resistance. I think we can get there a fourth time, setting itself up. But again, I find it a lot easier to play it off of a structural break like this triangle. Now, obviously, it's easy to go back in time and just show people something like that, and whatever. I could do that with anything, right? So let's just show you something that's happening right now that could be useful for you. Let's look at Apple. Okay. Now, the thing with Apple is, I already have this marked up a little bit, but just to kind of catch you guys up a little bit, what's happening with Apple. And I have some, no, all right. I've memorized it. So if we have a 1 year resistance here, now I don't know how well you guys know price structure for Apple, but whenever Apple has gone through a 1 year resistance like this, it has always swung up to the next level. This is called level trading. Now, how do I know it's going to get to this level, or how can I forecast a high probability way that this can get there? Well, it's called a measured move. You look back at previous tops, and you can see these previous tops going all the way back from here. You just draw your trend line. I like dotted lines, or whatever. I switch the lines every couple of months just to keep it current. And then I swing that up here. What about this line? Where does this line come from? That's the 200 moving average to the most recent resistance, or this most recent breakup. Now I take that and I put that on top. And then this cross section here, I then just make a general box for that. So just move this out of the way real quick, and let me show you what we can do now. After a big resistance like that, we also need some macro confirmations, right? So number one, we have iPhone sales, 17 better than the 16. And that's in China too, not just the US. We have a new US-China policy that's favorable. That's great. Okay. Number three, we have a year-long resistance break. And that's to a pretty good conservative measured move of 285. And not only that, we have a new 2026. We're pretty sure that this new CEO is very favorable. New young engineer CEO to replace Tim Cook. right? So a lot of, they're going to be releasing a lot more products. So then you have to ask yourself, right? Do you think that Apple has a better chance to get from 270 to 285 or 270 to 230? And then it should just become pretty obvious at that point. You only want to enter trades when you have that obvious gut feeling. So now we're entering what's called another structure, right? These are kind of how the Trader Daddy triangles start. We broke resistance. Now we might trail down and sideways for a bit. And so if we get back down to this level, now we can start to move back up. Now, how long am I going to give myself for this to happen? I'm going to go with a December and a January contract just to make sure that within the next 6 weeks or so, that it could really get here, right? I just need my 1 day in court with Apple. It'll have its day where it just, a couple of days in a row, we'll see it just move on up. It'll get there, and I'm going to get out of these calls, and I'm going to keep runners to see how far we can get. I have a feeling we're going to get to 300, no problem. So again, we go back to option. I do this on Tradier a lot too, just to get some calculations, but just out of habit right now, just doing it on option strat. But these, they have these everywhere. It's just an estimation, just to show you guys what's possible here. So we have Apple, and we have a December 19. We can start with that, right? If we do a $300 call out of the money, it's about $100, right? Nothing too crazy. And if we get to, what did we say? 285. That's 285. That's 275%. But Trader Daddy, what happened to the decay? What happens to the what happens if it takes a little bit? Fine, I'll give you guys what's favorable. Whatever. Let's say Friday of, right before Thanksgiving. 285 is still over 100%. Okay, and if I add on to those, then I'm going to be making a lot more, right? Let's go back. If I enter here because I don't want to miss a swing play, right? We have. The market in general had a big, comeback, pullback the last couple of days. And let's say, we just want to enter this. I can start entering it with just a beginner contract. I'm not going to get into sizing and positioning right now because I might be running out of time. 25 minutes is not a lot of time for me. As you can probably tell, I can talk on and on and on for a while. I do this every night with my premium group. They're pretty used to it. But as we go back down this structure, this trend line, and then I see, oh, look, we have big volume coming in. I'll show you a path just to get a visualization. Something like, hold on a second, we need to make it kind of like this. It'll be something like that. And then there we go. Make sense? All right, so just so you kind of see what just happened, or maybe I can anticipate. Even if it goes back down, I'll add some more contracts right there. And as it breaks and big volume comes in, I'll add some more to ensure that I'm really getting a good bang for my buck at that point. And if you guys need some insurance on this, I know people want insurance. You can put a stop loss. If it gets below 258, you can just scrap the trade, or hear me out, we could go with a near-term put for insurance. We just buy straight up, like, a whatever the week is, a 7, a 14, a 21 for November, right? Let's just try it out, see what happens. Nothing too crazy. If we do a November 14 put, right? Apple has crazy volume. We don't have to always go for the third Friday. On Archer, we would have to, but not for Apple. And we do a out of the money 250 put. It's only $23. Let's go maybe for 255. Now, $43, not a lot of money if we have, let's say 5 or 6 or 10 contracts for December and January. But let's just show you what happens here. If all of a sudden Apple just falls out of the sky, there's your protection. See? If we drop 5 or 6%, there's your protection. So there's a way to structure this where it makes sense if you have an idea of where it's going. Oh, and I forgot to add, Apple had great earnings, right? They had really good earnings. So unless something crazy happens, I know people got scared with Bitcoin going under 100,000 yesterday, but unless something crazy happens, it should be moving towards measured move. And if you don't want that risk, you can throw in a put for protection here, or you can just scrap the trade entirely if it gets too low, under 258 or so. Does anyone have any questions so far? No? Okay. So for Apple is, I'll just go through the ones that I think are the most, I don't really know how to look back actually if there are questions, but hold on a second, let me just see something. Is there questions? No, I can't see YouTube right now, so I'm not exactly sure, but I'll just keep going until someone tells me to stop. The stocks I like the most right now are the stronger stocks, the bigger stocks, because I think they can weather any type of storm as we get closer to the year's end. So another one that I'm looking at is NVIDIA. I learned to say it the right way. I've been saying it wrong for a few years. NVIDIA. And these are really awesome to play option calls on because there's a lot of drawings here. Don't get too freaked out. It's nothing too crazy here. I draw on this a lot. But the one thing that I'm looking at going into the future here is that with NVIDIA, I'm going to show you something what happened similar to how I did Archer. I'm guessing I have some time to do that, I hope. Start new. All right, let's flash back. I thought that NVIDIA was breaking right here, okay? I thought we were going straight up to 200. Wouldn't surprise anyone, but that didn't happen. So what did I have to do? I started with what I call a flyer contract. 1 or 2 contracts right above, just so I don't miss the move. But watch what happened. Boom, I got taken right down. So what do? I just step back and reassess for a while and don't anything crazy. Now, usually what ends up happening is NVIDIA will go down and sideways until some big announcement. They have big announcements all the time. And guess what? Their conference is going to be, or just happened. So I knew that was coming up into the future. Watch, we're going to keep going sideways. At this point, I'm more confident than ever because we kept this 50 moving average line. Sure, some heart palpitations during these wicks over here, but if you're going to do this, you got to weather the storm. This isn't for everyone, but you got to weather the storm. You got to stick with your plan. And my plan is this is getting to 200. So what happened? There it is. There's your big volume. You see it right here. There's your breakout right up to 200. Cool. Out of the trade. Now I have runners going all the way up. So from here, right, start to get rid of the runners and now start to plan another trade. Okay. If NVIDIA gets down to 200, I think we can then swing back up to 212 or even 220 right here. So again, this is another measured move. Same thing as I did with Archer and same thing I did with Apple. It could even go a little bit higher. The next measured move after this, I'd have to make another one. But think about this, right? NVIDIA, it keeps getting, and I can't actually believe this, $350 price targets. Think about that. The stock is 200, $350 price targets, right? And it keeps getting them, not one, multiple. So if this stock can get from 200 back up to 220, I'm not asking for a lot. I know it's 5 trillion. It will be 10 trillion at some point. Economies of scale. Big companies keep getting bigger by buying small companies and innovating, right? More investment coming in. Now, this is where we are. Now, I have an idea that because of overnight, we went down to about 192 or so, and then we came right back. It's going to do something similar to this. And so as we go forward, now we're in present day, okay? I have an idea that this will keep going, or what will end up happening is it will do something like this. And then we get closer in this little rectangle, and then we pop out again, okay? And then we keep The 20 moving average will come up, sweep under it for support. Okay, letting us know that there is a safety net right below it. That 20 moving average is going to sweep right up. And then we can then swing trade that up to our next level. And if you're wondering how much money can that possibly be, well, I'll gladly show you again, right? And that would be NVIDIA. And again, I'm going to do a December and a January. Going to just pick December first because it just will look a little bit better numbers wise. And I do a January just in case I have to wait a little longer for it to materialize. So now I did the 235s. I think have the most volume, has a good open interest. This is me just shopping around what has the most volume, most open interest. And in Tradier Pro, obviously you guys can make the dashboard however you want. I just did that. But sometimes just habits of just, shopping around myself. Wow, 77,000 open interest here. And the 240s are 343 and 20,000. I'm going to do the 235s and stick with those. A little bit out of the money. Good action on those, right? Volume plus open interest equals the word action. We need action or this doesn't work at all. Now, as we go and check this out, we said what? It can get to what price? 212, maybe even higher. Why 212 though? Because that's its last time it got up there. That's the high, 212.80 or so. So if we go back to 212, we will see that, hey, look, this is 212, a little bit beyond that. It's about 100% or so for a 5.8% move. I have a feeling it's going to be even more than that because implied volatility always spikes when NVIDIA runs. And what happens when implied volatility spikes? Vega spikes and everything spikes. Watch. Boom. I don't think it's going to get that high, but you just for effect, it just, everything gets bigger. So we get to 212, we'll be at least at 100% or so. And if I keep buying more, hey, a double is a double. I'll take a double any day. So we don't need to knock out 500 to 1,000% trades all the time. But this is a nice one. You have security in this. And again, if you're nervous, you can take near-term insurance puts, if you are feeling skittish about the overall market. So if it dumps, you will get a lot of your money back. So, I think Apple and NVIDIA for right now are really good. And, at least strong names. The president's going to be talking and about, I think at some point, maybe he is right now, about the economy. He had some pretty strong words this morning that the economy is going to be back. We had some profit taking yesterday. People got skittish about Bitcoin. But until we really roll over, we should be fine, right? Where's SPY right now? We should be fine. So overall, those are my two that I like. And I always look for ones like Archer, going from overall market structure to popular industry to then stock, what is the best stock? And then what is the best stock to play with options? From there, that is how we do it every single time. Okay. Now, again, we have a really strong day today. That 20 moving average on SPY is just really helping us out. Great guideline. So again, we can get back up to maybe 694. But if we do, be careful. This likes to be choppy now, and when it gets up top. So don't be taking out huge positions when SPY is at its absolute tippy top of this huge channel that, as you can see, went all the way back to I don't know, like June, May, something like that, after the April dip. So we're this huge channel. Again, it's good to be entering when SPY is lower, bouncing up instead of, at the top here. And what if we get above this channel, it would get to here. So that's where our next level could be.
I'm loving the jargon you threw in there. We've got tippy top, heart palpitations. It's kind of covering the bases. I'm loving this.
Yeah.
It's a great program. Wow.
Yeah, I do this every night for like an hour and a half with my group. Shout out to team Trader Daddy Premium that is on here right now. Cool. We really take it to another level every night. And we develop our own watch list, we develop our own things every night, and then we really get into the structure of how we're setting up these trades. So yeah.
And to Craig, yeah, so really well explained, and that's so if you guys know, that's Trading View, and so just explain where we can find you and reach you, so that the world knows.
Yeah, super simple, right, guys? You can just go to Google and type in Trader Daddy NYC, and you can find almost everything you want about me. You'll see my website, which is thetraderdaddy.com. And you can contact me through my website. It will go to my email automatically. There's articles that have been written about our group in Business Insider. You can read those. Usually just going to Google and putting in Trader Daddy, you can basically see almost everything about us here in New York City.
And if you see two girls talking to Kardashians, you've hit the wrong website, right? That's Caller Daddy. Okay,
yeah, you have to be careful when you start throwing in daddy and .com. So if you're still interested in the trading aspect of all of that, you can go to thetraderdaddy.com and we can get that part at least taken care of.
Love it.
You have the best name of the day, though.
Yeah, that's good.
We voted on it, so that's good to hear.
I love it. Daniel, thanks so much for that. That was awesome. Really great analysis. And you also have, I think you said this, presence on Discord or Reddit. You have groups there, one or the other?
So
or both?
I have let me see if I have it up. Shout out to the WAP group. I have a group that looks like this, and it looks like Discord, but it's in WAP. So our premium group is all here. As soon as you guys are in, you'll be right in it. It's its own app on WAP, and we have everything right here. I live in this 95% of my day. I live in this all day.
Got it.
Yeah, and if you haven't heard of WAP, don't worry. Those WAP.com for all of us who was born before the personal computers.
It's like school.com. It's a place for communities. It's growing fast though. So there's a lot of us on there, but yeah, we can customize our own apps on there. So when we put our own, we're making one for volume that comes in for breaking certain levels, and then you'll get an alert to your phone when that's happening. So you don't have to just stay and be glued to the chat all day. So we get to really customize that group a lot more than anything else.
Awesome. Great. Well, that's awesome. So traderdaddy.com, right?
thetraderdaddy.com. Or you can just Google Trader Daddy and New York City, and you'll get there rather quickly, and you'll find me.
All right, man. Thanks, Daniel, for coming on. We really loved it. So we'll
appreciate
talk,
it
next week. All right, man.
Thank you so much for having me.
Daniel.
You bet. All right, Mal. Moving right along. So I'm going to see if you can pronounce this next name. I know it. It's Ovtloir, but kind of like Bulgari, right?
I feel like yeah. So this is his actual name. I feel like Elon named him.
Yeah, that's right. Or it's the Roman V. The next group, Christopher and Mahesh from Outlier, are going to go, and there's been a lot of chatter in the comments about these guys. Man, they're bringing the audience. So here we go. Bring them on, and let's get busy, guys.
Go.
Hey, thanks for having us, Mahesh. I'm glad we're taking over.
Hey, thanks for all the love that our members are showing. And I can promise this is not by design. It just, everybody's excited. So this is not like planned.
Well, I can tell you what they're excited about, Mahesh. They're excited about this chart that I'm going to put up on the screen right now. They're excited about this plan. Trying to hit the present button. There it goes. Okay. They're excited about this plan right here. This plan right here is changing lives. Like legitimately, this plan is changing lives right here. So we have a team of over 20 PhDs, data scientists, actuaries who helped us develop the buy and sell signals that went into this plan right here. And this plan backtested a 1,140% return in just 5 years. That's taking a $100,000 account and making it $1.1 million in 5 years. What do you think about that, Mahesh? That sounds pretty good, right?
I feel great, and I just want to add one more thing to the introduction. Those who do not know us, we are a team of basically what Chris explained: team of math nerds, people building tech, building PhDs who have experience in data, investment, trading, and all that. So we are not just building this unique data, strategies, analytics. This is just a little bit part of what you are going to show here. We have like full-fledged platform with the ecosystem that we are building of trader. Like we have this big trading community where people help each other. We love data. So it's not like, hey, let me get into this trade because my gut says so. So because of our background, we try to we try to present something when it is like tested, back tested, making sure it's not just our gut feeling. So that's a big part of what we are building. Of course, we are doing so many different things within our community, and it's growing like crazy every day. But I'll not waste time on that. Let's get into this plan.
Well, we only got 25 minutes here, Mahesh. And so what I wanted to do is I wanted to go through our plan right here. Now, we go through this plan every single day, live on YouTube twice a day. The easiest way to find what we're talking about is just go into YouTube, type Outlier, and you're going to find my smiling face right there. And then you're going to find our channel. Either one is going to get you to these live streams. And we go over this every single day. And the greatest part about this is that we are entering into the US Investing Championship in 2026 with as many outliers as we can along with us. And we're going to overwhelm the US Investing Championship, just like I'd like them to overwhelm the chat right now by putting #Outlier in the chat. So let's start at the top, right? We've got 4 main plans that we focus on every day in our trading room. And they go by plans M, A, ETF, and sit in cash and don't F up your portfolio, right? That is the name that I am a firm believer on, because one of the easiest things that you can do is overtrade your account and F up your portfolio really, really good. So plans M and A are our most aggressive plans. And they're when the market is really working for you. When you've got the market that's bullish, you've got the sectors that are bullish, you've got the stock that's bullish, and everything is just working together in sync. But that's not where we're at today. Today, we're not there. Right now, we're sitting in plan ETF. And if we get an exit signal there, we're going to go to plan sit in cash and don't F up. What's great about this is we have a 360-degree, 365-day plan so that we are always taking advantage of what the opportunities are given to us. So let's start at the top. What in the wide world of sports is plan ETF? So over the summer, we hired a quant intern who had this idea. This was totally on his own. He came up with this idea. He listened to Vibha Jha, who was one of the U.S. investing champions in the last couple of years. Like I say, one of the things that we're going to do next year for 2026. And he came up with this plan and helped us develop one of the greatest plans that I've ever come across. And so plan ETF starts like this. First, you need an uptrend in the market. Now you can trade either the QQQs, the NASDAQ ETF, or you could trade the SPY, the S&P 500 ETF. So we're going to go through this together step by step, and I'm going to show you exactly how it's done. First, an uptrend in Qs and an uptrend in SPY. You can trade either one, either or, but let's go through and look at both of those two. So I've got the S&P pulled up here in Outlier, and you can see the green overlay right there is a bullish trend. We make it far too easy to see which direction the trend is. And right now, it is a bullish trend. Now, how do we designate a bullish trend? It's using the 10-period EMA, the 20-period EMA, and the 50-period EMA. That's it. Just those 3 trend lines, right? There's no gut feelings. There's no hoping and praying and profit targets. It is just math. So your 10-period EMA, that is your short-term moving average. Your 20-period EMA is your intermediate-term moving average. And your 50-period EMA, that is your long-term moving average. Now, when you get your short-term, your long-term, and your intermediate-term all together, all in sync, that's clearly the direction of the market. So we can confidently, with unequivocal backtests, show the 10/20 price over 50 is a bullish trend. Now, we make it green. So like I say, we make it far too easy for you. So that's the S&P. That's bullish. That's the Qs. That's bullish. Now, let me zoom out just a little bit and you'll see what it looks like elsewise. So when it is a bearish trend, we highlight it red. Or when it's a sideways trend, we highlight it white. It just really is that simple. So we've established we have a uptrend in both Qs and SPY right now. Next, we look to see if the SPY has a buy signal or the Qs have a buy signal. So in Outlier, I've got my favorites just to be the market indices, but you could add literally any stock you wanted over to the favorites right here. And I can see one click glance, buy. There's no more trust me bros, right? Like Mr. Mangine just put in the chat right there. There's no more trust me bros. Everything that we do at Outlier is data backed, science backed. So looking at this, we've got a buy signal here and a buy signal here. Now you're probably asking yourself, well, how do we generate these buy signals? What we do is we ingest a ton of data from price to news to investor sentiment. And what it does is it collaborates all that together to show you when investors are acting irrationally greedy or irrationally fearful and by how much. And that allows you to get into the stock before the outlier move happens. So we're still sitting on buy signals on both the Qs and the SPY right now. So if we go to the next step right here, we talked about the fear and greed. Let's go look at the fear and greed for both the Qs and the SPY.
And now, by the way, this is a unique indicator to us. As I said, we do have our own unique data that we have built over time with the help of our PhDs and the team here. So some of this data is not you are not going to find anywhere else. So just want to point it out.
Exactly. And it's really fun too when you see like the CNN fear and greed index. I looked at it yesterday and it was in fearful at 40 and ours is up here greedy at 71, right? Seeing those divergences there was really interesting. But what we see right now is the market getting more and more greedy and it's peaking over 70. The SPY is at 71.79 and the QQQ is at 70.07. Now, one thing that we found, and this makes total sense if you think about it, is if we get over 70 on the market, trades get a lot harder to be profitable from the long side. Imagine, right? If everybody's greedy and everybody's already bought, how many more people are left to buy? Well, probably not that many. But how many people can turn from buyers to sellers very, very quickly? A lot of people. So anytime it peaks over, go ahead, Mahesh.
That's a high probability.
Exactly. So anytime it gets over 70, that's where we want to be taking a more defensive play. And playing ETF that we're going through right now is our defensive play if it's not sitting in cash and not effing up our portfolio. And so looking at this, both of those two are over 70 on the fear and greed. So what that means is if you aren't already in plan ETF, the trade to make is playing sit in cash and don't F up. Now, what's great about this plan sit in cash and don't F up is you can buy shares of SGov. SGov is the ultra short-term treasury bonds, the 0 to 3 month treasury bonds. And right now it's yielding about 4.3% per year. So basically you're earning money while doing nothing. And 4.3% APY is roughly half of what the market yields when you're just buying the SPY outright. So having no risk and getting nearly half the returns of the market, that's a great place to hold cash when you don't have a trade. Now, I'm in plan ETF right now. In fact, in our model portfolio, I'm up about $5,700 in this particular trade right here, right? Now, last week, I went to Disney World and it was fantastic. Mahesh, I stayed at the most expensive resort in the most expensive room. I had a view right out my patio, which was right on the water, of the Cinderella Castle in the background. And it was amazing. You know what the best part about that was, Mahesh?
Yeah.
I made more money on plan ETF not doing a damn thing than it costs to have the most expensive room at the most expensive hotel at Disney World.
And this is something I tell everybody: the trading should not be stressful. Trading should be easy, but most of us, I mean, I have done that too in past, made trading stressful, made trading something where I have to check, hey, whether the candle is going up or down. I'm stressed out, losing money left and right. But this is like a great thing that we came up with. And you know, it's not just you, me. Like we have thousands of other members who swear by it. So.
Oh, yeah. And in fact, those of you who are watching live right now, put in the chat, share your experiences in the chat. I would love to hear from you. And hopefully we can highlight a handful of these comments as well. But plan ETF is one of the easiest plans that we've ever traded ever. And like I say, very profitable if you know what you're looking for in order to get into it. So let's talk about the next step here. Let's say that you got through this part so far. The Qs and the SPY are both under 70 on their fear and greed heat map. We want to find them in the value zone. Now, what is the value zone? So the value zone we defined as 2 ATR levels above the 20 period EMA. So let me show you what this looks like on a chart. So I only use a handful of indicators, the 10 over 20, price over 50, and then the ATR. Now, what is ATR? ATR, this goes way back. The turtle traders were doing this back in the 80s. One of my mentors, Larry Height, one of the original market wizards, I've worked with 5 market wizards, by the way. He was using this back in the 60s. Now, ATR, what it does is it calculates your average true range over, in this case, 14 periods by default. So how volatile is the stock? Not up, not down, but how much movement are we seeing within the stock? So 2 ATRs is actually super easy. You can add this onto any chart for free. Currently, it's 867. So if I look at the Qs and I say, okay, current price is 626.25, 626.25, and then I add 867, that's 1 ATR above, and then I do it again, that's 2 ATRs above. So if price is between the current price, 626.25, and 643.59, that's still within the value zone. Now, that can be a bit complicated, so we actually made an indicator. It's 100% free inside of Outlier, and it lights up green. It is the easiest thing to see. Are we in the value zone? Yes. Okay, sick. I can get on with that. So if the market works cooperating with the fear and greed, and then you see it within the value zone, you could continue on with the next step here. Any order blocks. We like to call them outlier blocks here at Outlier. Now, what is an outlier block? Right. I want to show a couple examples. I want to go to Tesla to show what this is, because Tesla, Mahesh, you remember this was the end of last year. Tesla just had this huge 122% up move right here. It was like Tesla could not go down. Do you remember that?
Yeah, no, I definitely remember that.
Yeah, I mean, it was one of those times like I like to say that all stocks are bad, and every once in a while they act right. Tesla was acting really good for a hot minute, and then it started acting bad again. What this shows you right here is what we call the market cycle. The market cycle is a stage 1 sideways trend, a stage 2 uptrend. Stage 3 is when the moving averages that we talked about start crossing back over, and stage 4 is the trip back down. Your job as a trader is to identify when it is in stage 2 and then buy the mess out of it. Buy the mess out of it in the meantime. But looking at Tesla, these investors, they had no choice. If they wanted to buy Tesla, they had no choice but to buy it right here. It was an impossibility to buy it at any other price. So they bought the mess out of it. They bought as much as they possibly could. But as price started to go down, those investors were riding down the wall of worry, the slope of hope, I should say. The wall of worry is on the way up, the slope of hope. And they have all these emotions going through their mind. I have a slide deck for this, by the way. And this is what we go over twice a day, every day on the Outlier channels. This is the market cycle, and it's really fun. Mahesh, when's the last time you went to the optometrist?
It's been a while, but
it's been too long is what you're saying. Okay, Mahesh, last time you were there, they probably did a little eye exam test. They're flipping through different lenses and stuff. Now, I go all the time because, not only do I have 40% of my hair, but I also have 4 eyes with my glasses. So looking at this, is it better 1 or 2? Let me scoot this over a little bit. Which is different? 1 or 2? 1 or 2? They're the same.
It's the same.
It's the same, right?
Yeah.
So those investors that were full of belief, thrill, and euphoria, who had no choice to except pay this price up here, were stuck. And they watched as it went down with the complacency, denial, panic, capitulation, anger, disbelief, and depression. And finally, after an entire calendar year, Tesla came back to this level. And so what outlier blocks measure is how much overhead resistance or support a stock has. Now, you can get exactly your charts to set up exactly the same as mine over outlier.com. In the Discord, we have all the links for you right there.
Yeah, and one thing I want to mention that is that once people join, we are putting together all this training for all the new members to make it easier for them to, hey, this is how I should use, this is what should I set up. So that is kind of very important for us. So it's not just, hey, let's build a great platform, let's build great data. We realize that, including myself, everybody need some hand holding, some training. So we are definitely focusing a lot on that too. So it's not, we are not just leaving you out to do it by yourself.
That's right. And this is actually one of the lessons that we're going to talk about in Outlier University. Our Bravo class of Outlier University starts next week. Now, I mentioned earlier I was mentored by 5 of the market wizards, but I've been trading for 16 years. I've twice been awarded top 100 people in finance. I've made tons of money in the market, and I show exactly everything that I've ever learned in the market for free on YouTube and Outlier University. And other people charge tens of thousands of dollars to do exactly what we give away for free, because our goal is to make you successful in the market. That is our goal.
Yeah, and yeah, many people ask, hey, how much we charge for university is free. See, we have one annual pass you can think of. We provide all of these things. We don't charge anything for that because we believe that we are growing because a lot of members are joining us. So it's not like, hey, we are not growing. We are growing very fast, and we have thousands of members joining us, and we are able to offer these courses without any additional cost, so that we can give back to our community, give back to our members, because we realize that people are tired of spending money here and there, throwing money. They don't know it's gonna work or not. So we're gonna, work hard to provide something that works. And in the end, of course, we are charging. So that's not, but it's very nominal yearly pass.
It's 82 cents a day. Literally 82 cents a day gets you full access into the platform, full access into the Discord, full access into Outlier University, full access into all the indicators, full access into the buy and sell signals, literally everything. There are no upcharges. It is one price, 82 cents a day. So real quick, let me finish with Plan ETF. We hadn't got that far yet. We're running out of time. So the outlier blocks right here. This measures these buyers right here. They're stuck, right? They are so pissed. They cannot wait to get out at break even. And it finally took, first, it took $1 billion of purchases by Elon to get to this point. And then it took nearly 30 candles churning through all those sell orders to finally push past this overhead resistance right here. Now, the reason I wanted to bring this up is we can look over on the Qs and we can see a small order block developing, right? Now, let's say on Tesla, you've been holding it for a year. You're finally able to get out break even. You're taking that sell. But if you're like 3 or 4 days, you're probably not even noticing. You're like, oh, okay, no big deal. So what we found was let me find the slide real quick, a limit of 30 days. 30 days. If it's at least 30 calendar days old, that's when we're going to pay attention to it. If it's not 30 days old, we can ignore it. Now, here's the exciting part about this, right? You can buy either QQQ and get no leverage, which is totally fine. Or you can apply this to TQQQ, or in this case, SPXL as well, either one. But you need to go when it's set up. Not today, because it's not set up today. You need to be able to have the access to the outlier and see exactly what we're talking about in order to find this out. Now, you would buy shares of TQQQ to get the triple leverage. And that's what everybody in the chat is so excited about, right? There's like Stocky Locky. I'm reading the chat. I can't click the chat to show this, but the proof is in the data. I saw somebody said they had like an 11% gain in just a handful of days. There it is. Yokoshita says up 11% on TQQQ since mid-September, right? 11% in, let's call it, 6 weeks or so. That's not normal. What we do at Outlier is not normal. We are trying to make sure you are successful. And when you hear a financial advisor, like a friend of mine told me, his financial advisor said, get used to getting 6% annual returns. 6% annual returns? Are you kidding me? That is unbelievably pathetic. But yet that's what the financial advisors want you to be comfortable with. They will scare you into saying, I can't do any better than 6%. 6% is going to be all I could ever do. A lot of our outliers, they can pull 6% in a handful of days. For me personally, in May was one of the greatest trading periods I ever had. And it was 5 days long. Mahesh, I grew my account by over 30% in 5 calendar days. And in those 5 calendar days, I took as much money out of the market as I needed to pay off my wife's student loans. And then I bought myself a fancy Batman watch as well. That is the difference with Outlier. One of the chat says right here, I don't even get out of bed for 6%. We don't want you to be discouraged from being in the market. We want to give you everything you need to be successful in the market. Now, one thing you're going to need is where you get out, right? We talked about where to get in. Well, where do you get out? You need a sell signal from Outlier, or you look for the 10-20 bearish cross, right? The bearish cross on the moving averages that we talked about earlier. Looking for the 30-day order block to be hit, the same order block that we're talking about earlier. This one right here is only a handful of days old, so we're going to ignore it. And then lastly, if it gets to a point where it's 3 ATRs over the 20 EMA, not only is that out of the value zone, but that is in the big profit zone right up here. If it gets 3 ATRs above that point, that would also be a sell signal. And then, of course, if it pops back down, you could re-enter once it's back in the value zone.
And one thing I want to mention, these rules that you're sharing, these are not like, hey, my gut said, let's come up with these rules. Like our team actually worked really hard to come up with these criteria. So not just, we worked with Scott on that and he was great. And in the back end also, like the same thing, right? With our team, we come up with, we backtest the data. We keep on testing, so that we can trust our own data before we can offer it to our members. So that's the whole reason behind building Outlier, is that I can trust my own data and I can use my own data to trade, to invest. And if I'm comfortable, I'm happy to offer that to the other members of Outlier community, because then I can sleep okay.
Yeah,
so that's
absolutely.
The whole motivation behind it.
And one of the things that I've learned over 16 years of trading is you want to get to the point where trading is effortless. I like to say in my live streams all the time, when you walk into a bank and you get a CD and they're so stoked to tell you, Mahesh, we've got a brand new CD special, 17 months, 2.37% APY. All you got to do is sign right here. You sign, you walk out the door. 17 months later, you collect $2.37 on every $100 you invested, right? Trading should be that effortless, where you walk in, you take your trades, you come back a couple days later when you get your exit signal, and you walk back out and you treat it like an ATM, right? Yeah. There's no guarantees you're going to win every trade, but at the end of the day, with enough trades on, you should have a very high win rate. You should have a very high expectancy by following a rules-based plan. You don't have to follow our plans. You can follow any plan you want out there, but we want to give you the data to make your plans successful. And again, Outlier is literally 82 cents a day, everything included, all in.
Yep, I think that's pretty much it. Do you have anything else? We can answer some questions if there are questions. Otherwise, Lex can join if he's listening.
Yeah, I'd love to take questions.
You know what happens when Lex joins? That means Molly comes around in her white outfit now.
Hey, Molly, how are you?
Good, great job, guys. That was outstanding. I actually have 300 questions. Except we only have time for a couple.
Okay.
That was awesome, by the way, guys. And
that was really good.
Great interaction from everyone. So what would you say, and again, I know you can't really give an exact number, but what would you say to, what does it take to be part of the Outlier community in terms of an account size? Can you do it with $300? And can you do it with, or do you have to have 10,000? And I'm just making those two numbers up, but is it for small account people, or is it for larger account people, or does it not even matter?
It doesn't matter.
First, I'll go after you.
Yeah, it doesn't matter. I mean, so from the cost perspective, it's very simple. We charge close to $300, $323 to be exact, a year, right? Mm-hmm. If you are able to, think that, hey, if I'm paying $300 a year to this company, if I'm not gonna make, if that's too risky for you, then yeah, I mean it's risky. But if you are like, hey, yeah, these guys built a great system, built a great data platform, etc., and I can benefit from it, and we have proof that people are benefiting from it, and if they're willing to spend that much, I mean, we have people who trades option, I mean, small account size. We have people with almost like I would say 7-8 figures account as well. So it's all about the good strategies, good data that you can trust. And we are not saying just, use our data. If you have additional data, use that. In the end, it's all about being successful. It's all about, making money. And if $300, if you are willing to, spend that much, to gain more, then it's for you.
Got it.
You know, I'm really glad that the chat was answering this question, because I saw at least 2 different people saying they started with 2,500. I saw one person saying he started with 900. Other people saying college students, you know, totally starting with 0, right? Our goal, and that's why we do everything the way that we do it, is to make you successful in the market, right? We're not trying to sell you something that's tens of thousands of dollars. We're trying to give you a tool that is unbelievably inexpensive, and then give you all the training and the back testing and everything you're going to need to take what we give you and become a profitable trader. That at the end of the day is our goal.
80 cents a day.
Yeah.
That's amazing.
That's
82
amazing.
to be precise. Yes.
Yeah. That's a really bad cup of coffee. That's a really bad cup of coffee.
I want to make a good cup of coffee instead of bad cup of coffee. Yeah.
That's awesome. And how many trades do you have on at any one time, would you say, with the model that you guys are running? Is it hundreds of positions? Is it tens of positions? Is it 3 positions? What would you say? I know you can't exactly say, but ballpark.
Well, I think that's a really brilliant question. One of the mentors that I worked with was Mark Minervini, arguably one of the greatest traders ever. And when he and I were working together, he was like, listen, 10 to 12 is the very most that you could ever want at any time. And in plans M and A, we can get to that point. And it's all about position sizing, right? You want to make sure you take a small amount of risk, yet a big enough size where you can really make it worth your time. And so, like I say, 10 to 12 is great. I've had people send me a $3 million portfolio screenshot, and he had 90 positions. And my first thought was, you have no idea what you're doing. That you cannot keep up with 90 positions. That is an impossibility. Right. So I would say max 10 to 12. Right now, the only trade I have on is full portfolio into plan ETF because it's working.
Okay. I love it. And then would you say then that, sorry, Mal, would you say that for a beginner, let's say, a very beginner, is it as easy as understanding the entry points and the exit points, and maybe there's a strategy appended to it of sorts that helps the beginner out, and they can really manage it as a beginner, or do you need to have a little bit more knowledge than that? How would you describe that?
So let me answer that, Chris. So it is for beginners. We are working hard to create training programs internally, including Outlier University, on how to use the platform. We are getting started with, these onboarding training, weekly calls for the beginners to understand our platform. But in the longer run, in early 2026, we're going to make it even easier for someone to get, we're going to build it out, simplify it, just like how we have simplified our data, which Chris was showing. Hey, it's just a green background. And when the green background is there, it's in uptrend, right? Before that, people had to, hey, let me see where the 10 EMAs, 20 EMAs, 50 EMAs, right? That needs some expertise. So we made it super simple for people to understand. And that's kind of our goal is, as we are building these strategies, so we are just getting started. As we are building these strategies, we're going to incorporate those. We're going to program them and make it super easy for beginners to see it. And they're like, okay, yeah, this is it. I can understand it because it's so easy. So that's kind of our goal is.
Yeah, I love it. I love it. I think I this is, tell me if I'm way off here, but this is my analogy I like to use with people when doing some education is there's a lot of complexity to options, or there can be, I should say, right? And you can get deep into models and second order Greeks and all that kind of fancy stuff. But at the end of the day, I want a stoplight, red, green, yellow. And I'm not saying those are your colors, but I don't care how the machine makes the yellows and greens happen. I just want to know what to do when they happen. So when the green light comes, I'm going to look both ways and hit the accelerator and go. I get that. That's easy. So it sounds like your platform kind of gives that sort of, ease of use. And I'm not saying it's color based, but I'm just saying that's the sort of simpleness that it has, and all the tricky stuff's behind the green curtain. And you don't have to understand that. You just have to know how to use it. Is that fair?
Exactly. That's definitely where we're at. In fact, there was a question in the chat talking about, can you use options with Outlier? Absolutely. Yep. Options are my main go-to trading vehicle. Now in TQQQ, because that is a defensive strategy, we're not putting options on leverage already, right? Which just TQQQ as it is. But one of the things that I learned from Larry Hite, since I mentioned him earlier, was trading deep in the money calls, like 80 delta calls. And of course, you pay more in order to get that. But the extrinsic value, the part that actually decays over time, I look for about 20% or less on that, right? So we're not trying to have these out of the money YOLO calls. We're trying to make leveraged investments. And the way that Larry described it to me was it's like trading futures on every single stock. When you get the deep in the money calls, you can have that leverage without the decay associated with most people's option strategies. And it's already full of intrinsic value. And at the end of the day, when you buy an option, you're trying to maximize the intrinsic value. So that's one of the things that we talk about all the time.
Love it. Okay,
So
good.
We have some questions out there. So
There's
Matt,
tons of them. I know Chris is watching them come
why
through.
don't we
They're
pop 'em
scrolling
up?
through so fast. Yeah.
I do this twice a day, every day. I'm really good on the live stream, so I would get there.
Hi,
How
Maria.
can they sign up? I saw that one too. So give them your website and what they have to do to sign up with you guys.
Yeah,
Outlier.com. OVTLYR.com. Sorry, Mahesh, you go ahead.
Yep.
Yeah, it's you just go to pricing page, and we have annual plan which is very discounted. They can just select the plan and just do the checkout. So it's as simple as that.
Perfect. All right, I put that in the chat as well. What a great presentation, guys. I can tell you guys do this a lot. That was fantastic. Yeah. I think you have a new customer. I'm going to sign up.
Let's go.
I'm going to give it a shot. How's that sound?
Great. I would love to have you and join our community as well. Get a feeling as well.
I'll be the snarky guy in the comments part. No, I won't be
lots of those. We got lots of. I have a button on the back end that will permaban anybody. So bring it.
I'm not going to get permaban from you guys. I promise. All right, we got to roll, guys. Awesome presentation. Great product. We love it. Thanks for coming on.
Bravo.
We'll talk in the
Thanks
next
for having
week,
us.
guys. Thank you so much. Fantastic. Way to go.
Fuel your portfolio and earn 2% cash bonus. Log in to Tradier Web. Select ACAP and choose whether you want a full or partial transfer. Select the firm you're transferring from. If it's not listed, choose Other Firm Not Listed. Choose your brokerage account type. Enter your account number and social security number. For partial transfers, specify the exact cash, stocks, or options you want to move. Once all details are complete, submit your request. Fuel your accounts and get rewards.
Would you look at that? The 2% commercial. Don't forget to do that. If you guys out there who don't have a Tradier account yet, go to Tradier.com, sign up, take advantage of the 2% cash back offer. It's a new promotion that we're doing. It was described in that commercial. If you have any questions, email me at hello@tradier.com and we can answer those. But great presentation by the two guys. That was terrific. Great. I love the spelling of Outlier because it reminds me I should be wearing a really cool watch, like, Bulgari or something. Okay, Mal, we're up now. You and I, we have to do something here. Although Andy's going to do most of the work here.
Yeah, we're just standing aside. We're going to give you Andy, the guy who brings you the newsletter and all the content behind the strategies. He's got something lined up for you. It's going to be amazing.
Yeah, so we're going to do the Smart Options Trader segment. It's one of our newsletter that Andy writes and authors and does a lot of the trade generation on it. We're going to do, I think, 3 trades. Let's get Andy out here first, introduce him and meet Andy and let him tell us a little bit about his background. Let's do it. Andy.
How you doing? Nice
How
to
are
see
you
guys. I'm doing good. How are you guys doing?
We're doing great. We're doing great. Good to see you as always.
It's a sunny day here in Vegas. Hopefully the glare is not coming in through my shade too brutally here.
No, it's fine. It's all good. So let's get to it because we'll probably run a little bit behind, but we'll get through it. You gave us 3 trades, I believe. I have them queued up on Tradier Pro, which I can share if needed, and we can talk through these. But what I'd like to do is first, let's get a little background on Andy, just so folks know that you have a very storied background from trading energy, metals, commodities, all kinds of stuff like that, right? Tell us a little bit about yourself real quick.
I started trading commodities. Actually, started as an over-the-counter options market maker at Philip Brothers, which was Salomon Brothers, in 1981. So I'm coming up on 45 years in this business, even though I look much younger. I worked at Salomon Brothers for 20 years, where I ran their entire non-energy commodities business, including their gold, silver, bullion business, which was a central bank business. Then I worked at HSBC and unwound an exotic options book there. That was a nightmare. I worked at Cantor Fitzgerald as the head of commodity brokerage there. Left 6 months before 9/11. Unfortunately, lost a lot of people there. And I worked at a number of hedge funds. And since for the last 15 years or so, I've been writing, semi-retired, but writing on my experiences in the markets and trying to share, some of the knowledge that I've gained over these kind of 4.5 decades. What I do is I use what I call a technomental approach. So I'm a kind of a fundamentalist economist. I look at supply and demand in commodities. I look at, a lot of the fundamental issues when it comes to the stock market and the bond market, foreign exchange markets. So I'm kind of take a macro view, but I use technicals for entry and exit points. And I do not discount the power of the trend. When fundamentals and technicals agree, I'm all in. But the most important thing that I've learned is that risk reward and discipline are the keys to success. Whether you're looking at commodities, you're looking at stocks, you're looking at foreign exchange, you're looking at cryptocurrencies, you have to have a plan for every trade, whether it's an options trade, an outright trade. You have to understand going in what your risk tolerance is, what your reward level is. It's always okay to adjust reward horizons, but risk horizons, small losses, big profits, that's always what, kind of my goal is. And it always has been. And, even the best traders in the world can be wrong half the time or more than half the time and still make money if they operate with the prudent and correct risk reward orientation.
Okay, fair enough. And I agree with every bit of that. So good. All right. So we got 3 trades, and
before I go into that, can I just mention one thing that's critical for when approaching commodities, which is commodity cyclicality. And this goes to the fundamentals. And I think it's a core concept. Commodity prices tend to, first of all, markets tend to extend. They go way past what fundamentals and technicals can tell you on the upside and downside. But they tend to rise to levels during bull markets where production increases, inventories swell, consumers step back, prices find tops, and they reverse. And conversely, during bear markets, like we're seeing in sugar and certain things now, some of the grains, they tend to fall to levels where production becomes uneconomic, where inventories start to decline, consumers love things that are on sale, and prices find bottoms and reverse. I look for those types of opportunities, and that's a core concept whenever you're considering commodities. Sorry for the interruption.
No, that's terrific. I love it. What's best to do, Andy? I know you got 3 trades. I have a little slide deck kind of somewhat built. Do you want to refer to that for a couple of slides? And the reason I want to do that is you have reasoning for why you're making these trades, and I want to show that. Is that okay?
Yeah, that's fine. That's great.
Okay, let me see if I can share. Let's see if we can share a screen here.
Which one? What are we starting with?
No, I got it. I think. Can we see? Can you see that?
I can see it.
All right. So it says, I think it says bearish crude oil play SEO. Is that what it says?
Yes, it is. SEO is the leveraged WTI. That's the West Texas Intermediate Crude Oil Contract ETF that trades off the NYMEX crude oil futures. And what I'm seeing there in crude oil right now, which is trading, let me take a look, just around 59.50. So it's a little bit lower than it was yesterday when I put these trades together. Now, my reasoning is, look, the U.S. energy policy did a 180-degree turn last January. We went from supporting alternative and renewable energy to drill baby drill, frack baby frack, combat inflation through lower energy prices, blah, 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 all that stuff. OPEC Plus has been increasing their production because they want to maintain their importance in the market. All right. All of this tells me that fundamentally there's going to be more crude oil production. That's number one. Number two, seasonality. The most ubiquitous crude oil product is gasoline. Gasoline prices tend to reach seasonal lows during winter months when drivers put less clicks on their odometers. So seasonality does not favor crude oil in November, December, January, February, because drivers drive less. And the trend since the March 2022 high when Russia invaded Ukraine has been lower. We've dropped from $130 a barrel down to $55 a barrel on the NYMEX crude oil contract. We're currently trading at $60. So that bearish trend is intact, and the trend is your friend. So what I see here is that fundamentals and technicals are in line, and that gives rise to a trade. SCO is the bearish leverage 2 times crude oil ETF. And what I was suggesting there is a bull call spread on SCO. Now, remember, SCO is the negative crude oil ETF. So it's a little kind of counterintuitive. It's a bull call spread, but SCO goes up when crude oil prices go down. So I was looking at the $18.21 crude oil bull call spread for January 16th expiration. Yesterday, it was trading around 75 cents for that spread. The maximum profit 2.25. So you got a 1 to 3 risk reward ratio. You're risking 1 to make 3. And I like this trade. I would roll the strikes up if SCO's price reaches 21 before January 16th, or take profits on this. So that's what I'm seeing there. And I'm going to switch back and forth between the platform and the PowerPoint. Sure.
So I built this trade here. You can see it here. Green leg is the buy leg. Red leg is the sell leg. It's the 1821 January 16th of 26. That's the next coming January expiry. Is that right so far?
That's this January.
Yeah, this January, correct. So I think you said 75. It's actually $1.32 now in real time. But
crude oil's gone down since yesterday. So I mean, I would work it at $1.75 around there, because nothing goes in a straight line.
Understood. But you're already making money on this one. So that's beautiful. And here's just a quick risk graph. We're not going to get too deep into this, but this is the shape of those bull call spreads, just like that. Limited upside, limited downside. You pay something for it. That's your max risk to the downside. The difference between the strikes and what you paid for it is your max profit to the upside. As Andy said, that's about a 1 to 3 ratio, right? Risk to reward. Which is beautiful. Yeah, I love that. I love that. Okay, that all makes sense.
Makes sense.
All right. Any other comments on that one? Otherwise, I'll try to get the next slide up here.
Well, the one other comment there is to keep an eye on WTI crude oil. 55.12 is critical support. And if we drop below there, there'll be a herd of technical sellers.
Okay, good point. Excellent. You want to move to Boyle?
Sure. Boyle. There's the other energy. That Boyle is the leveraged natural gas ETF product. And natural gas is exactly the opposite of crude oil, because we're coming into the peak demand season when it gets colder out, and a lot of heating demand, comes from electricity generated by natural gas. We are coming to the time where the injection into inventories in the US end and withdrawals begin. So seasonality is critical for natural gas, which tends to reach annual highs during the winter months. Now, there's something else going on here. Sanctions on Russia, Western Europe tends to get their natural gas supplies from Russia through the network of pipelines. But sanctions on Russia have, caused them to back off. So maybe they'll use more coal this year, but they will also import more LNG, that's liquefied natural gas, from the US. Now, LNG is pretty new, because natural gas in the US used to be limited to the US pipeline in the Americas. But now it can be liquefied and exported by ocean vessel. And the US is the #1 producer of natural gas in the world. So this is a huge export market that the administration wants to really ramp up here. So we've seen a recent trend of higher lows and higher highs in natural gas. And natural gas is probably in the energy sector, maybe in all of commodities, the most explosive and implosive commodity, meaning the most volatile. And I always like to say that volatility is kind of the mother's milk of opportunity, because, you know, it gives you lots of trading opportunities. So technical resistance in natural gas is at about the 490 level. We're trading at around 425 per MMBTU for December delivery. And the Boyle ETF is leveraged bullish. There's also a leveraged bearish. It's called cold, KOLD. But the trade that we're suggesting here is Boyle at around $33.50 a share. It's a bull call spread on Boyle. Bullish on natural gas. The 3640 call option expiring March 20th. So that gives us the entire winter season. And when I was looking at yesterday, the cost was about $1. Maximum profit $300, $3. That's $300 per spread. Maximum risk 100. Again, 1 to 3 risk reward. Roll up or take profits if Boyle reaches 41. And you know, that's basically what I'm looking at over there.
Okay, let's have a quick peek on the platform. Typing in Boyle. We're gonna, and what was the strikes again? Do you know them off the top of your head?
3640. 3640.
Is that the Jan 16th one?
That is March 20th.
Ah, March. I got you. Okay, I'm almost there. I'm going fast. You can see how fast I can do this. 3640, right?
Yep.
And what was your price?
It was about $1 yesterday.
Yeah, so it's right around there. It's 98 cents. We'll call it $1 for argument. Yeah. Again, yep. I have that in the what if as well. It's right up here again. So it's a similar, you know, similar looking graph for some of the beginners. Same type, same spread, just different strikes. Is there? Do you have a good reason like you like to do the bull and bear spreads on these plays, or is it just kind of your go-to kind of play?
No, it's limited. I mean, in the energy, it's limited risk. It's a nice reward. It's a nice risk reward. Yep. And like I said, I can be right half the time and make good money doing these kinds of spreads.
I love it.
That's what I've done over the years. So,
and incidentally, it's one of my favorite spreads as well. So the bull or bear spread using calls and puts, I love those. All right, let's do the next one.
Let's go to the next one. Now, the next one is going to run contrary to the trend. All right, this is a contrarian trade, but this one has to do with that concept I brought in the beginning, which is the cyclicality of commodities.
Yep.
Grains and oil seed markets have been in the dumpster. They've been terrible. The prices have gone straight down since 2022 when soybean and corn futures just came up to just under all-time highs. Wheat futures made all-time highs. So there's been a lot of negative stuff going on there. And we've just recently seen them bounce a little bit off the lows, but they're still very depressed prices. Now, in the agricultural space, there are the ABCD companies. These are the big agricultural worldwide producers. Archer Daniels Midland is the A, Bunge is the B, Cargill is the C, and Dreyfus is the D. These guys really are the big processors. They're the 800-pound gorillas here. Okay. Archer Daniels Midland and Bunge trade in the public markets on the stock exchange. Cargill and Dreyfus are privately held companies. Okay. So Archer Daniels Midland faced some real problems, some accounting problems, all kinds of stuff. The stock trashed, sitting around $60 a share. I think, and these stocks tend to move higher or lower with agricultural commodity prices. So ADM, Archer Daniels Midland, faced a lot of issues. Two big issues that really sank the stock, which were wheat grain prices and oilseed prices and the accounting issues. But they have been around for a long time. And what I've put together is a trade here that deals with commodity cyclicality. It's a longer term trade to June 18th, 2026, which is kind of the beginning of the 2026 crop year growing season, or end of the planting season. And with ADM around $60 a share, I like this 65-75 call spread for, let's see, what is that? June 18th expiration, which has like a better than 1 to 3 risk reward ratio at 2.25 with a maximum profit at 775. The strikes are 65.75. So I think that this is a nice contrarian play on a beaten down sector that really reflects the concept of commodity cyclicality.
Perfect. And you have a management plan there as well, right? Roll up or take profits?
I would roll up or take profits if ADM stock reaches $75 a share before June 18th. And personally, I would probably roll the strikes up, because if you look at a price chart of ADM stock, you'll see that there's a lot of upside in this stock, once they get their act together.
Right. Okay. Let's take a quick peek at this one. This was a longer term one. What was the strikes again, or the month?
It was June 18th expiration, 65 call, 75 call. Again, a bullish vertical bull calls.
Yep. 65. So we've widened this one out a little bit. We've gone, oops, I hit the wrong one. So I'm just going to slide that up, 75. And what was your price around?
2.25
okay.
or lower.
Okay, yeah, it's a little lower now, which is good. So I like that.
Stock is lower today. So
it's like 4%, almost 5% lower today. So you got a little discount here on the play. That's great. Okay, again,
I like to leave. One of the things I wanted to mention in the daily smart options trader that I put out. We put out one recently today with a Humana put spread. So we take the news of the day, and we take whatever is the most interesting story, and we translate it into an options play. And that comes out every single day, every business day, not Saturdays and Sundays.
Yeah, and you can sign up for the Smart Options Trader newsletter at hub.tradier.com. Don't forget to do that, because Andy's insights are in there. You said every day, I think. I think that's
every
right.
Day, every business day, we're out there.
And I think there's always a suggested, a trade suggestion there. You don't have to do it. It's not financial advice. But it does exist there, and I've been looking at those myself lately, so that's all good. I appreciate it. Awesome, Andy. Well, thanks for coming on. We appreciate your insights into this sector of the market. I mean, it's just kind of, I don't want to say new to people, but it's different from what, a lot of our clients do, and we love the commodity space now, so that's great.
And you're so well informed. I just have a couple questions. Sure. What do you think's going on with China and soy exports, and how is it going to affect these companies?
Well, there's a big Supreme Court case about the tariffs that's going to determine that. And I think that we're going to see a lot of volatility depending upon what the Supreme Court says. But it seems that there was a temporary kind of reprieve with the problems between Xi and Trump. If China starts buying U.S. soybeans again, we've seen prices go from $10 to, I don't know, 11 and change now. So that could continue. Trump wants to bail out the U.S. farmers, and he wants soybeans going to China. So right now the trend is positive in soybeans, but the Supreme Court case is critical, Molly.
Okay. And, you mentioned tariffs. We see tariffs, spooking everyone. And so they're driving into something stable. So we see them jumping into treasuries, which is lowering the yields, which is probably going to allow us to refinance our debt, as well as we see these stable coins now using treasuries as reserves. We also see, this is my main question for you, BRICS sort of, inching over, trying to, take the OPEC dollar over to non-USD. And how do you think that's going to affect everything that you've been talking about?
Well, the U.S. look, a weaker U.S. dollar, which is what we've seen since January,
drives exports.
Right, tend to be bullish for commodity prices. And lower interest rates are also bullish for commodity prices because they lower the cost of carrying inventories. And I think that trend's going to continue. But I don't think it's just the U.S. dollar that's deteriorating. I think it's all fiat currencies. Just look at gold. My whole career running the gold business for Solomon Brothers, which was 20.
You mean this thing?
Yes. $400 an ounce. Silver was between $5 and $6 an ounce. Together with a group of traders at Solomon Brothers, we bought 250 million ounces of silver in 1995 as a proprietary position, and we sold it, for a profit. But and now it's 10 times higher. Gold is over 10 times, 15 times higher. That's a commentary on fiat money. And
right,
that trend continues.
Yeah, Bretton Woods is when we backed the dollar, when everyone backed themselves to the dollar, and then that got knocked up with Nixon, in 71. And so, and then the printing just began. And so like I don't even think anyone knows, but October 31st, we put in 29.4 billion in overnight repos.
Yep.
And so we do need to start looking at what is, while everything's going on, what is happening to the banking system? How are central bank digital coins having a play in the whole thing, and what's happening with Bitcoin and commodity and some of these stable coins?
One other thing, don't believe the published statistics on how much gold China owns. They own a hell of a lot more gold because China is the world's biggest producer of gold, and they've been vacuuming in their domestic production. So when the IMF puts out statistics and says China owns, I don't know, 2,800, 3,000 tons, they own much more than that.
Yeah, we need an audit. All right, thanks, Andy. We're running
Andy, thanks. Great job, man. We appreciate it. Don't forget to check Andy out in the Smart Options Trader newsletter. Sign up, hub.trader.com. Thanks, buddy. We'll talk to you later.
Take care, guys.
All right, Mark. Look at you. You're like a little smarty pants in commodities. I didn't realize that. Holy cow.
I thought you were going to comment on my outfit. I
already did that. You went from black to white. You're getting pure as the day goes on.
I know.
All right. Next up, we got to get rolling here. I see Trade Automation Toolbox on my agenda. This is Kyle Leisman and Eugene. I believe it's their partners or work together somehow. We're going to let them explain that. Terrific offering. These guys are fantastic. I had the pleasure of being with Kyle down on the SIBO and the SPX. We did a spot there together. Maybe we'll talk about that on the back end, but let's let them get going with their product and zero DTE trade signals. Let's get to it.
Hey guys, can you hear me?
Hello, hello. Hi, Eugene.
What's up? What's up?
All right. Ready to go. So I am Kyle Leisman, founder of Trade Automation Toolbox, and with me is Eugene. He is head of community with us, and we're here today to tell you a little bit about our offering, what Trade Automation Toolbox does, how it's used, what kind of folks it's a good fit for, and that's kind of what we're here for. So I'll let Eugene pop up the presentation and we'll get rolling.
Yeah, I got it up right here. Perfect. So what? So yeah, thanks for that intro, Kyle. So what is Trade Automation Toolbox, right? Think of it as best way to describe it is probably like a Formula One car for your zero DTE trading. So anybody who's trading SPX, SPY, Qs, zero DTE wise, meaning options that expire the same day. This is the tool that's going to help you navigate that space in a more accurate, more diligent way where things move fast. Obviously, markets regime can change like in a minute, and you probably do not want to do this manually, right? So in essence, we're a Windows-based tool that you actually download onto your computer, or if you're running a Mac, you're putting this on a virtual server, and you are predetermining, sort of creating a trading system for the day. Obviously, that could comprise of any number of strategies, but we're seeing, average traders probably putting together anywhere from 3 to 10 strategies per day that are encompassing different conditions that happen throughout the day, right? So anything from a VIX spike, anything from an EMA cross, anything from a SMA cross, all of these things are natively built into TAT to handle different sort of things that happen throughout the day and execute trades that are happening intraday, right? So you'll see on my right-hand side, I don't know how visible this is, but this is a quick visual of what the dashboard actually looks like. So
hit slideshow mode there, and then it'll get a little bigger, I think.
Yeah, okay. Is that better? Sorry, guys. I'm not sure it's much better, but yeah, there it is. But basically, you're looking at a schedule that runs on the right-hand side that's monitoring for things like conditions, webhooks, which we'll touch later in the presentation, but it's also monitoring timed entry trades, right? So some people find edge in specific time entries throughout the day, and it's just firing different trades away, and it's building your book, your intraday book, right here on the left-hand side. It's it's basically telling you how much premium you've sold, And then again, what you stand to capture and so on, and looks at your win rates, looks at other like delta statistics. And then this bottom section here is essentially a condition. I mean, this is one of just a few that we've rebuilt into here, but the system could monitor any sort of condition you've preset into templates or into a specific webhook that's going to say, hey, if we have a breakout to the upside and the VIX and the SPX is, let's say, up 20%, 20%, that'd be amazing. 0.2% intraday, then fire a specific trade. So it really gives you some pretty amazing customization as you sort of tranche or sort of add layers to your book throughout the day, right? And I covered what specific tickers we cover in detail. And go ahead, Kyle.
I was just going to say, so one of the key things, I guess, where it originated was, myself and some other traders who were trading Zerodte by hand, lots of mouse clicking, entering orders, adjusting prices once they get filled, placing stops, those sorts of things. And I really needed something to try to automate that. I wanted to run more entries during the day while I had a day job and have something, to be able to do the trading for me. Basically monitor throughout the day, make sure stops were in place, make adjustments to stops as the pricing on your trades and things change. So those are all things that are built into the software, something that can be handled. It will cancel, replace orders, and do all of those things for you during the day to eliminate all of that screen time and the manual clicking, the potential errors from typing prices in, making adjustments all by hand. Those things can be done much quicker and more efficiently if you've got software doing it for you.
Yeah, and it's especially in a Zerodte environment, not to say that TAG can't do anything beyond that, but specifically purpose-built originally for Zerodte, you kind of need that sort of speed and agility as things do tend to move quite quickly in that environment. Yep. So this covers, I think, what the majority of people that do trade Zerodte look to harvest, right? So we talked about that VRP edge, right? Volatility risk premium. Normally, we know that implied volatility is overstated against realized volatility, right? So what we're trying to do is harvest that edge throughout the day. And on this right-hand side, you'll see kind of what we're seeing as the key components of trying to harvest that edge, right? So we talked about implied volatility being overstated. Obviously, theta working tremendously in our favor as net sellers of premium in a Zerodte environment where time decay is just ripping through those option prices, right? So you don't even necessarily sometimes need to be right on direction, but theta can work magic for you, right? Return to mean, some people look for signals, right? So intraday returning to mean type of strategies. Skew strategies means, hey, they're seeing a skew, like put skews, obviously potentially overstated. Bias, so directional bias, pretty common, right? Breakout stuff, strategies. So everything is anchored in VRP, right? But hey, can I add more edge by finding some sort of directional bias through a tool like an AMA or like an embedded tool like an AMA cross, or something that you've sort of vibe coded yourself on TradingView that's giving you additional edge. And lastly, the automation bots. So putting all of this together, sort of doing all of your preliminary homework before you go into your trading day, puts you at mental ease, I think, right? So and again, there's some great discretionary traders out there, and I know some. I'm sure you've all heard of some. I'm not one of those people, right? The mental anguish of like, did I do this correctly, or is this I should have taken profit? This tool and this approach to trading, which again is not for everybody, but is for a lot of people, takes that mental sort of anxiety completely away, right? So you're just essentially trying to develop edge, understanding the anchoring of that edge is VRP, and then adding layers to try to make it as robust as possible, right? And we'll cover sort of what we see as best practices, what we see other people do shortly here, but we talk about edge development next, right? So you saw sort of where the edge comes from. Now, hey, are you good at reading charts? Do you think you have some sort of directional edge you could add and automate? Great, phenomenal. This is a quick screenshot of TradingView and a Dawson channel breakout strategy that we're actually just launched to our entire base. And those of you familiar with Dawson, it's a simple strategy, just looking back X amount of bars for price action, plotting the highs and lows, and looking for a breakout either above or below that timeline, right? So it's constantly moving with price action and sort of squeezing in. If there's a breakout above, the last hour of trading, that's a bullish signal potentially, and you're looking for, whatever, buying calls or selling puts.
Yeah, and again, there's the ability. So that's a TradingView indicator with alerts that you can trigger when you want those trade entries to happen. There's a way to set that trigger up to be received by the Trade Automation Toolbox software, where you've told it, okay, when I get this signal to go long, I want to enter I want to buy a long call, or I want to sell put vertical spread, and I want, it to be at this delta or this premium. I want to set this stop loss on it. And those things all you've set it up ahead of time. You don't have to think about it. You don't have to click on anything. The signal is received, the trade is placed, it gets filled, the stops get put in, profit targets, whatever you've configured, those things just happen automatically, get transmitted to your broker, and then you're in the trade, and Tad is monitoring it and, making changes if necessary. Those take profit out orders or stop orders will fill, as needed at the broker, but it's hands off. You made the decision, you built out the strategy, days, weeks ahead of time, and there's no thought and no decision making that needs to happen real time.
Yeah, once that signal is live, the mathematics start to sort of take their toll, right? So you're trying to play the mathematical probability of expected value and edge that you've sort of done the homework on previously, right? And this just talks about that we like sort of as a best practice. We see people exporting signals into a tester like Option Omega, for example, and testing out those signals, making sure there's validity to win rate, there's validity to edge. Because when something feels like edge, again, you see it on a screen, you're like, yeah, well, VIX just spiked, obviously a good time to do XYZ. And when you test it, the outcomes tend to be very different at times, right? So I highly recommend testing everything you think has edge. And then seamless technology, Kyle just covered this, right? So, from as long as that signal is fired in sort of either natively, a condition is natively met in TAT. So we talked about some pre-built conditions that we have out of the box, or something you've developed yourself in TradingView. Once that fires, and again, this is all automatic, right? You've set the alerts automatically on TradingView. That data is now going to a webhook in TAT, executing the template you've created, meaning if X happens, then Y type of trade should be put, right? So we talked about like a breakout to the upside. Let's say it's a Dawson channel breakout. You want to sell puts at a 30 delta with a 1X stop. That's already preset for you. Once that signal fires, everything is done. The trade will automatically fire in TAT. The rules that you've set on that template are automatically in action, meaning, hey, do you want to move stops if you get to X amount of profit target, right? A lot of people do that. They try to kind of lock in profits early, right? Other people will look at, if something gets stopped, I want to give another shot at it. All of these different parameters, literally the world is your oyster in terms of the variations you could put together with these templates. But once that signal fires, everything else is done in an automatic fashion through TAT. I like this slide because this is probably one of the hardest things to do, especially when you get started with this tool. And we've been at this for years now.
Yeah.
Sitting on your hands is probably the hardest thing to do when you get into a mechanical type trading environment. And again, there's nothing wrong with doing things discretionary, maybe in another smaller account or, however you tend to trade. But if you want to go down the road of being truly sort of like a quasi-quant, you need to sit on your hands, right? That is letting the math play out is probably the most important thing you can do, because even if you do end up saving something by early closing something or by not entering a trade, you're just essentially messing with the expected value of the strategy or the ensemble strategies as a whole, and you're really it's going to create bad habits. And this is something we try to steer people away from as much as possible. We've all been there, right, Kyle?
Yep. Oh yeah. I've gotten to the point where I basically don't watch the market during the day. My strategy is mostly scheduled, not even so much with the technical indicators or the signals, but I run iron condors, and then some trend-based trading based on which direction the market is going. But I've got 40 plus trades that go in every day, and they fire, they get placed, and I don't watch what happens during the day. I log in usually 10, 15 minutes before the market closed, make sure everything that I had in SPY gets closed prior to the market closing. But yeah, I don't watch it. I don't know which way things are going. I don't know if it's going to keep going that way, if things are going to reverse, and I don't need to know. I just know that over the course of 250 trading days in the year, 40 or 50 trades a day, I've got 1,000 plus opportunities, and if I think my win rate should be 62 or 63%, and that will be enough to make a nice return, that's what I'm looking for. So it's all about getting those trades placed, letting them run. There'll be good days, there'll be bad days, but over the long term, it should turn out the way you expect, hopefully.
Yeah, exactly. Again, stemming back, as long as you've done the back testing, you've done the due diligence of understanding how slippage works, understanding how entry slippage, like all of these how fees work, understanding all these parameters and baking them into your formula, and you still have positive expectancy, you will extrapolate that edge with time. You just got to let TAT run its course. That's probably it, right? So best practices, right? We've talked to thousands of traders. I think between Kyle and I, we're easily 50, 60,000 trades in at this point, if not more. This is what we think makes the most sense. So obviously we talked about testing. Test before you think. You probably, some people are like, well, I have this gut feel, and it's like, I have it. You probably don't have it. I hate to say it. I don't want to sound rude. You probably don't have it.
You probably don't, Eugene.
Yeah.
I don't know. I definitely don't.
So definitely do the testing. Do your homework up front, and or micro size. Some people like to forward test with like a micro size.
Lots of one lots.
Yeah,
lots of one lot trades.
Exactly. Making sure that things match up well to your original thesis, that you're seeing the win rates you were expecting to see in the backtest, and so on, before you actually size to full scale. Keep things modular when you're creating. This applies really well to. I create a lot of custom scripts just based on my years of trading myself. I'm like, okay, I see this could have edge. So creating modular aspects that I could quickly iterate to see if I could add additional percentages to win rate. For example, one that we introduced to our group recently, the Donchian one, we have a cool down period between trades, right? So if you get a breakout, at minute X, you probably want to give it a little bit of time before you look for another breakout again, right? So keeping things modular, changing things as you test will help you really refine things a lot better. Automating risk first, and this kind of correlates to correlating signals as well, right? So it's very easy to create strategies that have high win rates or look for specific conditions, but are essentially doing the same thing, right? So finding correlation and lack of correlation is really an art and something you get better at as you sort of go down your automation journey. But finding strategies that, because if everything wins one day and you're like, yay, I'm phenomenal, but everything can lose one day, right? So it's like you're looking for balance. You're looking to create as much balance between long and short type strategies where your P&L curve looks, nice and smooth and doesn't have too many, values essentially. For Zerodte in specific, time filtering is important. Not all minutes throughout the day act the same, right? So we know that the opening range has more volatility normally, especially in a gap type environment. We know, later in the day, power hour, gamma could really mess things up, right? So test things throughout the day as you layer in your strategies and see what works best throughout a specific time of day. And then the volatility regime, obviously, we've been through a couple. Kyle, I don't know if Kyle won the August 9 lottery, but you saw that 10% day, right? We've seen some crazy volatility spikes as of recent. Not all trades work in the same volatility regime, right? Obviously, if VIX is at 14, 15, they're going to act. Options are going to act not the same as if VIX was at 40, right?
Yep. Definitely.
So you definitely want to look at the premise of the strategy, but also test in different machines, right? So looking at how well do your strategies perform depending on VIX. Okay, popular signals. World's your oyster. This is the key thing to understand. There's thousands upon thousands of strategies already in TradingView that you could take signals from, test, and see if they have edge. Make sure you're watching for repainting issues. This is something quite common. So a signal, I'm sure you guys are familiar, but I'll just cover it here just real quick. Repainting means a signal will fire and it will be a live signal, and then the next minute it will disappear because some parameter changed, right? So that's a false signal essentially, and that creates just a nonsense type of test that you can never actually take to market, to strategy. The stuff we see ourselves trading, and we're seeing a lot of traders find success with. Orb is one, so opening range break, looking at us X amount of minutes after the open and seeing, hey, is there a break to the up or downside? Similar, I described Donchian. It looks at a time frame, like a look back period, breaking up or to the downside, has definite edge, something we've introduced to the group and something we trade ourselves. And then this is an interesting one. So EMA, obviously, intraday is a common one. So looking at like, hey, are we seeing positive drift throughout the day? So let's say like 8 EMA is above 50 EMA and it's just continuously up. So you're just kind of tranching puts along as we drift up. But adding a layer of daily SMA on top of that, people are finding tremendous success in strengthening that signal with that SMA overlay. And that's something we've just, that's something that's natively available on TAD that you could play with and automate for yourself. Same thing for trend percentage, meaning, hey, after market open, something I like to trade myself, after market open, are we seeing a trend up X amount of percent? Like if the trend continues up and we're above the open, I'm pretty bullish on that sentiment, and I'm going to continue sort of firing, either selling puts or buying calls or butterflies, whatever I decide to. However I decide to approach that signal, it's up to me. It seems to be like a high win percentage signal. And then VIX, right? So VIX spikes or VIX compression, popular one. A lot of people trade it independently. Some people mix it up with other signals. So you could bake groups of signals to kind of, you don't want to overfit, you don't want to overcurve fit. Things like these stars need to align for you to take a trade. That's also not good because your sample size, your p-value is going to not be that great, but definitely something to consider as maybe a preliminary filter on maybe a gap or something like that.
Yeah, like you said, when VIX is 15 versus when VIX is 30 or 40, things are way different. So definitely there will be trades where you want to build in a conditional check on VIX or on, like you said, gaps, other, any of these other things can be, layered on top of each other, one on the other. If they, you want to see an overnight gap up, you also want to see VIX, down 0.5% from yesterday. Those things can be, can all be combined to build out something that, you think has edge. And again, looking back at back tests and looking at, tens, hundreds, even 1,000+ trades going back 3-4 years, and SPX for daily expirations is something that will give you a lot of confidence in how a trade long term hopefully will perform.
Yeah, no, this is, I'm going to give I think it's a decent analogy here. So I said this is the Formula One of residual DT trading, right? That Formula One teams obviously use different tires, different potentially fuel, different balances based on the track, right? I'm pretty sure I'm not a Formula One expert, and I'm pretty sure that premise stands. So look at that similarly as you enter the market daily, right? VIX levels, gaps, all these things create a slightly different course you need to take your car around, right? Use that to sort of extrapolate further edge as market presents its kind of daily data to you. Okay. Oh, sorry about that. So, my thing is jumping here. Okay. So who is this meant for? It's meant for everybody, really, but you do have to have some understanding of options. And we do have a pretty solid YouTube channel that has kind of a crash course on everything automation, specifically using TAT. highly encourage you to kind of go through it. It's right here. Just YouTube Trade Automation Toolbox in YouTube, and you'll stumble upon the multitude of videos we've already put out on how to use all of these components, right? But what we found over sort of the course of time is there are two types of traders that seem to stick around the longest and do the best. One individual is what we call a dual timer. This is an individual like Kyle was previously, or we see a lot of people that have a job, essentially a 9-to-5 job, love options, love the ability to model, understand, how to extrapolate edge, and they're working full time and they're letting sort of TAT run in the background and do its thing. Or we have what we call the pro tail trader. Now, this is not a term we coined, but we heard a fellow TAT trader who actually runs a hedge fund off of TAT mention this term to me, and he's like, hey, there's a lot of guys in the TAT group, which we have our own Discord, obviously, where we share ideas and sort of work together. There's a lot of guys that are running pro level data or like pro level analysis, correlation matrixing, like doing things that a professional prop firm would do, or like a sort of a professional desk would do, but doing it independently, either with their own money or some family money. And those guys tend to do extremely well with TAT and have years and years of like market beating returns with better MAR ratios and so on. And I'll jump. This is the team. You've seen us. I'll leave it for some Q&As. Kyle, chime in if you have anything else. And
let's jump in here. I don't know if we've got any time left, but yeah, I guess the main thing I'll say is, the TAT is is the software tool to use to implement the trading and strategies that you're already doing, things you're doing manually, and it's huge time saver and potentially adds a tool to your tool belt to allow you to run trades while you're doing other things out and about, like you're at your job, you're running errands around town, you're on a live stream like this. I've had a couple trades open while we've been sitting here, and we'll check in, like I said, at the end of the day and see how things went.
And the mental piece, right? We talked about the mental piece, right? A lot of people struggle with the anxiety of like, hey, was this the right trade to take, or was this like, hey, I should have taken a stop loss, or I could have let the profit run. No, just listen. You've done the math. Let it play out.
Mm-hmm. That's great. Thanks, guys. That was awesome. Do you guys find that I love TAT. I just feel so cool when I say that instead of Trade Automation Toolbox. I feel like I'm part of the gang. So is it valuable to trade beyond Zerodte with your product, do you think? And what sort of structures can it handle beyond Zerodte?
Yeah, so like we said, Zerodte is where it started, and that was the initial need. But we've branched out beyond that. You're able to trade really any DT that you want, but really probably 30 days or less is probably the sweet spot. People who are trading frequently, the Zerodte stuff, or selling short-term calendars, things where you're entering a lot of trades, and it makes sense to have a tool that's gonna, will do this for you, will manage the entries and everything. If you're if you're selling a covered call once a month, then you probably don't need software to do that for you. Mm-hmm. But if you're doing lots of trades regularly with a strict set of rules, then we think it would be a huge benefit.
But I would say this blonde needs software to do a covered call.
Well,
that's probably true. Just kidding. So how long have you guys been around? I mean, I should know the answer to this, but I don't think I do.
Yeah, so I originally started, I was trading back in 2021, 2022, Zerodte manually, was entering one trade in the morning, basically before work, and ended up thinking that I want to do more than this. So it was summer of 2022 that I wrote the initial version of it for myself and some friends that traded similarly, and then the word grew pretty quickly and ended up turning it into kind of a side business, and now a full-fledged business in the fall of 2022. So we're well over 3 years in now, and a lot of those original, OG users are still here, and have done really well over those three plus years now.
Very good. And so what's next on the next for you guys and at TAT? You need to give me a hat with TAT on it. I wear it all the time, man.
Yeah,
All right, we've got next time I see you, I'll make it up to Chicago. I'll bring you one.
All right,
You
awesome.
seem to be the hat guy. But,
I'm the hat guy.
I mean, we're always, taking, basically it's been user driven for 3 years now. The features, trade types, structures that our users are asking for have continually gotten added. We're doing a lot of things now that we weren't 2-3 years ago. So there are more trade types, potentially more underlyings in the future. And yeah, we're continue to take that feedback and to do everything we can to grow and to add more features to make it a more valuable tool for our user base.
And it's a perfect time since you started. We've seen a 5x growth on Zerodte's, and I think it's half the options volume on SPX. Is that correct?
It is.
Wow.
And yeah, we're a small part, but definitely have, we've spent plenty of our money, in SIBO fees over the years.
Right. That's a whole other show in itself.
Yeah.
That's right. Awesome.
Right, that's Lex's fault since his family started SIBO. So
yeah, right. That's blame it on me.
That's his fault.
Kyle got to be down in the middle of it. Eugene, you got to come visit with Kyle next time, and we'll do another show down in the SPX.
Yeah, absolutely. I've never been actually to the pit, but yeah, definitely. I'm out west, but definitely, maybe not in the winter time, maybe closer to summer.
Yeah, we'll do a little more summer thing. That'd be great.
We'll head out there.
All right, how do they get a hold of you? Give us the plug. TradeAutomationToolbox.com or something else.
Yep.
Okay.
Where you find us. So we'll get you behind that Formula One car. Take it for a test drive. Let us know how it goes.
Awesome. I love it. Guys, thanks for coming on. We appreciate it. I love the product. You're doing great work.
Thanks, you guys.
Thanks, guys.
Every trader has a style, a rhythm, a strategy. But behind every smart move is the right tool. Tradier Mobile puts the power of multi-leg options trading in your pocket. Clean, fast, and built for traders on the move. Need more screen space for strategy? Tradier Web is where clarity meets control. Visualize your trades, adjust legs, track the Greeks, all without getting lost in complexity. You don't just trade options, you engineer them. Tradier Pro is built for the relentless, pro-grade execution and tools that keep up with your mind. Choose the platform that fits your trading style.
I get so happy with commercials. I don't know. Especially our commercials. That was really cool.
I think that's the first time I've ever heard that sentence in my life.
What?
No one likes commercials, but these are good. I will say that I'm really enjoying these. Bravo to the Tradier team.
Yeah. All right. So we have a few more, but we have a little break now. So from 3 to 3:15. Well, I guess from 3:07 to 3:15. But I think the folks have a little QR code for everyone. Now, here's another quiz. Let me just explain it first before we show it. Here's what this is. So yours truly, that would be me, is actually in the process of writing a book.
You heard it here first, folks.
Yeah. So and just in broad strokes, okay, what the book is sort of about is, it's called it's not necessarily called this, but it's the concept, the personality of the trader. Okay, let me explain real quick. I know we got a couple minutes here. I started in the industry and I was a floor trader 100 years ago. I think Henry said he thought I was in the 90s. I was actually in the 80s when I started. So I was a little even before Henry. But anyway, what I discovered very quickly is that I failed miserably at first. That's number one. Okay. I lost my backer's money in 6 months, and that was $50,000.
Okay.
He somehow saw something in me that he believed in, and he ponied up another 50 grand. Which means that that was going to be the last amount. So anyway, I made something work, but I changed the strategy that I was taught. And the strategy I was taught was premium buying. Nothing against premium buying. I just discovered it didn't fit my personality of how the dynamics of buying premium worked out. So what I ultimately figured out was that I like premium selling better, and I figured out that I needed to do it safely and figured that whole mechanism out. So anyway, the bottom line is this book will take you through all these archetypes of what the edge engine is, how you make a trade, the premium stance, are you going to be long or short the premium, and what your time frame is, your cadence is what I call it. So it's going to go through that mechanism. And one of our producers and people at the hub put together a quiz to kind of give you an idea of what kind of trader you might consider. And I don't know, guys, I'm sorry, it's on the screen. I see the QR code. So you don't have to do it now. You can just take that quiz on your own. If you want, send us an email at hello@tradier.com with your results. And you never know, you get a free book in the mail one day. So stay tuned for that. And we'll see that in production down the road here.
And where are we going to be able to find that? Where are we looking for that when it comes out?
When it comes out, we're going to put it on the hub page, one of the new hub pages, and it's probably going to be downloadable for hub members.
Okay.
And it's also going to be available in probably paperback if you want to buy it, probably on Amazon as well. Okay. So we're working through all that. And I realized that I'm not a writer. Well, I am a writer. I was an English major, but you're the writer, Mal. So you're
the English major. But what's really neat is that you not only have the retail trading side, but you are a market maker. So you know these tertiary effects on the markets, and then you see, and plus your family started SIBO, so you have all these angles, and you've been on the brokerage side, so you really do have every section of trading as a whole, the type of trader you are and the environment that you're in. So I'm really looking forward to this book, and I knew it was coming, but
I know you're gonna help.
Yeah.
Right?
Yes, you'll flip backwards, it'll just say trading for blondes. It'll just be that way. Yeah, it'll be in the back page.
Oh my God, no, that's fun.
3 pages.
Yeah. So Molly, where are you in the trading kind of ecosystem? How would you describe your?
I love to feel a company. So a lot of girls, a lot of women are like this, where we're fundamental value traders, where I like to feel the fabric and do the experience and taste it and just experience the company and the fundamentals of it. So if something is, if buying the dip is usually the way women go, especially Kathy Woods, we take hits on the front end, but we really back products and service that we love. So I really am that. And I would say I love options because of the insurance and the puts you can throw on there. And we have cortisol pumping through our bones. So I think I'm more that kind of trader. And I think that's where we become a really good team. And that's where we'll be able to share info. And I think that's growing. I think a lot of people are getting into that more as well, because Green was come on today, but he's talking about the shortfalls of long-term investing. And because sometimes the fear of just investing in stocks that we know they're going to go up skews the actual price. And then we talked to Cameron Dawson came on about EPS bubbles, and I think there needs to be a huge shift. And plus you have all these bots kind of skewing what's happening. I think there's going to be a huge shift back to fundamentals and back to the analog form of it. And
yeah, no, I agree with that. That's well put. You have such depth of knowledge in this space. I mean, are you making this up? It's amazing.
I paid him to say that. Thank you. Like right on cue.
Oh my God. Reminds me of something, by the way. So you mentioned about AI automation. We've heard a lot of that today. I just want to also just reiterate to the viewers. Tradier has, I would say, the best APIs in the business. Okay,
hands down. By the way, hands down.
Right, and you've used them for your product. I use them for my product. I tried elsewhere, and I got to tell you, if you're in the game of creating some sort of piece of software, or just for yourself, if you're an individual and you can code, or even if you don't know how to code, you can use this stuff. You can create such great automated workflows using our APIs. I know I'm biased, but I got to tell you, I wasn't biased a while back, and they are truly tremendous. And I also like to give the commercial that the world isn't going any further away from automation and kind of automated workflows. It's only getting near with AI and all that other kind of stuff. Yeah. So make sure you try it out. You can open an account with us. Don't have to fund it. You have access to the APIs with your regular account. And if you are on the commercial side, you want to grow a business like Tat does, or any of these other folks do, are connected to us, send an email to sales@tradier.com.
And I just have to
the team will take care of you. Sorry.
Yeah, I just have to tell a story about that, where the team is also amazing on that. Like the actual people behind Tradier are really incredible. And when we were just starting out Trade Cheetah years ago, we get a call. We were in the breakfast room from Dan Raju, and he's like, "Hey, I heard you're building something." So they really care. And so if you're stepping out into the world and you're trying to build something, this is the place you want to go. And the team there is there to support you, and they're incredible. So give them a call.
Thank you, Mo. All right, good. Let's get ready for our next guest and speaker. His name is Nishant Punt, and I think I got that right, even though this is that way, because he made me say it 100 times when we did a show together. Stay tuned for our show. It'll probably be on the Tradier Hub and on the Tradier Hub YouTube coming up in the next few weeks. But let's welcome Nishant Punt to the stage, and he's going to give us a presentation on mean reversion trading. Thank you.
Hi, everyone. Thank you so much for being here today. And a big thanks to Tradier for giving me this opportunity to present my algorithmic trading system called Maya. When I had my first call with Brian, I remember he mentioned that the way Tradier likes to grow is by helping others grow via partnerships and education. And it has been almost 2 years since then, and that is exactly what my experience has been working with them. So thank you, Tradier, and all the amazing folks out there. I hope you can see my presentation, right, on the right side. Okay, I'm assuming you can. So I'm just going to go through it. Okay, so over the next 20 minutes, I'm going to share something with you that completely transformed how I approach options trading, and it's already helped over 6,000 options traders eliminate the biggest enemy in trading, yourself. My name is Nishant, and I'm the author of multiple books on options trading, founder of Trade with Maya, and I've been a CNBC contributor for the past 3 years. You see these numbers here, right? So let me just make sure everybody can hear me, and then I'll go ahead with these numbers. Okay, so you see these numbers here on this slide. These are not theoretical. These are results from a trading system called Maya. This strategy has been back tested over 10 years in all types of market conditions: bull market, bear market, sideways chop. The backtests show a 64% average win rate with over $500,000 in net profit in 6 years, starting from a $30,000 account. Now, Maya went live in April of this year with real money. And since April, it has returned 31% ROI, while the S&P 500, which is its performance benchmark, is sitting at just around 14%. But before I tell you what Maya is, I need to tell you why it even exists. Because the trading industry has a dirty little secret and nobody wants to talk about that. Okay. So I know, all of us have seen these stats. These are floating around the internet, and honestly, I'm a little sick of seeing it myself. 90%. 9 out of 10 traders blow up their accounts in their first year. Let me ask you something. How many of you have held on to a losing trade way too long, just hoping, praying it would turn around? Maybe moved your stop loss just one last time? Well, you're not alone. I used to do the same thing. I remember one trade. I was down like $3,000, and instead of cutting it at my $500 stop loss, I convinced myself it would bounce back. I'm sure you know what happened next. That $3,000 loss went to 10,000, and that was a very painful lesson. But here is what I want you to understand. This statistic isn't meant to scare you. It's meant to wake you up, because most traders think they fail because they're not smart enough, or they don't have the right strategy, or they need more indicators. But that's not the problem at all. So what is the problem? Why do 90% traders fail? Okay, so I have mentored around 6,000 options traders in the last 5 years. And I have pretty much narrowed it down to the following three problems. So problem number one is, you may know this, trading on emotion. Fear keeps you out of winning trades. You see a setup, but you are scared because the last trade lost money. Greed, on the other hand, keeps you in losing trades. It's got to bounce back. I'll hold a few more days, all that stuff. And then number two is no clear strategy. So honestly, most traders, and I would say specifically options traders, are just winging it. They enter trades based on a feeling or because they heard about this new fancy strategy, whether it's Zerodte, iron condors, broken wing butterfly, jade lizard. These are all real strategies. And the problem is not with the strategy itself. The problem is that there is no consistency, no risk management, no trading plan. And number three is lack of trade management. So this one is a real killer. Whether it comes from lack of time to monitor your positions or lack of discipline to follow your rules, poor trade management destroys accounts. From my own mentorship experience, I found that poor trade management stems from two things: riding a trade to full loss in the hope that it will come back to life. And the second one is an honest one. You may be a busy professional who doesn't have time to stay glued to the computer, and you miss your exit points entirely. So trade management isn't just about having a plan. It's about having the time and discipline to execute the plan. Okay, and the final one is information overload. We are living in the information age. There is so much noise out there, hundreds of indicators, RSI, MACD, stochastic, Bollinger Bands. I mean, the list just goes on and on. So you've got so many indicators that you can make a decision. And when you finally do make a decision, you second guess yourself. One indicator said yes, the other one said no. So you know how it goes. So is there a solution to this? And actually there is. The solution is eliminate the human. What I mean is remove human emotion from your trading decisions. Because here is what I discovered. The best trader is the one who follows their rules. No deviation, no just this one-time exception. Just follow your rules 100% of the time. So I built my algorithmic trading platform Maya with these three core principles. Number one is rules-based. Every single decision is predefined. Entry criteria, exit criteria, risk amount. There is no opinion, just rules. Number two is emotionless. The system doesn't feel fear when the market drops. It doesn't feel greed when a trade is up 50%. It doesn't hesitate. It just executes based on the rules. And then the third one is consistency. So same strategy every single time, same risk reward ratio, same analysis framework. And when you remove the variables from trading, you start getting predictable outcomes, which you can then measure. So let me introduce you to Maya. What is Maya? Maya is a 100% rules-based options trading system. Every decision, when to enter, which strikes to choose, when to take profit, when to cut a loss, is predetermined. No guessing, no gut feelings. Now, Maya trades one strategy and one strategy only: bull call spreads. These are also called vertical debit spreads, not to be confused with credit spreads, which are very popular. It's the simplest trading structure out there in the options world. Let me explain this simply because I know options can sound complicated at times. Let's say you think a stock is going up. Instead of just buying a call option, you buy a call and sell another call at a higher price. This creates your spread, quote unquote spread. Why do this? Well, there are many reasons, but here are the top three. So number one reason is it shields you from options Greeks like time decay and implied volatility. And if you have traded naked options, you must know how these Greeks can destroy your account if you don't understand how they work. With spreads, you don't have to worry about the Greeks, as the long option and short option that you hold kind of cancel out all the Greeks. The number two is it defines your maximum risk upfront. You can never lose more than what you paid on any single trade. Although Maya never lets a loser go beyond even a 50% loss, but I'll come to that in a second. And then third core principle is it defines your maximum reward. So you are targeting to double your money, 100% return on every winning trade. You can never make more than 100% on your trade, which actually makes it very easy for you to decide when to get out of a trade, because holding longer doesn't mean making more money. Okay, so do you see this table on the side? I know I can't hear you, but I'm just assuming that you can see that. So this table on the side, I've made some assumptions. A starting account value of $10,000, which grew this account to 40,000 in 9 trading cycles. Here's the beautiful part about this math. Even if I only win 50% of the time, just a coin flip, I'm still profitable because my winners are twice the size of my losers. In this example, around 9 trade cycles, each cycle lasting 30 days, has the potential of growing your account from 10K to 40K. Now that's a massive return for a system which relies on flipping coins. But don't worry, Maya doesn't flip coins. Neither is its win rate 50%. It wins around 65 to 75% of the time, based on backtests and real life trading. Now you're probably wondering, how does Maya even find its trades? What is the secret sauce? So this is where Maya's real edge comes from. It's a 2-stage top-down process. So stage 1 is market health check. So Maya doesn't force trades. This is critical. If the market conditions are not right, Maya sits on its hands and waits. First, it checks the trend for QQQ. QQQ, as you may know, is the NASDAQ 100 ETF, basically a proxy for the overall tech market. If the Qs are in a clear uptrend, it's a green light. If it's choppy or downtrending, Maya goes into preservation mode. Next, it checks the VIX, the fear index. If fear is too high, if volatility is spiking, Maya knows this isn't the time to be aggressive. It scales back. And finally, it checks market breadth indicators like McClellan oscillator, advanced decline line. These tell us, is this a healthy market where most stocks are participating, or is it just a few stocks holding up the fort? So only when all of these align does Maya move to stage 2. Now, stage 2 is your trade entry. Maya looks for the perfect trade setup using multiple technical indicators. RSI tells us if a stock is oversold, meaning it got beaten down too much and is due for a bounce. MACD confirms the trend is turning bullish. Bollinger Bands show us volatility expansion, which means the stock is beginning to make that move. And finally, volume confirms that real money is flowing in. When all of these conditions line up, and I mean all of them, that's when Maya sends you an alert. So you get a text message and an email that says, Maya just entered XYZ trade. Buy the 100 call, sell the 105 call for a debit of $2.50 or $250. As you may know, with options, you have a 100x multiplier. You have all the information you need to place a trade. You can choose to use Maya's alerts to open trades from its 35 stock watch list, or you can use the trade scanner built into the website, which uses a more expansive list of around 200 stocks. Irrespective of how you open a trade, as soon as you log the trade into the system, Maya starts babysitting your trade for you. It wakes up every hour, monitoring your trades, and will notify you exactly when it's time to exit, whether it's time to book profits or cut your losses. Okay, so now it's time for some social proof. We have hundreds of traders using Maya, and I asked a couple of users to send me their performance screenshots for this year. Do note that Maya went live in April, so this performance is not even 1 full year. The first trader shown here, his name is Tom. He's an advanced trader with a big account. His trades are big and so are his profits. So 28K in 2 months as shown here. I know looking at big profits makes everybody excited, but to level the playing field, I like to talk in percentage terms. The second trader shown in the next slide, which is right here, he is up 46% since June, as shown in this performance chart, which automatically shows up on the website as you keep entering your trades. In his case, note that S&P 500, which is our performance benchmark, has gone up only 12.6% since he joined. So although his account is small in his size, his percentage results are really impressive. I mean, he's even beating Maya big time. So that is what rules, discipline, and structure can do for your trading. Okay, so if this is something that interests you as an options trader, head over to tradewithmaya.com. We have 2 pricing plans. The Pro plan is the all-inclusive plan, which comes with full access to the trade scanner, SMS alerts, and priority support for trade-related questions. I answer all these questions myself. It also comes with tools built into the website, which will make you a better trader. For example, Maya's engine will be able to point out trading mistakes to you, like if you're holding on to a trade longer than you should, or your risk is unevenly spread, or if there is an earnings or dividends event coming up. The standard plan, on the other hand, does give you unlimited trade alerts, but it doesn't come with priority support, SMS, or trade scanner, although all these are available as add-ons. Okay, so for all of you attending this conference, I have worked out this offer for you. You get a 10-day trial for $9.99. That is 10 full days to test drive Maya, see the alerts, watch how it works, paper trade if you want, whatever you need to build confidence. After the trial, you get a 50% discount for the first month. That should give you enough time to see if Maya is something that can help your trading. So if you've been struggling with emotional trading, if you're tired of second guessing yourself, if you want a system that removes the psychology and just follows the math, then try it for 10 days, $9.99, less than $1 a day. If you hate it, no hard feelings. If it works for you, and I think it will, you will have a system you can use for years. Okay, so I've got, that's my presentation. I've got 5 minutes left. So let me hand it over to Lex in case he has any questions for me. Lex, you there?
Where am I? There I am. How are you?
Pretty good. How are you?
Great job, Nishant. I love it. I love it.
Thank you.
Yeah. So I always like to ask this question of you folks. Again, account size. Can $1,000 account handle this? Are there any kind of specifics around that make this better than not?
Okay. So yeah, that's a good question, and I get asked that question a lot. So Maya trades, it trades bull call spreads, as I mentioned earlier.
Yep.
And it trades 2 kinds of trades: $1 wide spread and $5 wide spread. And
Okay.
which means you can trade with as little as $50 per trade or $250 per trade. It's up to you, whichever you want to choose. You don't need a huge account. Start small, build confidence, scale up. A $1,000 account, like you asked, can easily be used with Maya because you're taking only $50 trades.
Sure.
And each trade doubles your money. So although we have traders who have accounts in the millions too on our website, the strategy works irrespective of account size. The only thing to keep in mind is that you need to keep your risk even across all trades. So this should be obvious to you that you shouldn't take your first 5 trades risking only $50 per trade and they all become winners and then suddenly you take your sixth trade, which is a $250 trade, and that one becomes a loser and wipes out the last 5. So that keeping risk even across trades is very important. And in fact, the website Maya will actually spot this. If you start doing that, it will point out that you are making a trading mistake, and it will tell you exactly what's happening. Like your risk is uneven across your trades. So yeah, but you can trade with a $1,000 account.
I love it. And what would you say? How many positions do you have on at any one time? Would you say, is it always just one, or is it several?
Oh, it's several. Yeah. So Maya can take between, I would say, could take 5 to 15 trades per week.
Okay.
And if it finds that the market condition is not right, it becomes conservative, and it could drop it down to 1 or 2 trades. And sometimes it just sits on its hands and just does nothing. And what happens is, like, Maya will send you a daily morning announcement telling you what it is, quote unquote, thinking about the markets, how it's assessing the markets, and what its trading plan for that day is. So if VIX spikes up, or if QQQ drops 2%, it will tell you that, by the way, this is happening, so I don't plan to trade today.
Got it. So will Maya search the whole marketplace, or is it something that your users put together their own basket of stocks, and then that basket of stocks is what's being surveyed by Maya?
Okay, so the thing is, with options, all of you options traders out there, you must know this, that stock selection is a very important part of options trading, because you need liquidity. You don't want to get killed by bid and ask spreads. So it took me a long time. I've been trading for 15 years, option trading for a long time, to select the watch list from which I do my trading. These are high quality blue chip companies with millions of shares traded every day.
Sure.
So Maya trades only 35 highly liquid stocks, and those are the stocks that have been back tested in the last 10 years. So the performance that you see on the website is from that, but it also has an expansive list of around 200 stocks. So if you go on the website, you run a trade scan, you can find your own trades on the website. That scanner actually uses a list of 200 stocks, but these are all carefully selected stocks. And the way I do my own trading is, I don't go out from this universe. It's a hand-picked list of stocks that I use.
Got it. And just to be clear, you mentioned it, these 235-ish stocks. They're all stocks that have very good liquidity, especially around options and that sort of thing. Is that right?
Yes, and yeah, that's the only way to do options trading. You have to trade highly liquid stocks. You can't trade like some $10 stock or illiquid stock. You can do that. You will get killed.
I gotcha. Okay, let me put up a question from a viewer. Can you see that, Nishant?
Let me see. Oh, does Maya?
Yep.
I see. Does Maya have one position open at a time? No. So I think I just answered that question, right? So Maya has, I would say, if you go on the website, actually, you will find a section called past performance, and it shows you all the trades. Everything is open and transparent for you. So all the trades that it has taken since April are out there. You can see how many trades it opens for a week. So I would imagine on an average 10 trades a week is what it does when market conditions are favorable. But you can see the entire past performance. All the trades are documented on the website.
Okay, got it. Ma, you have something? Sorry.
No, I just really like that you hand picked these. So it's already a nice blanket there, and great presentation, great product. And again, thanks Tradier, because you make this possible, just bringing these partners to us. So thanks, it's been great. Thanks for your time.
Thank you. I appreciate it, guys. Thank you.
Yeah, terrific. I have one more question before you go. Is that okay?
Go for it.
Yeah. You mentioned the time factor. Here's what I mean by that. In my opinion, every retail trader, this is a second job mostly. And they're doctor, lawyer, and accounting, whatever their job is, or maybe playing golf or going for a run or a walk. They don't want to be in front of the computer all day. So how long does it take each day to kind of interact with Maya, and do the things you need to do to be really effective and hopefully successful?
Yeah, I think that's a good question. So, first of all, I mentioned that a bull call spread is the only strategy it uses. It's really simple to understand. So I would say, as far as the time factor is concerned, it's almost none. Maya sends you trade alerts when it opens a trade. You don't need to stare at the charts all day or watch CNBC all the time. The system handles the scanning, which is finding trades, and monitoring, which is monitoring your existing trades so that when you need to get out, it does that for you. And when it's time to exit, you get another alert saying that it's time to get out. So since this is not day trading, there is no urgency to get in or out. If you miss a trade, wait for the next one. But trade alerts are usually valid for 1 or 2 days after the alert is sent. So, and you always have the option to run the trade scanner yourself, which will find trades for you if you miss a trade alert.
Okay. So yeah, that's good to know, I think. And you already talked a little bit about how often Maya trades, right? So
yeah.
Yep. Okay. Terrific. Well, Nishant, did I get your name right, by the way, your last name? I think I said it right this time.
Oh man, you nailed it this time.
Okay.
I like where he says this time.
Yeah, you messed up big. You messed up big last time. Yeah.
We had to do it. I got the word.
You messed up big, Lex.
I messed up that cut. No, Max cut me 3 times. I kept messing up, and it's spelled Pant. You'd think that'd be easy, right?
Pant is.
Bravo, Lex. Well done. You're doing great. Nailing all the names.
Yeah, right. Nishant, thanks so much for coming on. And say your website again so people can find you. It's just you do it so I don't mess it up, please.
Okay. Tradewithmaya.com.
Tradewithmaya.com. Awesome. All right, everyone have a look at that. He's got a great promo going right now as well. Great job. Always love chatting with you and an awesome presentation. Appreciate it.
Thank you, guys. Appreciate it. Thank you. Bye.
Got it. Bye now. That's pretty cool, huh, Mal? And you notice what kind of the path is here for most folks. A lot of automated stuff, huh? As we get into the latter part of the day. I think that's really kind of cool.
I'm always wondering, these next boys coming up are some of my favorite. So they're gonna give us a lowdown on the auto part of this.
Yeah, these 2 next guys, we put elbows together in the social sphere. Out in a good restaurant in New York City, man. I know it.
Where's my invite?
Well, you live too far away. Crazy. You live across the country. Well, great job, Nishant. We appreciate that. Next up, go ahead, Mal. You want to introduce these 2 guys? Do you know Ben and Dylan?
No, you're on a roll with the name, so I'm gonna rely on you.
I might mess up Ben's name because I could mess that one up. I just call them Ben and Dylan. I'm going with Ben and Dylan. They can say their last names. All right. Next up, Ben and Dylan from Peakbot. Great partners of ours. All kinds of things going on with them. I'm going to let them do all the explaining. They have so many great features. And let's listen to them with their presentation. Peakbot is next. Let's roll it with those guys.
All right. What's going on? Can Ben, how's my audio? Can you hear me?
I can hear you. Can you hear me? I can hear you.
We're loud and clear. We're here. We're live. Thank you so much to Lex, Molly, and the whole Tradier team for having us here on another summit. Very excited to cover a ton today over the next 30 minutes, primarily focusing on the rise of simple bots and how Peakbot here has been able to take advantage of that and do it the right way. Hasn't been easy. But so we'll get into that and so much more. Ben and I are the co-founders of Peakbot here. We started this business over 5 years ago now, which is wild. We've been great partners with Tradier for has to be coming up on at least 3 years, if I had to guess. So we're very happy to be here. What we'll cover here today is a little bit more about our automated strategies, the way in which we chose to automate options the right way with risk-defined trades, credit spreads, condors, all of the good stuff. Okay. So, Ben, if at any point you find me rambling or coming off track, you feel free to run me back on or interrupt, whatever you got to do. Okay. And I'll do the same. So Ben, I know you're in control of the slides here. I think everybody has a good idea of our background. And if you want to know more about us, you'll reach out to us and we'll tell you. But let's get into why we're here and talk about this no code options trading on autopilot here with Peakbot. So some fun facts. All right. These first few slides here, Ben and I are going to hit you guys with some facts that you may not have recognized about the trading industry for retail traders specifically. Active traders. Did you know active traders receive anywhere from 50 to 75 alerts a week? That's a ton of alerts. I receive them myself, and I'm a part of this stat. Only can act on less than half of them. I act on next to none of them. I use my automated trading bots to help me, but that's a crazy stat, right? Like, we're all busy. Getting this amount of alerts every day or every week really adds up. Ben, what's your experience with this? I mean, alerts can be overwhelming, and it's only half the job.
Very overwhelming. Yeah. And the second stat here, and by the way, guys, if you have questions, feel free to put them in the chat. We will aim to get at every single question and answer every single question. If we look at that second stat there, investors' returns deteriorate when they're relying on alerts alone. That happens to me. I've seen it. And then the third one, minus almost 5% on attention-induced trades triggered by alerts. Example of that happens to me all the time, probably happens to you. I get a buzz on my phone. I see an alert that either I set up on one of my brokerage accounts or subscribe to a service, and here's the trade. I'm not thinking twice about it, right? I don't look further into the trade. I don't do my research, do my due diligence, and I might just place the trade. I do think that that's why, based on the stat that you spoke about, less than 50% of trades actually get acted on because people are busy throughout the day.
We're busy. We got things to do. We've got families. We've got jobs. We've got to eat. We've got to, the list never ends. And you can see stat 3 here. Nearly negative 5% is the average return per trade. Okay, from attention-induced trades triggered by alerts. So again, you picture yourself at work, phone buzzes, spy put, go and grab that. Okay, again, you're not thinking as much. You're not doing your research. You're hopefully trusting your source. And there's good sources out there. We're not here saying that trade alerts are bad. Trade alerts are great. Okay, in fact, they're necessary for a lot of automation. But you got to be able to have incredible reaction time. And we know that it's not always possible. And 1 second is late. Okay. So the alert is not the trade. It's just the first step. And algo providers like Peakbot step in to finish the rest of the way. But we'll talk about that here in just a few slides. Ben, go for it.
Yeah, so some more stats here, and these are from some recent studies, some studies from a couple of years ago as we're talking about it. Only 13% of retail traders are using automation or AI to supplement their trading. So that doesn't mean just bots. That means using some sort of subscription service to augment or supplement the way that they are trading manually. Only 13% of retail traders. That means a majority of people still are not doing that. We're going to explain why in just a minute, why that might be the case. But the industry commentary around this topic suggests that about 50% of active options traders are curious about automation, but they don't know where to start. And there are a ton of really great tools, some of which we know the owners of and are good friends with. These do-it-yourself automation tools, Dylan and I like to call it BYOB, build your own bot tools. They require you to get API keys. They require coding knowledge. A lot of good options out there, really good options out there that are no code, but then you still have to track things on spreadsheets, triggers, webhooks, so on and so forth. There's a lot out there to be had, but you really have to know what you're doing, and that's intimidating. Right, Dylan? I mean, go out and build your own bot with no code?
Nope, it's not easy. I mean, we have a full team doing this for years on years, right? Like the most successful traders, hedge funds, institutional traders struggle to find the edge in the market for any duration of time. All right, so this is not an easy game in which you're choosing to play as a retail trader. But Ben, stat 2 there of over 50% of active options traders are curious about automation, don't know how to start. We talk to them every day. They're replying to our social posts. They're in our live shows. They're They're on our calls with our automation experts, and they're overthinking everything. And Ben, because for good reason, right? Look, the algo and automation industry of old was a scary one. And now you got to be really careful about finding the reliable providers out there. There's some really, really great automation out there, and there's some great alerts out there. You just got to do your due diligence, and that's where most people don't have the time, right? This is not just a hobby, right? You're talking about your money here and putting it in play, and you gotta take it seriously. So find the right tools and trust it. And the insight here on the right hand side, it's not automation that's the problem, right? Don't be intimidated by the automation. It's the strategy behind the automation. It's making sure it's easy to use, it's accessible, and most importantly, affordable, right? And getting you the results that you need. So go ahead, Ben.
So we've kind of laid up the problem here, right? Alerts are fantastic if you're in front of your screen and you're able to place that trade yourself. There's a hesitancy to trust beyond that. There's a hesitancy to trust AI in this industry, and that is what the number one reason that people don't use bots are, from what we found through our own studies. The number one reason is people don't trust bots because they don't understand what they're doing, right? We provide, as Peakbot, we provide bots with very clear logic, limited inputs, and we find that provides higher user retention. Dylan, you're talking to traders every single day, many traders every single day. I talk to traders as well, but not as much as you. Would you say the number one thing that people ask is, hey, what's this bot doing?
Absolutely. And well, first question is, how much money is it going to make me? The second question is, what's it going to cost me? The third question is, what's going on here? So let's be real. We know what retail traders want. They want to know that there's results. They want to know what it's going to cost. But if you got a good retail trader, somebody who really is interested to get this going and get it right, they're going to ask, tell me what this strategy is doing. So at Peakbot, we provide full transparency, as Ben said, clearly stated logic for every one of our strategies. You're just not going to find that. You're just not going to find automators, algo providers, strategies that are sharing every detail of entry and exit. Okay. We do it for a reason.
Quick comment too, because I don't want this to sound like we're just talking about, how great Peakbot is. There are bot providers out there, and anybody that is interested in getting into trading with a bot, again, we strongly urge you to consider who is behind that bot. What is the strategy behind that bot? What is that bot supposed to be doing for you? We'll get more into that type of information and the types of questions you should think about in just a couple of minutes here. But usually what we found is the simpler, the better, the easier to understand, the more comfortable you are with a bot. And that's a huge hurdle for a lot of people.
Yeah. And Ben, we've learned our own lesson here, right? We've been automating for retail traders for coming up on, over 5 years now. And when we started, Ben, we gave the retail trader, we gave the subscriber more access to make decisions, more tools, more ways for them to individually configure an automated trade. We know what happened, right, Ben? Remember when we had built in, when you can plug in your own take profit and stop loss on some of our equities bots? What a nightmare. What a nightmare.
Everybody was plugging in 1% stop loss. 1%.
Yeah, and we see I saw 8 losses in a row. What's going on? Well, you had a 1% stop loss on Tesla. And this was an equity strategy, and Elon just tweeted something that wasn't very favorable. And this was, but the point is, we've learned now with our strategies, and we're going to dive into one of them that's really hot right now here in just a second. But the less decisions that you need to make as the retail trader who's busy, lacks the time, lacks the strategy, lacks the discipline, simple decisions, okay, on the front end with a lot going on in the back. And we'll dive into that right now. So one of the strategies, our newest strategy. Now, when I say new, don't get worried about it. There's been 10 years of backtest data on this strategy and many, many iterations that we ran before pushing this bot live. It's currently in beta. We launched it back on September 17th, live trades. Yeah. So been live here for a little while now. This King AI strategy, it is I like the iceberg picture you got here in the middle, Ben. It does a good job of saying, hey, look, on the surface level, this is an incredibly simple strategy. It's a 1DTE iron condor on SPX. Okay, so we're trading the entire market, if you will. Once it's in, right? Keep calm and condor on is our saying here at Peakbot. And the data shows that it's better to do so. And so it truly is set it and forget it. So the user experience, and we'll show you a picture of what that looks like here in a second. And there's demos on our site and everything else. But it's so incredibly simple. Select what strategies you want to automate, set your budget, and that's it. All right. So we want to keep things simple. However, behind the scenes for King AI in particular here, it's called AI for a reason. We're utilizing machine learning models that we've built here internally that are analyzing over 300 different market data points for the bot, to enter a trade. Okay. We've got over 10 years of trade data, which is available on our website, peakbot.com, if you want to check it out, as well as live trade data. But all that, when I say all of this is happening, the model is here to select two things. What strike prices / delta do we want to enter the trade on for this iron condor, okay, which is a neutral range bound strategy. But I am going to strip it back for a second. For anybody who may not be familiar with an iron condor, okay, we're selling an iron condor, we're short, so we're collecting a premium. We have both a put credit spread and a call credit spread, creating a neutral range bound position where we profit if SPX stays within these two prices. We're going to share a visual of that in just a minute, okay, just so you can kind of see what's actually happening on the chart. But AI and our model here behind this bot is to determine A, what strike prices do we enter at, and B, should we even take the trade at all? Because sometimes the best trade is no trade at all. Okay, so when there's certain economic events or volatility index is too high or too low, bot it will not enter the trade. So that's another decision that you don't need to make. A lot of us have great strategies, great trading strategies. We just don't know when to trade them. All right, so that's not a worry here with Peakbot and any of our strategies, of course, including King AI. So a little fun fact here at the bottom, King AI actually skips nearly half of the trading days. Okay, so it's set to trade every day. If the criteria is met, it could trade every day. A 1DTE iron condor, meaning it opens today, set to expire tomorrow. And we'll sit out. Okay, there's been a lot of really messy trades that we don't get our part of because the bot dictated no entry today, too volatile, or whatever it might be. Ben,
that's right. Tell
me what I missed high level on King AI. If we're good, let's keep moving.
No, I think you're good. Let's keep on moving along here. And you mentioned there's only two decisions for the trader. The bot is making two major decisions, but for the trader, there's only two decisions here. That first decision is how much cash am I going to set aside for this strategy? So you set your budget, and then you really just decide if you want to activate the bot or not. It's really that easy. And I know, Dylan, whenever you or I give a demo and we show how quick it is to get a bot set up on Peakbot, it's kind of like anticlimactic, right? Like, it takes like 20 seconds to get a bot set up. But here's some of the fun facts about the King AI strategy. Since, and this is back tested and live trade results that we're talking about here, since we started running the back test in January of 2016, so that's almost 10 years worth of data, of trade data right now, there's been a 95% win rate. We're seeing that play out live right now in real accounts at the moment. We've got a decent amount of people trading King AI at the moment with us. I actually just got a report before we hopped on here. I was surprised at how many people are already on King AI.
Numbers growing every single day. And we'll show you the live results in a second. Go ahead, Ben. Sorry.
There's been an average of about a little over a 5% average monthly return. This is the really cool part. So Dylan, you mentioned we've got AI ML models that are behind the scenes doing all this work. They're analyzing over 300 different data points at the time of entry. And that includes things like options Greeks, ATR, moving averages, RSI, We've baked a lot of different data points into this model, and it only takes about 1.5 seconds for that model to process a trading decision that is to trade or not to trade. And that's also, hey, what strike price are we going to place the call credit spread of the condor and the put credit spread of the condor? Are we going to place at the 10 delta, the 20 delta, the 25 delta? So the model's looking at, based on a confidence level, what delta is the optimal delta to place the strike price at for that particular trade. And it's been really cool to watch this happen, because I know for me, like, does a much better job at picking deltas than I do.
Oh yeah.
But it is learning on itself over time as well, right? Like, there's over 1,000 trades that we have trained it on, but every day there's a new trade placed. And even if there isn't a new trade placed, we will simulate a trade in the back end. So that way we have that data to further train the model. And so every day this thing is getting smarter. And that's what I really love about it, Dylan, because we know, and it's important for everybody to know, that most trading bots, and I maybe will even say all trading bots, have a shelf life before adjustments are needed. And that is another thing to look out for. If it's not Peakbot that you're going to automate with, ask yourself, hey, is this bot provider updating their strategies periodically? Because the market's changing, strategies need to change along with it. The edge will work itself out after a certain period of time. So that's one thing that I love about this strategy, is always learning on itself. It's constantly adapting to current market conditions, and we're seeing that play out, of course.
Awesome. So we can click on over to some of the live results here. Okay. And I believe we entered one today, right, Ben?
We did.
So we're in one that's going to be set to expire tomorrow. So we'll see if we can continue to pad the stats here. But let's talk about numbers. And actually, before we dive into it, because I know you're already reading it anyway, because this is what you've been waiting for. Just to strip it back, all of this is made available incredibly simple by integrating your Tradier account. Okay. And I want to talk about, along with the results, how much money, truthfully, if you're on another brokerage for any reason, how much money can be saved by moving over to Tradier if you're utilizing their Tradier Pro or Pro Plus. When you're doing SPX, iron condors every day, Ben, this adds up, doesn't it? I mean, absolutely insane. If you're trading with real volume, 25K, 50K, 100K, you're going to spend thousands at the end of the year in fees. I know I'm going totally off the track here, Ben, but I talked to 3 people today from a broker in which we normally wouldn't state here on this channel. All right. And I can't believe how much they're saving or spending on that brokerage just to come over. Anyway, that was just a little plug for Tradier because they deserve it. Real live results. So this bot, King AI, launched on 9/17 of this year. All live trades taken. Again, go to our website, peakbot.com. You'll see the full list, okay? A whole Google sheet of results. But we've won 23 of the first 25 trades, all right? We always say this, right? I'm going to say one of those losses was on the Trump China tariffs on 10/10, and we just took a beating, as probably did most iron condors that day. But so that's a 92% win rate. The cash on cash return is over 68%. Now, that's based on the $2,000 needed to place each trade. Okay, cash on cash. It's a $10 spread, so you need $1,000 there minus the premium you collect. Plus, you can be in tomorrow's trade at the same time. That's where we get to 2K. All right, so cash on cash, 68%. It's made over $1,300 since 9/17 in just 25 trades. Okay. So an absolute fantastic strategy. Just to provide a little bit of a visual here, Ben, if you want to head on over to the next slide here, and I'm going to make this full screen just so people can see it, because I think it's important. This is a visual of a live trade from King AI. This is representing you trading 1 unit. I think it's important to mention that with Peakbot, okay, and a subscription in which we are going to be handing out free access to King AI, okay? So hang tight. It's really important to visualize this and know that this is per unit, and you can trade multiple units with Peakbot, all right? So this is a real trade, $220 win from October 1st into October 2nd. So 10/2 was the expiration date. You can see on screen here, the trade opened on 10/1, right around 3:15 p.m. Eastern. So it enters sometime after 3 Eastern, okay? and it's set to expire the next day, which is that next vertical line there. Okay. So you can see our profit zone. This is where we are trying to stay in between. Our iron condor on this day, Ben, if I had to guess with a $220 premium, if I had to guess, I'm going to state that this was probably around the 15 or the 20 delta, you know, somewhere around there. Okay. I'm not looking at it off the top of my head, but to collect $220 on a 1-day SPX iron condor, that's fantastic, especially when in a day like this, we never even sniffed trouble. Okay. We can see we got in the next day, the market opened pretty high, but came back down very quickly and then just chop and float right in between our profit zones. So we expire out of the money and we take home $220 per unit on King AI, fully automated. Okay. So it's important to understand that this is just one of Peakbot's automated strategies. This is a neutral range bound strategy where we want to stay in between two prices. We have bullish strategies. We have bearish strategies. We have something for every market. Okay. So it's very important to keep that in mind, but I wanted to give you guys a visual as to how you can win with King AI and how we're doing it 95% of the time. Ben, back to you.
Back to me. So we asked this question a little bit earlier, what's holding people back? And we kind of determined it's trust. So here's a couple of facts that will further hammer in that point. 61% of traders indicated they would not be open to using AI/automation when trading. That number is going down year over year. I think the stat for 2024, this is something that eToro seemingly does every year based on what I was able to find. That stat was at like 68% previous years. So that stat is going down. More and more people are becoming open to it. And as the adoption of AI further increases, which is inevitable at this point, that stat's going to go way down and way more people are going to use AI and automation tools. In fact, trust increases by roughly 200% when a trading bot's logic is transparent and uses a familiar strategy. Now, in the context of this study, bot's logic, meaning the automation strategy, whether it was for retail or whether it was for a hedge fund, overall, the increase in that trust increases by about 200% when you know what the strategy is. And when we think about it, we trust things that we understand, right? Everybody, I'm sure everybody listening, with the exception of maybe a few people that have never been on an airplane, we trust autopilot in airplanes. And that's because we've seen it work before and we see it work every day. Yeah, do accidents happen? They will.
UPS trucks go down. Yep.
but for the most part, we're all trusting that autopilot. And with trading, where the stakes are much lower than, an airplane, the same trust can be established when you peel back the curtain and just show what is happening. So trust is earned by showing. We've absolutely found that over the past 5 years of doing this. People don't want to buy into a black box system. They want clear rules. They want consistency. They want to know what to expect. And if you want to know what our strategies do, it's all free. It's all information that you can find at peakbot.com/strategies. If I had to guess, I'd say Dylan's typing that right now to put it up as a banner on the screen.
Yep. Trying to.
But
what was it? Was it just our website, right?
Peakbot.com/strategies.
Okay. There it is.
Awesome.
All right, Ben. Moving on.
Moving
backstage.
on.
Go ahead.
Moving on. So as we were mentioning before, we kind of brought out a couple of little tidbits of what to look out for when you're considering using trading bots. Shopping for a bot is like shopping for a mutual fund. You want to know the thesis, you want to know the risks, and you want to know the process. So you want to ask yourself, hey, is my bot AI? What happens if the market crashes? What rules does my bot follow? Can I modify it? Can I turn it off during earnings? Can I do X, Y, Z? And you have to make sure that that bot fits within your comfort zone. Now, we get people that come to us and say, hey, can I modify certain parameters of the bot? And our answer is no. We designed a very simple process intentionally. We want to keep things simple. And as we progress further in technology and technology available to retail traders, we do see a consistent rise of options available for trading automation and simple trading automation. And I love that there's more and more adoption every single day of this technology. I do think that it's a huge supplement to people that cannot be available to place trades on their own, but want to be active in the market, and maybe don't trust anybody else with their money, but will learn to trust a bot that follows a consistent and clear path. So Dylan, you want to round us out here, and then we'll get to our offer.
Let's do it. So look, algo trading can be scary. Using an automation, using a bot to trade for you while you're busy with work, it could be scary, and we get that. But that's why you got to be with the right people. That's why you got to have the right people in your corner. We have been doing this for quite some time. I like to say this: we did this before there was ChatGPT. We did this before AI was AI. When Peakbot was founded, AI was still Allen Iverson. Okay, maybe Andre Iguodala. Certainly not artificial intelligence.
To the everyday person, yeah, absolutely.
Yeah, totally. So look, we do this the right way. We don't cut corners, and we give you full control. Yes, you're using a tool and a great brokerage partner like Tradier to execute trades and place them fully automated on your behalf. We call it hands-free trading. Okay, and the beautiful thing, and we've talked to our traders over the years, and we've run polls, and we know that 82% of our traders, I think it should be 100, but that's fine. 82% of our traders feel safer knowing that they can manually intervene at any time. Log into your Tradier account. You want to get out of King AI strategy tomorrow at 12 o'clock because at 3:30 there's a speech and it might throw up something, and you get out. Peakbot's going to pick up where you left off. No problem. Now, I'm not a financial advisor, but I'll tell you what I see is people create bad habits of getting involved too much and letting their emotions take place. When, Ben, I give that example the whole time, like on our one Shorebo trade or King AI the other day. I'm ready to get out for a $220 loss just to save myself, but I let it go and we win 130. Like, let the bot do its thing. But you're always in control. Okay, you have risk-defined trades here. We don't have any naked options. You know what you're risking going into the trade. You know what stock you're trading. You know when it's entering. Again, all of the details are there. And if there's no criteria met to make this a good trade, it's just simply not going to trade. So we handle the placing of the trade. The broker handles the execution, and everything else is handled for you. So Ben, let's talk about what we're giving the good people here. First of all, QR code. For those of you who know how to use a QR code, just whip out your phone, grab an image of this code here. We're handing out a free subscription to our King AI strategy. Okay, so those are the results in which we covered here today. Know that you're getting King AI free for 30 days. All you got to do is integrate with your Tradier account and you're all set. Okay. I think the URL is funny. I don't think we can.
Yeah, free King AI, freaking AI.
Yeah, so if you want some freaking AI, just head on over to. And Ben, was that a mistake? I think we got lucky and stumbled into that.
It was unintentional for sure.
Yeah, that's what I'm saying. Okay.
Yeah.
So head on over to freaking AI, all right, or use this QR code. Get a free month of reliable automation that you can trust here with the Peakbot team. And just so you know, when you're ready to rock and roll, you get access to all of our bots. We got 5 automated strategies right now in the starting lineup and more to come. So peakbot.com/free-king-AI, or just use the QR code. Ben, I know we're close to time here. Maybe Lex, Molly, you guys tell us what we should or need to do here, but we're very excited to have presented here on the summit today. So thank you.
Well, gosh darn, here we are.
We're here.
Great job, guys. Awesome. As always, you guys do such a wonderful job. Thanks for all that. I'm going to be honest, the freaking King AI, that's really good. Tell me you didn't think about that. You thought about it.
I didn't put the link together, and I didn't even realize that it was funny until somebody pointed it out. But
that's the best kind, right? That's awesome.
Yeah. I will say I'm really excited about the FemBot that you guys are building, and it's not bring your own bot, it's bring your own babe. So we're gonna go with that. And
There you go.
that's what makes Tradier so great, because it brings products like yours, which, you know, I don't know, bots, if you don't, it sounds daunting, but just jump in. And if you're going to jump into bots, jump in with these guys, because it's like you say, it is antiquated. It's so, you make it so easy, and you want to have that under your belt, because you just want to feel cool when you walk into a bar. You want to be talking about your bots. I mean, that's the only reason.
That's,
So
you want to be talking about?
it's not a date. You want to say I'm a bot trader, and that's instant points, and that's
it is.
the
It
reason
is.
for your product.
It
But
keeps
thank
things
you,
simple.
Tradier, for bringing you guys. Yeah.
Oh, that's awesome. You guys are great.
Thank you.
So a couple questions. Got to have a few questions, right?
Sure. Hit us.
And Molly, if you have any, fire them away. But first one, so you and Ben, you and I talked about this at dinner, I think in NYC a long time ago. So you chose to make, I'll just call them simple bots for lack of a better term, instead of going down the BYOB version. What was the reason for that? And if you say everyone's dumb, I'm going to agree with you, because I'm dumb. I am totally dumb, and I could not do it myself.
The real reason is I'm dumb, and I was the one having it made. No, I mean, I think, and Dylan, feel free to chime in here. We wanted to build simple bots because people will understand simple bots, and we knew very early on that we needed to be able to gain trust from people, because hey, this is a big deal. A trading bot is literally entering your trading account, and it's going to place trades for you. That's kind of scary, right? You want to know what it's doing. So if I came up to you and I said, hey, yeah, we're following this, the MACD, and we're looking for RSI to be below 30, and 10 different indicators, and you're trying to figure it out on your chart just so you could like track what the bot's doing, because people do that, right, Dylan? People will track the chart and make sure the bot's doing what it's supposed to do on the chart. And we're like, hey, just let the bot do its thing. But if you had to explain these complex strategies to people using all of that jargon, you lose them.
I mean, zero DTE plus Iron Condor. I mean, does it get more complicated and scary than that? And so that was like the perfect combo. Like my heart stopped. I'm like, oh my gosh. And so yeah, you need bots for those guys, especially rolling.
Now, what happens if a user says, hey, what about this idea? I would like you to make a bot that is called the whatever, and it does X, Y, and Z. Is that something you would consider? Oh, you're on mute.
Dylan, mute.
No, I was on mute.
Oh,
Fine,
no.
sorry. I get fined for that. I'm going to be having to take the Peakbot team out to dinner now.
Yeah, the commissioner is going to send you a fine.
So largely, Lex, to answer your question, we listen to our traders. Our traders are some of the smartest people in the world. We've had traders save us before with a new idea and everything. But I don't want to put the idea out there for people watching that, hey, you can come to us with your trade idea and we're going to automate it. Largely, no. However, we listen. We are constantly updating our strategies. And a lot of the times the updates we need to make to our strategies are because we've heard some pain points or some great stories about returns on specific strategies, and we take a closer look and we get more involved. And the last thing I'll say about, the BYOB, it's really easy to build a strategy that looks great on paper with monopoly money in a trading in a paper account. And then you launch it and you get kicked in the face and you're just like, what? I did not see this coming. My bot didn't lose for 100 days. How am I? So the BYOB is good if the person who built it really knew what they were doing. And it takes a village. I mean, Peakbot, we've got a small village here, running and making updates to these strategies in which we're providing to retail traders today. So I know we're over time, so I apologize unless we're the last.
No, that's okay. We got a minute here. So I'll give the two-part question then. So we can keep it moving. You mentioned that, obviously trust is a huge factor. Part one of the question is anything that are just red flags or just no wake zones whatsoever. That's number one. And on top of that, they don't really relate, I don't think. If someone said to you, hey, I know I can pull these bots off the shelf and use them, wonderful, but I want to look under the hood and poke around and see what these things really do. Is that available as well? So can you answer both of those? And
which one you want, and I'll take the other one.
I'm going to give the quick answer here. So,
Go ahead.
In terms of the no wake zone, right? If you go to and this is going to answer both at the same time. If you go up to a bot provider and you say, I want to take a look under the hood, and they say no, I think that's a red flag. It's something that we do provide. You could go to peakbot.com and check out all of our strategies and the logic behind the strategies. And you could ask us questions. You could set up time with myself and Dylan or other members of our team to talk about these strategies, to learn about them even more. We're very generous with our time. We want to build that trust. We want people to use this that are serious about automation. But if the bot provider is not telling you what they're doing behind the scenes, or they're not updating their strategies, those are kind of some red flags that I would be aware of.
Okay.
Yeah. If they don't lose, if the bots don't lose, they lose. Run away.
Run away. You get it.
And if they're only showing back tests, run away. Back tests are great, but they're not the live thing, right? So you got to see live trades as well. So those are some things to look out for. And Peakbot provides education on at every level. So if you want to know more about how these bots are built, we've got it for you.
Awesome. All right, guys. Thanks so much. As always, great job doing that. Always a fun presentation. You guys are great
Can I
personalities.
just ask one question? I'm dying to know.
Yeah.
Okay, how are you guys stepping into the DeFi world? Are there DeFi bots, and what are those? And I'm just so interested in that.
Oh man, we're not touching that space right now.
All right, next summit.
Yeah, there's a lot of options though. There are a lot of options there.
Yeah.
It's much less regulated. It's much harder to find a reputable provider in that space. Maybe we'll make our way there one day. But hey, we like to keep it simple. Right?
Yeah.
So,
Oh yeah.
So
all right, guys. Thanks so much. We'll catch up next week. Awesome.
Thanks,
All right. Thanks, guys. Bye
Welcome
now.
to Tradier's upgraded web platform. Derived index and quote data. What was once delayed is now updated more frequently, helping you track market shifts and act with profits. Enhanced Research Center. Get real-time insights and market data all in one place. Stay ahead with built-in trading signals that help guide your next move. Getting around is easier than ever. All your essential tools just a click away. Efficient multi-leg order entry. Quickly build complex strategies with an intuitive layout. String mined trade ticket. Check orders, monitor positions, and close trades faster. Clean, readable quotes. Easily navigate the market with simplified quote views. Manage your account funding with ease. Option chains. Jump between strikes, spot opportunities, and build strategies fast. Use the trade stager to construct your trade, then send it straight to the ticket. Want to put your portfolio to work? Enroll in fully paid securities lending and earn passive income from your long positions. Log in now and experience the new standard in trading.
Dang, those commercials are good.
I know. Bravo.
Hey, look at your little background there, Ma. I feel like I'm in a Tao at Vegas.
Right.
So-
I'm in some sort of Tropicana, Florida.
Yeah.
I don't know what's going on here.
Pretty vibey. All right, let's get rolling. Next up, Ernie. I'm going to say his name wrong, and after we're done, he's not going to see me till the end. I'm going to have him say it because I'm
Lex, you're being way too hard on yourself. You're doing it amazingly. Like you're just
Varidamos, and I saw the I in there. I was going to say Vardamos, but I don't think that's right. Varidamos. Ernie's a genius, I think. He fly on the wall, zero DTE specialist. He's going to tell us all about his offering. The original zero DTE butterfly strategy is part of it. I'll let him take it over, and we'll come back and ask questions at the end. What do you say, Ma?
I love it. Let's go.
All right, let's go, Ernie. I think Ernie's having a little bit of an issue here. Let's let him figure that out. This requires the blue hat. So while Ernie fixes his little issue, Molly and I, where's Molly? There's Molly. I mean, you never know. You could be in a costume change, and I throw you back in.
Actually, I was earlier. Someone could in the backstage could have seen that, but I messed it up.
That might increase viewership too. For God's sake.
This is the cool thing about being live. Like, this is live, so this is great.
I know. Well, inevitably, someone's going to have an issue with sound or something. Although I did start to hear him a little bit, so I'm not sure what happened there.
Yeah. So anyone with a keyboard that great, I want to tune into.
That's pretty cool.
Yeah.
Ernie's a good guy, man. I hope he gets this thing. Let's see. He's coming. All right. He's got his hands up. Let's give it a shot, guys. All right. Ernie, you good?
Can you hear me?
Yeah.
I can hear you. All right. We're going to get out of here so you can get rolling.
All right. Wait. All right. Hopefully everything will work here.
All right.
All right. Go ahead and share your screen, I think.
All right. Let's see. Right. I don't have any controls here.
Okay. That's all right. We'll figure it out.
So just try to share your screen right there. And the boys in the back room will help you if you need help with that.
All right, I'll give it a shot.
Okay, so yeah, hit share screen, and then I think you can share the entire screen if you want versus the window. I don't know which one you prefer, but
yeah.
Okay, give that a shot. See how it looks. Yep. Pick the screen.
I have to go through the security.
Yeah, oh yeah, you got an Apple or something?
Yeah.
Yeah, those are always fun. I have one too.
Entire screen.
That's a source of I don't know.
Relax.
Source of soreness.
We try.
Yeah, let it share. Do all the unlink the privacy, etc. On that note, it's going to close the cocktail hour, and I'm going to take a little.
Right. Like you to.
And I already did this once with your guys in the back room, in the green room.
Okay. How's it going?
It went fine, but now I have to do it again.
Okay, that's all right. Take your time. Take your time.
I was telling them I've only been in technology for 45 years. What do I know? I'm still learning.
It's always the way.
So it tells me that I have to enable it, and I keep on enabling it, and then it doesn't enable. All right, I'll do it one more time.
Yeah, try it again.
Share screen.
Molly's doing a Chat GPT version.
Entire screen. See, when I hit entire screen, it doesn't pop up. Open system settings.
Yeah. Maybe try sharing just the window or something like that. The window you want to share.
No, I'm getting there.
Okay. Yep.
Oh, good. The boys are helping him back there.
You know what happened? He just got like exit stage left.
You got the hook.
He got the hook. All right, he's coming back.
The floor drops out.
Did that do it?
There he goes.
All right, try it again.
Let's do it.
You can see me, right?
Yeah, I can see you, but we can't.
All right. All right. Well, I couldn't see you before.
Oh, okay, good.
So I'll share the screen.
Let's see what happens. I'm hoping for goodness. Oh, something happened. Yeah. Okay.
So you see it. So you see a screen, right?
All right.
Now we're gonna get out of here.
We get the dropouts.
All right, Mal. I'll see you on the surf side.
Okay.
All right, Ernie, go ahead and go at it. We'll see you in 20 minutes or so. 25 minutes.
Awesome.
Okay. Thanks, bud.
All right. Thank you very much. All right. How you doing, friends? My name's Ernie Varatimus. I'm the owner of zero-dte.com. I've been doing zero DTE trading for, well, I don't know, probably since 2007 or 5, I think, when they came out with weekly options. And I remember I started doing that with Apple. And then I've been an institutional trader and a hedge fund manager. And so in that time, I kind of dropped away from it and started focusing on futures. And then as around 2017 rolled around, I noticed that zero DTE was really picking up amongst institutional guys. And so I started to look into it. I developed a strategy. I saw a service that was there. I decided to join it. I couldn't believe what they were doing, trading iron condors with unbelievable risk for tiny little profits. And I said, oh, there's got to be a better way than that. And so I showed them what I call the inversion of risk strategy, which was nothing more than an out-of-the-money butterfly. And it showed them how to take very small risks for huge payoffs. So anyways, a bunch of people started following me because they started making money and stopped losing money. That was the big one. I developed a huge following within the service, so they kicked me out. So that was my impetus to start my own service. And it actually started with going on to Discord, and a bunch of the guys at the service followed me. And so we started farting around with Zerodte strategies, and I'm showing them this inversion of risk strategy and the idea of asymmetric trading. And so that's the presentation that I'm going to show you. But that led into a coaching service that I've been doing now for 5 years. And then most recently, I've been developing tools along the way. Just so you know, my background is not only in trading, but prior to that, I was heavily into technology and, in fact, a chief architect for Sun Microsystems during the dot-com era. So I've got a lot of experience when it comes to systems and development. So I decided to build my own tools that would give us visualizations of the market. But anyways, I'm going to go through a very quick presentation and then a little learning experience about options and gamma and volatility and premium decay and how this all kind of leads into it. I'll be very quick with that, and then we'll jump right into the tool and how it solves all that. All right. So the first thing is you never predict. You want to be positioned. In other words, everything that I just already said here, that you want to pay a little, position yourself, and be in position for that big move. Now, it's not always going to come. In fact, most of the time, we are in what we call the roundabout. If you've read The Tao of Capital with Mart Spitznagel, he has that term called the roundabout. That's where you're essentially churning and staying in the game. Small wins, small losses, and positioning yourself for the bigger win and waiting for that to happen. And when it does, it pays big. The key here is that you're not drawing down. You're not, you don't have big volatility of returns. You keep on moving forward and raising the needle. So everybody else there trading with huge risk. I mean, I'm sure all of you have spent most of your time, worrying and all about risk management and wondering if you're doing it right, or maybe you're just not quick enough, or you don't know the right strategy, or you think your emotions are getting in the way. Well, all of that is true, but the reason why is because you're just trading the wrong thing or trading the wrong way. So that's the key here. All right. How traders bleed. We just click too much, we get nervous. And why do we get nervous? Because we're faced with huge risk to make what? A few bucks. It's like, what do they say? Picking up nickels in front of a steamroller. You're chasing the news. You have no exit before the entry. That's a very good one. When we get into a trade in my service, we already know our scenarios and what's ahead of us. So we might have 2 or 3 scenarios already planned out, and when they happen, we know what to execute. And it's simple. Well, it makes it simple. We're not guessing. All right, next slide. Anchoring to levels, instead of the clock. That's important. A big part of what we do, like I said earlier, is we're kind of stewards of volatility and gamma and premium decay. But what's more important, even in what some people will call, it doesn't matter what direction or directionalist trading in options, which really isn't true. There's still direction, and it's going to bite you if you're not positioned correctly. And so we anchor ourselves in the structure of the market using volume profile and also gamma. In fact, you're going to see in the tool that I'm going to show you how volume profile and gamma work together. Well, they don't work together. They're kind of an artifact of one or the other. So volume profile obviously is where all the trades have happened. You have nodes and then the lack of nodes that I call volume wells. And then you have gamma walls that are kind of the institutional and the dealer positioning for that day. And they're all lining up along the edges of those structures. So doesn't it make sense for you to be lined up there too? And that's one of the base strategies that we use. When we trade according to how much volatility there is, what the potential is, and we are looking for a structural level to lean on. so that we have an increased chance of being successful. Most plans skip exits and journaling. That's interesting. So yeah, I'm sure that everyone's told you that you have to keep good logs and good records and journal, but how many of you actually do it? That's what I really want to know. So small cost, optional big upside. Spend tiny, fixed debits, hunt rare, outsized profits. If you're going for win rate, you're going for the wrong thing. You should be going for the return on the capital that you put to work. That is way more important. And also controlling your Sharpe ratio, the level of volatility you have for the amount of returns. How efficient is your money that you're putting to work? That is way more important than win rate. Win rate is a canard. In fact, most high win rate strategies, the reason they're high win rate is because you have to put up a lot of money for a tiny little win that might happen often, but it is inevitable that you're going to hit that big loss. It happens to everybody. There's no way to stop it. You're going to hit it, you're going to draw down, and you're going to go into a tizzy. And then when you go into a tizzy, what happens then? You start making worse and worse decisions, and those decisions result in a spiral, and it's hard to get out of. Once you've drawn down 20%, it is super tough to get back. You've got to make back around 30%. You get on a 50% drawdown, now you have to make a double in order to get back. That's craziness. Why people allow themselves to do that is just beyond me. When we trade, we're shooting for drawdowns less than 2%, 3%, maximum 6%. And it's not that hard to do. You just have to position yourself correctly and not take those huge risks and sit there and be patient. You're in the roundabout waiting for that big payoff. And Zerodte is really the ultimate way to do this. And you'll see that in a bit. I'm going to skip ahead a little bit because we're going to talk about dealer gamma levels and volume areas and all of this stuff. Let's see, what else do we have here? Yep. You're going to see how our tool will take care of, see, the 5 steps, same order daily. This is absolutely right. So every morning we're looking at volume profile. We're looking where the gamma walls are located, seeing if we're in a compression or expansion. I know all of these terms for a lot of you are just Greek, right? I happen to be Greek, so I can translate for you. And not right now, but let's just say that you don't really need to understand all of the jargon. The jargon is really meant for those people who want to seem superior. What you really need to know is, what is the chart, what is it doing, and how is it going to affect me? And you're going to see how our tool will tell you exactly that and guide you through it and hold your hand through the process. So we get our gamma walls in place, our volume profile, our LVNs, our HVNs, that's the low value nodes, high value nodes. What regime are we in, pinning or expansion? Volatility regimes, are we in zombie land? Are we in this sort of Goldilocks zone? We're checking our heat map. We're looking for convexity. What does that mean? We're looking for those trades that nobody else wants, but they're right on the edge of what everybody else wants. Think about that. We take trades that are just outside of where everybody else wants to play. Now, we don't get hit as often, but the big plus of that is that we pay very little for those trades, and we get paid big. And build the fly ladder. That's interesting. So we'll get into that. I'm trying to rush through this because I want to get to the meat here. Fewer guesses, more guardrails. Of course, you want to be more efficient with your trades. Who wrote this thing? Expect small scratches and small losses by design. That's true. It takes patience, though, with this kind of strategy, because you're not there to win every day. I know everyone likes that dopamine drip, but that's not what pays. The people who have patience are the ones that get paid. Sometimes you catch a move and the payoff is many to one. In fact, I've had trades on a daily basis. Most people are in options trading are just pleased as punch to get 10 or 15% return on their capital. When we trade, it would be unusual for us to take trades at 10 or 15%. We're typically looking for 200, 250, 400, 1,000% return on our trades. All right, so that's and when we lose, we're losing super tiny. Okay, we'll get into all this. Anything else here? The problem is decay bias. Okay, yes, of course it is. And we'll get into decay bias right now. So I'm going to talk a little bit about premium decay, more specifically the rate of decay and how it affects your trading. And what you're seeing here is a weekly option. That's what we're trading as Zerodte traders, the SPX, the NDX, SPY, the ES, the NQ, all those index things. They're all trading every day. They're weekly options, but they have expirations every day of the week. And this is showing you a weekly option and its life cycle. Each column represents a day in the life of that option. It starts off with lots of premium, and then over time, it slowly decays until there's none left. And you can see in the Zerodte day that decay is incredibly high, the decay rate. And on that last day, man, you can have as much as 50% of the total premium that existed in that contract on that last day. That's why everybody loves Zerodte. But the other part is gamma. Gamma is the steep curve that comes along with that and the rate of decay. So the thing is that this rate of decay is kind of a normalized view. It changes dramatically depending on one thing, volatility. If volatility is high, that decay rate starts slowing down. Options become bloated with premium. And so that naturally raises the value of your option contract. On a single option contract is what I'm talking about. In a low volatility environment, the decay rate is increased dramatically. So most of the premium that you're hoping on that Zerodte has already been decayed on the day before or the day before that. And so you can say that the rate of decay has increased dramatically in low volatility. And when you get on that Zerodte day, there's very little premium left. And so we'll see what that looks like in the next slide, kind of like this here. So you can see the high rate of decay at the top, lots of premium, lots more left on that last day. In the low volatility, it decays faster and before that last day comes. So we have a lot less premium to collect on that day. Now, here's the kicker. We trade butterflies. Why do we trade butterflies? Because they are the most efficient way to give yourself a risk to reward, play direction, and play premium collection at the same time. Easiest way to do it. And so let me show you what happens when we have these two different environments. So we have low volatility and high volatility. The effect of accelerated decay in low volatility is that, as you can see on the left-hand side, on that option, now I have two butterflies here. They're both sitting there, same size, at the money, and they started at the same time, let's say at 10 o'clock in the morning, right? And the first one is showing you what that butterfly looks like when volatility is super low. Maybe the VIX has dropped down below 16, 15, whatever, and it's just a dead day. All that premium has already decayed. It's gone. And so the potential in that fly is very little. And so what you're left with is huge risk, tiny little potential. And it's the same thing no matter what option that you're trading, all right, because we're after that premium. On a high volatility day, it's exactly the opposite. There's lots of premium left, so therefore we have lots of potential left in that trade, lots of profit potential, little risk. You see the difference? Where would you rather trade? A lot of people think that low volatility is less risky, and it's not true for options traders and specifically for Zerodte traders. High volatility is our lifeblood. It gives us low debit, high profit potential, and probably the best part about it is the gamma. What is gamma? Gamma, next slide. Gamma is your sensitivity to price movement. In low volatility, because of that accelerated premium decay, we have very, very steep profit curves. And that steepness produces a very high sensitivity to price movement. So if price moves, say, 10 points, I fall down the edge of that gamma curve, that profit curve, like you wouldn't believe. I slipped up a little bit and gave away the secret. So in low volatility, gamma is super high. My sensitivity to price is super high. So that's another problem. High risk, low profit potential, high sensitivity to price. Every single part of low volatility just totally blows. And high volatility, because we have a lot of potential, that profit curve is super flat, right? And so the sensitivity to price is very small. That means that the gamma is super low. So now we have low cost, high potential, low sensitivity to price. Everything about high volatility is where you want to be. Now, we can't choose whether we have high volatility or low volatility. The only thing that we can do is make sure we come to the game with the same risk in mind. And so that's what we do. But because of this situation, when we have low volatility, it forces us to trade smaller. And when we're in high volatility, we are released to trade about as big as we want because there's less risk and more potential. So that's what we do. We figure out where is the best time to trade, when is the best time to trade, how big are we going to trade to adjust for that differing conditions. And then that's essentially our strategy. Now, there's a little bit more to that. I said that before. We have to also make sure that we're positioned structurally too. That's also important. So let's see. We'll go on to, I think I'm making pretty good time, huh? All right, cool. So we'll go on to the system. Close these. And I got to log in. Sorry about that. All right. And I'm going to bring up another, I have a video that I took earlier that shows what it looked like in the during the day, and it's much better. So maybe I can bring that up. I thought it was all set up here, but the technology gods were against me. Only 3 more clicks and I'm there. There it is. All right, so this is the system. It's on a site called Fly on the Wall. And if you're interested in what that looks like, there's the dashboard. Fly on the Wall is it's all flyonthewall.ai. All right, so what we'll do is we'll make this big so everyone can see it better. There we go. So this is a visualization of the market. Everything is in near real time. You're going to get data that's changing several times a second, maybe a few seconds behind the actual market. But it's giving you a picture of the gamma and gamma exposure. That's the chart in the lower left, and you can see the volume walls and the gamma walls. And behind it, you can see the volume profile. The volume profile is giving you a view of the profile for the last 3 months or so that you can see how the nodes of that profile are lining up with the gamma walls. Super important. Over to the right here, you're seeing a convexity heat map. This is all lined up with the gamma, and you can see the strike prices. These are all the different butterflies that you can trade. They're the center strikes, and then the size of the strikes that you want. So let's say, well, where do I trade? Well, I trade the ones that have convexity, where the price starts dropping off dramatically. So you can see where it drops off very clearly by the color change. And where it starts going from blue to red, I know that these are the ones that I want. They're going to give me the right price with the best convexity, the best return on my money. And if I wanted it, I just click on one of those and a window pops up, which I can't do because this is a video. A window will pop up. Actually, I can probably do it on the other one. Where is that? Is it this one? No. Yeah, it's not cooperating. So anyways, the convexity heat map is a place where you can very quickly locate a trade, click on it, a window pops up giving you all the specifications for it. You click on it, you can copy and paste the trade into your Thinkorswim, or you can soon, in maybe another month or so, you'll be able to click on it and send that order directly to your Tradier account. I'm not promising that it's going to be a month. Let's say 2 months, okay. And then there are a number of other tools that we're providing that allow you to see gamma compression expression. That's what the market mode is. This tool up here, it's not showing it quite yet, but it is going to show you those butterflies and what is your proper risk to reward to take on this particular trade. It's going to basically show you a risk graph. And then we have our bullish bias indicator. These are all in real time. If you watch them closely, they're all moving. And the liquidity friction index, which gives you a more qualitative view of what's happening with price as it approaches those gamma walls. Now, here's the piece de resistance, and that is convexity. What is convexity? Convexity is an AI that I developed. Convexity is like part of a more broader set of operating systems based on AI that I developed called the Path. And they sit on top of any kind of AI model, whether it's ChatGPT or Grok or any of those, or Gemini, it doesn't matter. And then convexity is kind of like a domain-specific application that sits on top of that operating system. What is the Path? The Path is a decision support system that allows you to make anti-fragile decisions. Not allows you, but it actually guides you towards making better decisions. So convexity is the AI that's sitting behind here that knows all about fat tail trading, gamma, options trading, and it is a fantastic coach. It will help you understand exactly what's happening. And convexity in our tool is giving us a play-by-play throughout the market day, telling us exactly what is going on, and we can interact with it as well. In fact, we can just dial up convexity and ask it questions. So for instance, I could ask convexity here. Hey, convexity, how you doing? I'm giving a presentation talking about fly on the wall. You want to say hello to the people and tell us a little bit about what fly on the wall is?
Absolutely. Hello, everyone out there. So a quick intro from me. I'm Convexity GPT, and I'm here to help you all think about trading in terms of positioning and not prediction. Now, about fly on the wall. Basically, what you're looking at is a dashboard and a tool that helps you spot where the market might have structural edges or asymmetries. Instead of guessing where the market is going, Fly on the Wall helps you see where, say, in option structures or gamma levels might create these little pockets of opportunity. It's all about understanding where you might find a small optional trade that can give you a big payoff if the market moves a certain way without you having to predict the future.
Okay, thank you very much for that. This was not planned. I just decided to pick it up and ask her. So isn't that correct?
Absolutely. And I love a bit of spontaneity. That's kind of the spirit of what we do here, right?
Yes, I'm going to interrupt you again. So you're available to everybody on the Fly on the Wall through a play-by-play throughout the trading day. Isn't that true? So you'll give people pre-market and intra-market and post-market analysis. And what else can you do for people? How do you help them make better decisions?
Yeah, exactly. So I'm pretty much like your companion throughout the trading day. I can jump in pre-market, help you tag the regime, identify structural edges, and just kind of set up your positioning mindset. Then during the market, I can help you do those quick reflection loops. You know, is there a small optional trade here? What's the exit before I enter? And what kind of bias might I be carrying in? Post-market, it's all about looking back and journaling. We go through what worked, what didn't, and update your playbook so that you get better and better at finding those convex opportunities.
All right. Thank you very much. Appreciate it.
Ernie, we're here.
You're absolutely welcome. I'm glad.
Ernie, great job, man. We're back. So yeah, we ran over a little bit. Sorry about that. Well, great job with that. We don't have time for questions, but we do have time for you to tell everyone where they can find you and your product. So give them that link, and we'll put it in the chat as well.
Okay. So Fly on the Wall is going to be open for people to come in and watch the MVP for the next few weeks. So just go to flyonthewall.ai.
Oops, I put it wrong. Sorry, I'm doing it again. Fly on the wall.
Flyonthewall.ai.
Yep.
And just sign up with the free version.
Okay.
You'll be able to watch the full version of the application for the next few weeks, and then we'll open it up for subscriptions.
Perfect. All right, Ernie. Great job. Thank you so much. So once we got over the little hurdle in the beginning where we were great. So
yeah, I can do all this stuff, but I can't operate StreamYard.
Yeah, always the way. Always the way. All right. Well, thanks again. Good to see you.
Same here. Take care.
And Ernie, I was going to say,
sorry.
Ernie, don't worry. Einstein could never find his keys. So
that's true.
It's
That's
a
a good
sign
point,
of
Mom.
genius.
All right. Closing out the day, the last presentation, then we have one little words of wisdom at the end, is Mike Christensen from Traders Post.
Hey.
So, yeah. So this he's a good cat, too. They're all good cats. My God, everyone's good. Let's get out of here, Mal, and we'll talk at the end because we're running a little bit behind. Okay. Let's let Mike
slide out. I'm going to slide
All
out.
right, slide out. There you go.
Oh, foul right on me right away. Had my mic muted there. Sorry about that. Hey, everybody. Happy to catch up with the team here at Tradier again. Good to see Lex. Good to see Molly. I have kind of an advantage here. I've been watching a lot of the presentations and I've seen some awesome stuff on options, awesome stuff on automation. And what we do at Traders Post isn't too dissimilar. We're definitely supporting a swath of traders across asset classes and across different brokers and platforms and exchanges. So why don't I dive right in? I know we're a little bit behind. I'll just share my screen and we'll get this presentation going. And I can kind of share with you guys what we've learned about the trading space and what retail traders have been doing for the last 5 years. We have an advantage to kind of, not only connect with tens of thousands of traders on our platform, but we can also see a lot of the trade activity that comes through with every single request. And we see what's happening across the landscape and how people are actually engaging. One of the things that we, of course, built this platform for was to solve a lot of the problems around manual trading. People have really good trade ideas, maybe a good view on the market. They've got a good understanding of support and resistance, but the execution part of it is usually very tough for them. It's not just the missed alerts or delayed entries or, fat finger mistakes, accidentally put in 10 contracts instead of one. It's also just things like just hesitation, the emotionality of trading in general. And the other restriction that we often see with our users is they don't know how to make the connections to all the places and all the venues that they're looking to connect to. You've got dozens of prop firms and exchanges and brokers out there. You have lots of different platforms for where you derive your trade ideas from. It could be a charting platform. It can be your own Python environment. It could be TrendSpider. It could be, one of these options platforms. And the question is, how do I get everything linked together in a way that helps me operate my trading in a way that's efficient and automated? And that's really where we come in as a platform. We're kind of agnostic to asset class, agnostic to platform. Our biggest aim is helping traders execute their trades, whether it's systematic or discretionary. We just want to make sure that the trade executes the way that they expect it to in the venue that they expected it to execute. So we have a lot of integrations on the platform across a lot of different asset classes. What we find, of course, on our platform is that people are generating their ideas anywhere. It could be TradingView, where they have an alert or an indicator, a line on the chart, a trend line. It could be a strategy that they've built. And once that alert fires, the hang up for them is, okay, well, now what do I do with this alert? Do I have to manually go execute this trade? And that's where we step in. We've actually tapped into the alert system and their webhook connection. You can send that trade signal off to Traders Post, and then we execute the trade with the broker or exchange where you want it to. TrendSpider has the same thing, an outbound webhook connection. We are now also seeing people stand up really sophisticated AI workflows using Claude or Claude Code, where they actually pipe in their own pricing data directly through the exchanges and venues, and then execute signals directly to traders post from there. So they have the same thing written in Python or C++. Sometimes they'll use Claude to build those environments, or they'll use Claude in order to generate PineScript, which then generates their trading strategy or indicator ideas on TradingView. And then once they've set all that up and they have their signal and idea ready to go, they're mapping those signals to platforms like ours and executing in brokers like Tradier, for example. Along the way, our job is, of course, to help them with the risk management rules. Do you need a take profit attached to that? Do you need a stop loss attached? How should we manage position size? Should it be based on risk amount per trade? Should it be based on a percentage of your portfolio? Do you want to base it off of a historical risk factor? Things like that. All of that is fully automated in every account and every strategy on our platform. Where this gets really interesting, though, is how creative people are being with their types of trade ideas. For example, one very simple setup on our platform would be, okay, I've got this trading strategy that I've built in TradingView, and it has a really good return, but there are times where it's got a pretty significant drawdown, and I kind of want to avoid those drawdowns. So one thing you could do is send a signal to us where you've entered the long position in SPY, but we could also simultaneously open a put contract either in the money or out of the money, or even deep out of the money with a long expiration, depending on how you've set up the screener, that can operate as a hedge for that long open that you have now on SPY. And those things can happen in tandem with each other so that you're immediately protected the moment the trade is put on. Instead of opening the long position from an automated signal and then going and opening a separate broker account and then buying the put contract from there. So we can really automate that whole process. Another thing we see is just general directional options trading. We do also see, like many of the presenters you've seen here today, a lot of activity on Zerodte options. We support that on our platform as well. So we have some people who are generating AI-generated strategies on platforms like TrendSpider, for example, and they're just going long or short depending on what technical analysis is telling them, just based on price action and hoping to capture some of that directional move on the option side. And then the most sophisticated stuff we're seeing is things like AI-generated strategies where people are integrating Claude Code into IDE environments like Cursor. They're generating their own PineScript with lots of conditions and outlining the idea they have in their mind and working with something like Claude Code in order to generate a really well-established and well-developed trading strategy that they can now test in something like TradingView. I've even seen one user stand up his entire dashboard using Claude Code, and he's not really a very seasoned engineer, but has gone to great length to stand up a dashboard that allows him to add different agents that keep track of different cryptocurrencies and can send off long and short crypto signals off to traders post from a scheduler and a dashboard like this. This is pretty exciting stuff because it feels like retail traders are now empowered with tools that would normally be professional tooling that they can now stand up in their own environment on their own computer and use a platform like ours to execute the trades. And then finally, we're also seeing an explosion in what we call prop firm trading, where people are given evaluation accounts that they have to pass, and they're basically paid for their ability to trade these simulated accounts. And the way to scale the profit generating center of this type of trading is to buy as many of these accounts as you can up to the limitations of the firm. So in many cases, we'll see a single signal come in for a trade on futures that executes across multiple accounts at the same time. So this is another version of what we're hoping to support over the long run. And this now represents a very healthy percentage of our business, where people want to scale out to multiple accounts and not have to manage each account individually. And then finally, another thing we're trying to keep an eye on now is this idea of getting AI agentic models to compete with each other in benchmark competitions. If I give a model $1,000, or in this case, $10,000 to work with, and let it learn from itself plus the other models, is there anything it can do to start to adjust for market risk, and can it outperform some of the other models that are out there? We love seeing this kind of stuff. This is super exciting. I think it's also kind of highlighting how intelligent the retail trading market is. There's a lot of really smart people in the space that are combining all kinds of tools together and using every tool available to them in order to execute their ideas. So again, I think that we're in this stage now in the retail trading space where people are using automation more frequently. They're using AI. They're informed better now than ever before. They have all the tools in the world to execute their ideas. But I really think that as we move more into this AI space and people using it, sophisticated tooling, we're going to see more trades, more idea generation, and people really kind of accessing tooling that they've either stood up themselves or used through another vendor that starts to look more like a professional setting. And of course, that's super exciting for us, and of course, all of our brokers and exchange partners. And I think that's the high level of it. I know I'm kind of moving quickly here because I know we were kind of out of time, but I would love to take questions from here or chat about the state of how things are on Traders Post. So I'll let you guys take it from here. All right, while we're waiting for Lex and oh, there we go.
Yeah, we're getting there. We're getting there.
Cool. How you doing, Lex?
Good, Mike. How are you? It's been
Good.
a little bit, but good to see you again.
Yeah, good to see you again.
What
It's
happened
been a
to
little
Molly? We lost Molly.
Okay.
She's in costume change again.
I was going to say.
Great. That was awesome. I appreciate that. So, yeah, you know, the whole automation world, it's kind of crazy now, right? It seems like, remember, I don't know if you're old enough to remember the .com days when it first came about.
Of course. Yep.
But man, that was the new wave of technology and craziness. And if you had a .com ending suffix, you were the deal. And now it just seems like, you know, AI, and anything to do with that sort of thing is just insane, right? Just crazy. So, Mal, can you hear me?
Yeah, can you hear me?
I think Kyle's frozen. I'm the Kyle.
Okay.
I think Mike's frozen. He's frozen. He just disappeared. He might be coming back.
Oh wait, we have so many questions.
I know. Well, I don't know where he went. That was really cool. Mike's a great dude. He's with Traders Post. I think it's traderspost.com, folks. I'm gonna ask him when he comes back on traderspost.com. I'm putting this in the chatteroo here. So let me do that. Okay.
Yeah,
Good.
AI is the new big thing, and I'm wondering, you know, where it's headed. But there's this amazing story where Murati, I don't know if I'm saying her name right, but she was the CEO of OpenAI, and then she was the interim CEO when that whole debacle happened, and then she went off on her own to create Thinking Machines Lab, and I think Zuckerberg tried to poach her entire team for billions, and they all said no because she's doing this new AI that's more transparent. But I noticed he mentioned Claude, so I don't know if everyone knows what Claude is. They're built by Anthropic, and they just came out with this whole new number data heavy component that, you know, they do Excel spreadsheets, which was missing in AI a little bit. So it's incredible to see how trading is integrating with that. And then I'd love to see, you know, who knows, in 10 years when they stabilize it, maybe even sooner, probably when quantum computing comes out, how that's going to affect the whole world.
Do you think that Mike, you back?
Yeah, sorry about that, guys. The internet went out at the worst time possible.
No, that's the only time it's going to go out, when we need it. So
Yeah.
that's perfect. I don't know what you heard, but we're talking about .ai versus .com in the old days, and you were going to say something, and I'm like, did he hear me? And you were frozen. I'm like, I think he's frozen.
You were doing a Magnum Zoolander, Blue Steel.
It was more like, you guys caught me with such a hard, you know, curveball question. I just completely froze on camera.
Just pretended to be frozen so he didn't have to answer.
Yeah, right.
So I don't know if you had a thought on the AI boom here versus, you know, kind of relative to the .com. What you know, I know obviously it's happening. What do you, any high level stuff you can offer there on that one?
I mean, there's definitely a lot of analogies that can be made that certainly correlate to the early 2000s, no question. But I think what we're seeing from a practical sense is that people are setting up tools in ways that we just wouldn't have seen them do even 5 years ago. You know, we're roughly a 5-year business now, and we've seen a lot of people use the existing charting platforms out there and connect their strategies and, you know, go as far as what those tools can provide. But we're at a stage now where if you pipe in your own pricing data, the world is your oyster. You can do pretty much anything with that data, including standing up your own analysis tools. And if you've got the compute power or, you know, a couple of cloud servers, you know, the accessibility to sophisticated tooling is closer than ever to most retail traders.
Sure. I put in what I thought was your website, and I think I got it wrong because someone said, "Hey, dummy, you got it wrong." I didn't say "Hey, dummy," but I'm saying I'm a dummy for getting it wrong. So tell me what it is. I'm gonna put it in here right now.
You bet. Traderspost.io.
See, you know, Mal, I did the .com. A
Yeah.
guy like him's so cool. I should have known better. It's not gonna be .com. It's so that's so yesterday.
It's
Did
funny.
anyone
We want the .com, but those guys are running a little e-commerce shop, and we can't really grab it. So
I got you.
Did anyone see Jeffrey Hinton's Nobel Prize banquet speech? I think it was 2024. It's a little spooky. He was warning, and some papers that came out. I think the one, you know, an overview of catastrophic AI risks and the latest signature from you know, the Royals and those guys. So it's interesting to see where this is headed. Are you AI optimistic or are you concerned?
no, generally optimistic. I think, you know, in just like the internet, there were a lot of fears back in the late 90s about what the internet was going to do, and how nobody would feel comfortable using credit cards on the internet. You know, there's always lots of concerns that happen initially with new technology and fears that come from that. But ultimately, as people get more comfortable with the tools and we built guardrails and safety mechanisms in place to ensure that it operates the way we expect, I think we get the most out of it. And so I'm very optimistic to the idea of leveraging these tools for good, not for, you know, ruining the world or That said, I'm also trying to be really nice, just in case the future AI overlords are, you know, looking back at every conversation in the past.
So please on all your queries.
So, Mike, how does someone like you, the Traders Post, how do you ensure like safe, compliant automation? You know, you probably have a little bit of a lift there, but not too much. But is there something you think about relative to that sort of part of the funnel when providing automation?
Yeah, so we kind of have, you know, our system is really built from an event-driven perspective. There is rate limits in place. So if you have like an AI system you've put together and you just start throwing off trade after trade after trade after trade, you're going to run up against our rate limit system right away. And that's going to prevent you from making those types of mistakes. But every single event is also logged on our platform. So we can always go back and take a look at how things are going. But we do a really good job, I think, on our platform, really encouraging users to focus on paper trading first and ensuring that their systems are sending trades the way that they should before they ever put live capital in front of it. There should always be a rigorous testing process in place before you go live. We do it a lot. We try to put a process in place. We certainly can't prevent people from doing what they want to do. So we do sometimes see that users are so eager to get to live environments that they skip the testing phase, and then we run into issues there. But fortunately, because it's event driven and it's an atomic process where, you know, there's not a chance of like something happening twice. The way the mechanisms work in place in terms of sending the order to the broker, there's no chance that we're going to screw up the order. It's really going to be something that you keep sending trade after trade after trade, and we just have to work through it with you.
Yeah. So that's actually an interesting point, and it just made me remember something. But how do you prevent the spinning wheel? Meaning, you know, you get caught in a loop, a technology loop, and it, like you just said, send trade after trade after trade. Is there? I know there's a rate limit at some point, but you get a lot of damage in the interim. Are there checks and balances from your side when something triggers to make sure it's a reasonable price that you're triggering on? Is that not part of the stack?
Not at the moment. I mean, we have some risk management tools certainly in place, and we're expanding that risk management offering as we grow as a company. At the moment, you can do max positions, but you would want to implement those types of additional controls at the broker level. Many platforms let you have additional controls in place, like max drawdown per day or max number of trades, things like that. So we will want to integrate that on our side. Maybe one of those things would really be around spread filters. Like people prefer tooling, assuming all is going well, people prefer tooling to filter out bad trades from a market pricing perspective. So like spread filters are a good tool for us to implement, where we look at how big the bid-ask spread is, and we either filter out trades from that or we allow the entry. But it could also be things like delta or theta filters on options contracts to help you choose the right contracts as well.
Interesting. And is your automation, is it from A to Z, meaning from entry, exit, the whole ball of wax, brackets on the entry, meaning a profit and a stop of sorts, so you can cover it all if need be?
Absolutely. Our system is designed to help you position size and also attach any risk management controls into the bracket order as well. So if you want to take profit, a trailing stop, if you want it to be based on points or percentage basis, you can position size on a percentage basis in certain asset classes. But then, the biggest thing is being able to diversify across asset classes. Like I mentioned in the first example, we have many people who will send a stock entry and they'll enter the number of shares in the stock, but then it simultaneously opens put or call options as well.
Oh, nice. That's great. Yeah.
That's brilliant.
That's great. Yeah. Do you find that a newer trader, I guess what I'm going to get at here in this question is, the old garbage in, garbage out sort of mechanism, right? If the inputs aren't great, forget about AI. They're going to be, bad outputs potentially. How do you prevent that especially for a new person? And it's not because they just don't know better, and they might be putting in something that's just terribly not right. Is that kind of preventable, or is it just part of the game? What do you think?
We're really focused on helping people think about this process through our educational platform. We talk a lot about the backtesting process and what to look for there, and how over-optimization can lead to curve fitting. And if you don't have a lot of understanding about how the backtesting processes can lie to you, then of course you're going to learn those lessons really quickly once you go to live capital, of course. But the second phase of this is really around our analytics package, where we're taking every single trade that comes into our system and helping you track the performance of each one, whether it's in options or crypto or futures or stocks or whatever asset class you're trading. We'll have an aggregated view of your performance, or you can drill it down to the account level as well, or strategy level. And so I think as time goes on, as people start sending more and more trades through and analyze what's coming back, our job is going to be to help them analyze what went well and what didn't, what's working, what's not, and how to tune their approach so that they can dial in something that's profitable.
Okay, cool. Good. All right. I think we're at time, but one more comment. You ready for this, Mal?
Yeah, let's
hear it. Kind of remind you a little bit of Keanu Reeves a little bit.
Wait a minute.
Look at him. He's kind of a Keanu Reeves.
I'll take it.
Right?
John Wick all day.
He's a John Wick. I love it.
I think I need a little bit longer of hair. We're almost there.
Yeah, a little bit longer in the back, maybe a little darker too, and you're a shoo-in.
Just be nice to your dog, everyone, and don't mess with
Yeah, exactly. Don't mess with my dog.
Don't mess with the dog. Hey, Mike, great. Thanks for coming on. That was terrific. We really appreciate it. And even though you got frozen, you recovered fast. I love it. So
I'm glad Comcast came through. I was worried I was going to be out there for the rest of the day.
All right, man. Have a great rest of the day and rest of the week.
Cheers, everybody.
All right, cheers. Thank you.
Fuel your portfolio and earn 2% cash bonus. Log into Tradier Web. Select ACAP and choose whether you want a full or partial transfer. Select the firm you're transferring from. If it's not listed, choose Other Firm Not Listed. Choose your brokerage account type. Enter your account number and social security number. For partial transfers, specify the exact cash, stocks, or options you want to move. Once all details are complete, submit your request. Fuel your accounts and get rewards.
Well, Mal, I love the 2% thing. And by the way, just kudos to the production group today on all the great commercials. They were really well done.
Just so you know, it takes a lot to put one of these things on, and there's a lot of coordination, and there's 50 gazillion messages happening in green rooms, and so applaud to all the production team.
Yeah, it was really good, really well done. All kinds of good stuff coming. A couple quick announcements before we bring on Dan, our CEO, to give us some closing remarks. But I'm just going to plant the seed. Okay,
before you plant the seed, we need to do a shout out to Ty and Crystal for the ads, because those guys are behind that. Yep. And so, round of applause to you two. Well done.
Yes, really, really great. Don't forget to follow us on the Trader Hub. Subscribe as always. Follow us on YouTube, Instagram. All kinds of things are going out lately. So we're going to be doing webinars every month. Crystal and I are putting those together. We're going to have guest speakers at those as well with me. Lots of great stuff going on at Tradier. What else? Oh, one little planty seedy kind of thing. The next summit may just be live. That means in the flesh. You never know. So stay tuned for that. You got to subscribe to get all the info. So get to hub.tradier.com. Give us your email so you get all this great stuff, because more things are always happening.
And maybe, just maybe you win a seat at the live event. I don't know.
Could be. You never know. All right. Let's let Dan come out, close us down. Dan, are you ready? Here we go. Boom.
Hey, Lex, how are you? Lex, this is Dan. Anyway, I guess I have been given the responsibility to close the event and thank everybody. By the way, I wanted to when we were thinking about the topic for this summit, the idea was to help traders with actionable intelligence and actionable alerts, and also give a structure by which people can trade those actionable stuff. And we realized in the process that we have had a great we have built over the last 10 years. Tradier has built a very solid foundation of ecosystem of partners. So we were able to shortlist some of the best and the most innovative or eye-catching partners and bring them to you. I hope you guys had a good time. And I think the partners have helped you formalize the strategy for your trading. Anyway, I just wanted to thank you all. I'm going to be the last person to get out of your way. So anyway, thank you so much. I wanted to thank the event team that put the event together, and also all the marketing and the content teams. There's a lot of effort that is put behind the scenes. And thank you so much. So thank you very much. I wanted to thank everybody. Thank you very much.
All right, Dan. Thank you. That was a great show today. It's a long day, I know, but it was a fruitful day. And just for everyone involved and still on the line, thank you for coming. This was our largest event ever. So today.
Hey, that's great.
Bravo. Very good. And yeah, stay tuned, because we have some great things coming up. Right, Mal?
Absolutely. And just so you know, the man of the hour here runs the show here at Tradier. And so this is the Dan Raju I was telling you about, who called us while we were in our kitchen and said, how are you doing? So he really does care. So if you do have a company that you're starting up, reach out to Tradier. They're an amazing team and the best APIs out there.
Yep, for sure. Absolutely. And one more thank you I forgot to do. We thanked all the staff, everyone at Tradier. We thanked all the hosts and everything that goes into that. I forgot to thank the SIBO, because they are a great sponsor and they help us sponsor this and put this on. And they've just been terrific. Henry was awesome as always, and I'm glad for his time. So thanks to them as well. All right, guys. Well, that's a wrap. It was a long day. Thanks so much. We appreciate all your efforts, and we'll see you next time on the summit. Tradier SIBO might be live. We'll pay attention. You never know. All right, guys.
Okay, thank you, guys. Thank you so much.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.